You're live, break a leg.
All right. Hey, everybody. I'm Jeff Gibby. Thanks for coming today. It's good to see you. You look amazing, I'm sure. We're going to go ahead and kick things off for day 2 of the Online Traders Conference. Let me go ahead and read a legal disclaimer. You can welcome me all here. I'll start with the legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. So there you go. I hope you enjoyed that. Welcome to day 2 of the Online Traders Conference. It's good to see you. We have a great lineup. We're going to start with Daniel Sinnig today. Before we get to him, I do want to thank you for being here. I also want to thank all of our really good sponsors. We're going to start with the AAII, the American Association of Individual Investors. Has been a nonprofit doing nonprofit stuff since the 70s. You can find out more information about the AAII at AAII.com. If you've heard about the investor sentiment surveys and that kind of stuff, they do a lot of really cool research. AAII.com, and we appreciate their sponsorship. Want to say thank you to Stocks and Commodities Magazine for supporting us for forever. They've done 17,000 articles. They've been publishing since 1982. Great magazine. I get it. I read it. I look at it every month. Traders.com for that. If you haven't yet, you should join our online traders community, an affiliate partner of ours. You can join them at the Traders Forum. There you can chat with other traders, learn about indicators, learn about technical analysis, get ideas from other people, all that kind of good stuff. Free to join, thetradersforum.com. And of course, we are Metastock. Metastock's been rated #1 for 32 years in a row this year. It can help you scan the market. It can help you test trading ideas. It can help you forecast probable price markets. Pricing for Metastock starts at $75 a month. If you do a month, we'll give you 2 months extra. So you get a 3-for-1. It's about $25 a month. You can do that and everything else that we kind of talk about today at metastock.com/conf-promo. If you have questions, you can call us 800-882-3040, and I invite you to chat with us if you want. metastock.com/saleschat. Want to thank all of you guys for being here today. If you have questions, let us know as we go. If you're watching us on YouTube, make sure to like and subscribe. It helps a great deal. We appreciate it. And without further ado, I'm going to go ahead and get on our first speaker, which is Daniel Sinnig. Daniel is such a great technician and a good programmer and has so many good ideas. I'm just going to get out of his way and let him talk about them. So let's go ahead and get started, guys. Hey, Daniel.
Right. Hey, guys.
I want to do something like what you've got behind you. I've got a lot of empty space here. That would be cool.
It's our beautiful Samsung Frame TV, which, as perhaps you may know, can be fully customized with beautiful artwork. So we have some, motivational posters behind us, motivating us.
They're cool.
About the power of technical analysis, well-refined trading strategies, and powerful indicators. And one such indicator we're going to talk about today. In fact, it's going to be about a classic that's been out there for many, many years. It's the SuperTrend indicator. And actually, let me go ahead and share my slides real quick before we get into this indicator. And Jeffrey, do I have sharing power already?
You should. Let me see. Where do we go here? I have you as the presenter. I can take this back, and then it'll reprompt you.
Okay, perfect.
Here we go. Make presenter. You should have the power.
Yeah, got it now. Okay, perfect. Thank you. So share my screen, and I hope it's the right. 1 second.
We have the presenter view up. There you go. We're getting there.
That was not the right one. Oh boy. One more time. How do I change my screen? Oh boy.
I can walk you through it real quick.
Yeah, I'm pushing the button here, share screen, but it doesn't prompt me as to which screen to share, strangely.
In the
But
console, if you go to the sharing tab,
oh, there we
there's
go.
options
Okay,
to do that.
yes, yes, yes. Sorry for that.
No worries. I'm here to
Stop
help.
sharing. Yeah, we have. I mean, it is an exciting morning, so
There we
the
go.
markets are moving. All right, there we go. Perfect. Thanks, guys. Thanks
First
for the
try. First
patience. And
try.
as I mentioned, today we're going to talk about a classic. It's about the classic SuperTrend indicator, which has been out there, I don't know how long, 20 years perhaps. So a long, long time. And it's a great trend following indicator. But you know what? It's been out there for 20 years and it's a bit dated. And there's so much more that modern technology can do with this indicator. So what we've done, we've pimped it up and we've created a version of SuperTrend, which we call SuperTrend on steroids, which allows you to do really cool cutting edge stuff such as auto optimization and win rate prediction. And how this works, we're going to discover today in this webinar. But before we get into it, let me propose something to you. So I did a bit of research this morning, and I found a very interesting symbol, which is a symbol in the S&P 500s in the financial sector, which is Ameriprise Financial, ticker symbol AMP. And I found the symbol as very fascinating because to me, it is interesting because it might be a very great long setup to go along this symbol right this moment. And there are a couple of factors which, convinced me that, hey, this is an interesting symbol to look at. First off, it's in a long-term uptrend. So this symbol has been rising over time for quite some time. SuperTrend Bullseye, which is our pimped up version of SuperTrend, is showing us, hey, it's in a long trend right now, in a long trade. You see this upwards arrow here. It entered into this trade back in January this year with a projected win rate of 80%. We're going to talk about this win rate projection or prediction in just a bit. And on top of all this, our trend radar indicator confirms what we call a healthy pullback, which is basically a little bit of a pause in trend, was still long, but price pulled back a bit. If you put all these things together, long-term uptrend, super trend is also long, and we're seeing a pullback right now. If you put all these things together, this can be a great opportunity to get into this long trade at a much better price during this pullback with less risk on the table. And if you were to follow this trade, here would be our entry criteria. So entry around current market levels at 530, target around the all-time highs at 580, and your stop loss around 502, just below the swing low here, which would give you a reward to risk ratio of 1.7. All right, so that I found very interesting. And you know what? It took me about 5 minutes to find this trade. And in this presentation, I'm going to share with you what I did to find this trade, and once again, why I picked it, because there's a bit more to this. So if you're intrigued, please stick around, and we're going to get to this step by step in this presentation. And best of all, at the end of it, you will be able to follow these steps yourself to find interesting symbols like this. Okay, so this is my agenda for today. But first off, let me quickly introduce myself, because you may wonder, hey, who is this guy, proposing this symbol to you? Well, my name is Daniel Sinnig. I am one of the founders of tradingindicators.com, which is an online store where we, provide and offer our flagship indicators. But you know what? My career didn't start off as a trader. In fact, it was quite the opposite. For the longest time of my professional career, I wanted to become a university professor in software engineering. So I went through all these levels, all the levels. I did my master's, my PhD, a postdoc. I started teaching at various universities in and around Montreal, which is where we're headquartered. But you know what? Through all these years, I was always also fascinated by the markets and the world of finance. So I started trading on the side. But as you start trading, and especially if you're a beginner, you tend to make all kinds of mistakes. And so did I. So I overtraded, I revenge traded, I took way too much risk. And after donating quite a bit of money, or quite a lot of money to the markets, I came to the hard realization, oh boy, trading is not as straightforward as I thought, and I need help. And for me, as a software engineer, needing help meant I need better tools, which helped me to make better trading decisions. So I rolled up my sleeves and I started coding. And the very first indicators which I've ever written, they were exclusively meant for my own purpose, to help me make better trading decisions. But once I realized, hey, these actually do have an effect, they actually do work for me, then we decide, hey, perhaps others can benefit from these indicators as well. And this is really how the story behind tradingindicators.com, our online store, started. So this has been more than 10 years now, and over the years, we've built almost 1,000 trading indicators for clients all over the world. We have clients in the US, of course, in Canada, where we're based, in Europe, Australia, and so forth. It's been quite a journey and a fascinating one, and we've become, one of the foremost experts in building trading indicators. And one such indicator, which is one of our flagship indicators, I'm going to present to you today. And as you will see, it works great together with MetaStock. All right, so with this out of the way, also a quick reminder from my side that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so if this out of the way, let's get into the weeds. And as a reminder, my objective of today is to show you how I found this symbol, which is my trade of today. So AMP, a long trade in AMP, is stock in the S&P 500 in the financial sector. But before we get into this, let me back up a little bit. Let's talk about the classic indicator, which I mentioned in the beginning, which is the SuperTrend indicator. A true classic. It exists for many different trading platforms, of course, including MetaStock. And back in the day, it was developed by a French trader called Olivier Seban. He even wrote a book about this indicator. This was more than 20 years ago. And ever since, it has become one of the most influential trend trading indicators. And it specializes in the early detection of trend changes. So when an uptrend changes perhaps to a downtrend, as we can see here on the picture, or vice versa, a downtrend changes to an uptrend. And the indicator shows you this by these entry signals on the chart. So for example, here, what you can see is by this green triangle facing upwards, that's a long entry signal, a buy entry signal. And once you're in a trade, of course, in this case, a long trade, you need to manage your trade, which is just as important. And this is where the trailing stop of SuperTrend comes in. You see this little green line here? That's the stop loss. So you know right away when you enter into your trade, where will you get out at, when you get stopped out? What is, in other words, my risk on the table? That's very important because every successful trader needs to manage risk properly. And one key ingredient for managing risk is when would I get out of this trade at the worst time? If things go really against me, this down here would be my stop loss level. And of course, if things work out, if price moves in the desired direction, well, then I want to lock in my profits. This is where the trailing aspect of the stop loss comes in. So you can see here for this long trade, this line only goes up. It locks in profits. It will never go down. It's a trailing stop. So eventually, of course, now this stop will be hit. We can see it here. The stop is hit. And what happens then? Well, then we reverse from our long position into a short position. Some people call this also a stop and reverse indicator because a long signal will eventually be stopped out and then you reverse your position into a short position. Once again, you can see the trading stop here. And in this case, because it's a short position, the trading stop will only go down until it is eventually stopped out. So this is how this classic indicator works. It's a very successful indicator, and especially in trending markets, it's very powerful. But just like any indicator, also this one comes with parameters. Parameters are very normal in indicators. A moving average, for example, has the period parameter. An RSI also has a period parameter and so forth. So every indicator pretty much has parameters to adjust them to the chart at hand. And so does SuperTrend. And in this case, there are two main parameters to basically adjust how far the trading stop should be away from price. In other words, how much room do we want to give my trade? And these two parameters here can be used to adjust this distance from price. There's the ATR period and the multiplier. And the idea is pretty much the more volatile the market is, this is where the ATR comes in, which stands for average true range, an indication of volatility. So the more volatile the market is, the more room we want to give our trade. That makes sense, right? If things are really shaky and going up and down, you don't want to be stopped out just on a whipsaw move. You want to give this trade more room. And if things are, calm and contained, you don't need to give that trade that much room. You can have a tighter stop loss. So these two parameters can be used for that. But just like with any indicator, how do we know what are the best settings for a symbol and time frame at hand? What are the best settings, let's say, for Tesla on the daily time frame, or for IBM on the 50-minute time frame, or for Bitcoin on the 1-minute time frame? This is not an easy question to answer. And oftentimes this goes back to trial and error. You're just going to play around with some of the settings, see how things change on the chart in an attempt to find the best parameters. To us, this is not really a good way to spend your time as a trader. There should probably be something better out there. So keep this in mind. So that's problem number one. And problem number two is, how do we actually know how well this indicator is working? So let's say I have certain settings. I apply the indicator to a chart, let's say Tesla on the daily time frame. How do I even know how well the signals have been performing? In other words, how much can I trust these signals? Another very important question that you should ask yourself as a trader. And we've asked ourselves here in our lab, at Trading Indicators, the exact same questions. And the good news is we have found solutions for it. We have solved this issue because with our latest version of SuperTrend Bullseye, we have created an indicator which will automatically find the best settings for you. So you don't have to worry about this. The indicator will do it for you. It will look at the symbol, look at price action, and will find the best settings for you. And secondly, the indicator will also tell you how much you can trust these signals with our win rate prediction technology. How this works, we're gonna now see on the chart, because this may sound very theoretical. Let's check out the charts. So I'm gonna open up MetaStock right now. And by the way, guys, I forgot to mention in the beginning, if you have any questions, please don't hold back. Put your questions into the question section of your webinar tool or into the chat section. And Niklas, my colleague, is going to look at these questions and will bring them to my attention as he sees fit. So please don't hold back. Okay, so here we have a MetaStock, and I started off with a chart of Tesla. I just mentioned Tesla previously. So this is Tesla on the daily time frame. You can see it here. And I also went ahead and applied our SuperTrend Bullseye indicator to this chart. So let's go through the basics first. As you can see here, you can see these upward facing arrows and these downward facing arrows in red. So these are long entry signals and short entry signals. And one thing that is quite obvious right at the beginning, and I mentioned this, is that these signals, they are always alternating. So a long signal will eventually be replaced by a short entry signal. Then it goes back to long, short, and so forth. This is a classic stop and reverse indicator where you have this classic alternation. All right, so that's step number one. Part number two is this line here. This is our trailing stop. So for a long trade, this trailing stop, of course, is below price. And for a short trade, it is above price. And it always follows price down. It locks in profit. And the idea is that if you catch a nice trending move, you will ride this trend until it's over. So you try to ride trends as much as possible by using a trailing stop. Okay, so now you may say, all right, that sounds all nice and dandy, but where's this cool stuff you just mentioned? The auto optimization and the win rate prediction. All right, let me show you. So at MetaStock, what you can do is you can open up the expert commentary. So you right click on the chart and you go to Expert Advisor and go to Commentary. It's already here, so I'm just going to drag this up real quick. And below the chart, and sometimes on the left, depending on how you configure your layout, you can see the commentary that comes with the indicator. All right, so what do we have here? First off, I'll tell you, hey, what's the symbol at hand? Yes, it's Tesla. Of course, we discussed this. It tells you what is the current trade direction. Currently, we are on a short trade. You can see here very nicely. SuperTrend bullseye detected this this peak here where this uptrend came to an end, and now it's in a short position. We already locked in quite some profits here, which is great. But once you scroll down a little bit, and this is where the kicker is, look at these two values here, the multiplier and the period. Now, these are the two parameters which I mentioned previously, where you can adjust the trading stop. How far should this trading stop be away from price? And guess what? These settings have been chosen automatically by our indicator. So the indicator is smart enough to analyze price action and will choose these settings for an optimal distance of your trading stop. So you don't have to worry about this. And as you see in a second, whenever I change symbol, or whenever I change time frame, these settings will change because the chart price action is different now. New settings will be deemed optimal. So that's step number one. And the other cool thing is once you go down here, look at this one, performance statistics. Here you can see, okay, how well have these signals worked out statistically? So you may say, oh man, this doesn't look that great. Only 35% for the long direction and only 42% for the short direction. 28 trades were taken, but a profit factor of 2.01. Okay, what can we learn from this? We can learn that for Tesla, for whatever reason, these short signals have worked out better than the long ones by a little bit. We can also learn that, hey, we had more losers than winners. However, you can also see that our profit factor is a very profitable one. It's above 1. Everything above 1 when it comes to the profit factor is deemed profitable. Here we have a profit factor of 2, which is very profitable. How is that possible? The answer to this is, the size of your losers versus the size of the winners. In this case, even with a win rate below 50%, we are very profitable because our losers, they're relatively small compared to whenever we have a winner. And you can see it here on the chart. When we hit a winner, typically we ride price up by quite a bit. If it's a loser, let me just find a losing trade here. For example, this one here, this was a short trade. We enter here, we get out here. This is a very tiny loser. And that's okay. That's the idea of this indicator. You want to catch a very nice winner and ride it up to the maximum. This is why even with this kind of win rate, you can be very profitable. As you will see, as we're going to go through this presentation, there are symbols out there where this win rate is way above 50%, even close to like 60, 70, 80%. And these are the symbols you want to find. And best of all, with MetaStock, you can scan for these symbols. So we're going to get to this in a second. All right, so that was Tesla. And now let me do something. Let me change time frame. So I told you, hey, our, the best settings will change whenever I do a change on the chart. So let me change time frame from the daily time frame perhaps to the, the 5-minute time frame. I'm just picking one randomly here. So the chart is now reloading. This is the 5-minute time frame here. And if I go down here, we can see now a multiplier of 3 is being used and a period of 60. That's different from what we had before. And also our performance statistics now have updated. And on the 5-minute time frame, you can see, hey, my short win rate is now at 63%. So if you're a day trader, this is very valuable information because it tells you, hey, I can trust my short signals more than the long ones. What you can do as a trader is to only focus on your short trades. Look at this, how nicely they have worked out for the most part. Yeah, and perhaps ignore the long trades when they come along. Very valuable intel that you can leverage as a trader. Okay, so this was Tesla, but let's move on. Let's go to a different symbol. What's going on with the S&P 500s? So, of course, we all know we've been in an uptrend in the S&P 500s, yes, but today it looks like we're shaping up for yet another down day. Let's see what NVIDIA will do tonight, but it looks like this is a down bar here. It just looks greenish because SuperTrend bullseye is currently in a long trade. But we can see here, also for the S&P 500s, we have the same short and long entry signals. And if you go down to our performance statistics, we can see something really interesting. And maybe not even very surprising because we know how bullish the S&P 500 has been over the last years. 71% win rates a win rate of 71% for our long trades. Yeah, so these have been very successful. And currently, and this gives me a bit of optimism here, we are in a long trade. Markets are pulling back against this long trade. We're not stopped out. Our stop loss is all the way down here, so we have room, but markets are pulling back a bit. And please keep this in mind, because this is going to become crucial later on, because there's a way to even further optimize SuperTrend Bullseye. Yeah, keep in mind, markets are pulling back, and maybe also keep in mind this little red patch here on this other indicator we're going to talk about later on. Very important. Okay, the QQQs, what's going on there? NASDAQ, very similar picture. Also here, we are in a long trade and markets are pulling back. Another red patch here. Very similar to what we see in the SPY. Of course, oftentimes these are correlated. All right, that's that one. And let me just look at the win rates here. Once again, yeah, a win rate of 66% for the long direction and less so for the short direction. Again, not very surprising because it's a very bullish symbol. Gold. Who is interested in gold? Well, let's look at it here. So of course, in gold also, it shows you the full power of this indicator. It's a trend following indicator. And once you catch a good trend, and you trail it, look what kind of potential this indicator has. You just ride up the trend until it's done, until you get stopped out. Yeah, riding it up until you get stopped out. We got stopped out here for this long entry. Then we were short, which would have been a loser, a small loser. Enter here, exit here. And then now we're in a long trade again, of course, gold being very bullish. And once again, if you look at the win rates here, 75% for the long direction, profit factor of 3.26. And again, seeing these numbers here is invaluable intel. Of course, you may say, hey, this is quite obvious for this symbol because it's so bullish. The long direction naturally would work better than the short one. But sometimes it is not as clear, especially if a symbol is not as straight up as gold as this one. So this is very important intel. Google, one more time. What's going on in Google? So Google recently shifted, you can see it here, from an uptrend to a downtrend. So we had a trend change here a couple of days ago, and now we are short Google, and the market is already starting to follow through on Google. And let me quickly look at these statistics here. What do we see? Well, 28% only for the short direction. So, this could tell you, hey, perhaps even though we had a bit of a follow through, and if you locked in profits, maybe with a very tight stop, this could have been might be a winning trade. It may be short lived. And that's the message here. You want to find entry signals where everything comes together, where you have a convincing win rate, where we currently have a signal in the same direction as the win rate would suggest, and ideally, you also want to have a bit of a pullback entry where you get even a better entry price. Please keep this in mind, because what do I mean by this? Imagine this long entry here. We're going to get to a very concrete example in a bit. It initially is going up, and then it pulls back a little bit. See this one here? We're not stopped out. We're right at this trading stop. This can be a really interesting long entry opportunity with a very great reward to risk ratio, because your stop loss would just be below here, and the profit potential is immense. And how we can find these particular setups, stay tuned for this, because this will lead up to our trade of the day. Okay, two more symbols real quick. Bitcoin. Here we have Bitcoin on the 10-minute time frame. So our indicator, of course, works also on intraday time frame, and it works with all asset classes. So stocks, ETFs, futures, cryptos, FX, no problem. Okay, so this is Bitcoin. All right, and what we see here, let me just quickly go to this one. There we go. So here we can see we are currently short. We can see what the entry price would be. Here are the best settings. Multiplier of 4.5 and an ATR period of 40. Win rate around 50-50. But once again, a really great profit factor. Why? Let's say it again. Our winners are much bigger than our losers. So same for Bitcoin. And here we have the S&P 500s on the 5-minute chart on the day trading time frame. This beautiful short entry signal here early on today at around 8:25, and what a great follow through. So the market and has been pulling back, and SuperTrend Bullseye would have alerted you of this. Once we had this down bar below this trading stop, that was a signal, hey, we're going to reverse this long position into a short one. Yeah, and if you look at the statistics, yeah, of course, in recent history, the S&P 500, on this case, the futures contract, has been quite bearish. And look at this win rate for the bearish side. So if you're a day trader, this will give you so much intel, basically telling you, hey, perhaps I'm going to skip my long signals. I'm going to focus on the short ones only, with a great profit factor here. All right, so hopefully this will give you an intuition of how this indicator works. Let me quickly go back to the slides because there's more to come. All right, so a quick recap. So what have we seen? So we've seen our auto optimization feature of SuperTrend Bullseye, which will find the best parameters automatically for you. We've also seen our win rate prediction feature, which will tell you how much you can trust the signals. In other words, how much have these signals been working out in the past? Two things we haven't seen, and I may touch on these real quick, is there are actually two different modes in which you can run this indicator. One is called on close, one is called on touch. A quick example of how this works. So real quick, back to the indicator here. Let me try to find an example of this. Oh, here, perfect. Look at the short signal here. See this one here? We went short, and at some point, you can clearly see here, this candle, it's a bit hard to see, but this candle is clearly above our trading stop. And you may say, hey, what's going on here? Aren't we stopped out? Shouldn't we be stopped out? In this case, the answer is no, because I have configured this indicator to work in the on close mode, meaning we need to close above the trading stop if it's a short trade to reverse. Simply wicking above it is not sufficient. But if that's not how you want to trade, you can reconfigure the indicator. It's very easy with the settings to configure it with the on touch mode. And by the way, guys, if this seems like complex or complicated, don't worry. We have recorded a 2.5-hour boot camp, a very detailed boot camp on how you can, use the indicator, configure the indicator. We're going to go through every single detail for this. So don't worry about this. All right. So this is these two modes, and we also have 3 trading styles built in. One is called all directions, or long and short trading. Then one is called long only, and the other one called short only. Why is this important? Well, sometimes, you already know in which direction you want to trade a certain symbol. See, perhaps you have NVIDIA. NVIDIA, of course, a very, very bullish stock. You never want to go short NVIDIA. It's too bullish for you. So what you can do is you can configure SuperTrend Bullseye to optimize itself only for the long signals and not for the short ones, because you would never go short. Because in general, the indicator will optimize so that both long and short signals are optimal. But if you're never going to go short, that perhaps is not the best idea. So you can reconfigure the indicator to only optimize for the long signals. So this is what this feature is all about. All right, but moving on. 2 more very important things to come. Number 1 is, how can I find symbols which currently have entry signals, which currently have a buy signal or a sell signal? And the answer is quite easy, especially if you have MetaStock. The answer is scanning. MetaStock perhaps has the most powerful scanner out there. I love MetaStock for this because it also allows you for a completely new form of scanning, which we call Generation 3 scanning. So what is this? What is this Generation 3 scanning? Well, here it goes. So in Generation 1, all we do is we scan for what I call plain old signals. So you basically scan perhaps through the S&P 500s to see which symbols in there currently either have a buy signal or a sell signal. We have no idea of how profitable these signals potentially are if they come along. And this I call, plain old signals because they're all the same. All the buy signals are kind of treated the same. That you have no way of ranking them pretty much. This was solved in Generation 2 scanning. Here, we add to the scan results the estimated profitability, the estimated win rate to these signals, allowing you to rank them, to sort them, starting from the highest win rate to the lowest one. Why is this important? Because then you can focus on the ones which have the highest win rate. So that's pretty cool. But there's one more thing we can do, and this comes in with generation 3 scanning. With generation 3, we not only see the estimated win rate, but we also use optimized parameters on a per symbol basis. So the scanner will do an instant optimization for each symbol, meaning, let's say for Tesla, it will use a different set of settings, the optimal ones for Tesla. Then for IBM, it will use different settings. Then for Apple, it will use different settings, which are optimal for Apple. And this comes in with generation 3 scanning, which is possible with Metastock. If this sounds complicated, don't worry at all. All this happens behind the scenes. So you as a trader, you don't even see what's going on there. All you need to do is to simply, I'm gonna go back to Metastock here, open up in Metastock your power panel, just open a different screen, there we go. You go down here to explorations, you can see this one here. You then pick the exploration that you want to run. For example, SuperTrend Bullseye, STB, stands for SuperTrend Bullseye, buy and sell signals. You click this one, you pick your time frame, in this case, let's say the daily time frame, and you pick the set of symbols that you want to scan through. So in this case, I have selected the S&P 500s, but you could select any symbol list you want. Metastock has so many symbols available, in total more than 300,000. It's insane. This is why I love Metastock so much, because its scanning capability is out of this world. So something, if you haven't tried it out yet, I highly recommend it. All right, so once you have configured your scanner, you can click Start, this button here, and then the scan will run. And for the S&P 500s, in the generation 3 mode, it will take perhaps 3 minutes to finish the scan. So I'm not gonna wait around now. I ran the scan prior to this, so let's look at the results real quick. So I'm gonna click on the Reports tab here. I'm gonna drag it in real quick. There we go. And we can see here, for example, that for this scan, SuperTrend Bullseye, on the S&P 500s, on the daily time frame, we have a whole bunch of symbols which currently have buy signals. You can see it here, like Constellation Energy, this one here, this one here. Whenever we have a value different from 0, that's a buy signal. Whenever we have a value here in the sell column different from 0, that's a sell signal. So that's showing you your signals. But the real kicker comes in with these columns here. Look at this one here, the profit factor. You can see it here. You can sort by profit factor, allowing you to rank your signals. And you can see here, for example, if I go from highest to lowest, Nike, which currently has a long entry signal to the long side, the profit factor of 11.72, which is crazy high. With a long win rate of 60% and a short win rate of also 60%. And if you open up the symbol now, just by clicking on this this chart button here, let me just minimize this real quick. So this is Nike now opening up. We can see, once this is loaded, that Nike, with any luck, yes, will have a long entry signal. We're able to find a symbol which currently has a signal. And on top of this, we found the best symbol as far as our win rate prediction is concerned, which historically speaking has worked out the best when a long entry signal has come along. Once again, a very powerful way for you guys to save time, save your energy, and find the symbols which look most promising. And this is exactly what we've done right now. And if you go down here and look at the profit factor, 11.73, exactly what we had seen in our exploration results here. 11.73, 60% win rate for long and short, and a long entry signal for Nike. So I hope this shows you how easy it is to find interesting symbols which currently have signals with Metastock. But one more thing, and please, if you have questions, put them in the box of your webinar tool. We're going to get to them in just a second. There's one more thing that we can do, and then everything will come together. And I'm going to show you how I found my trade of the day. So we can further optimize SuperTrend Bullseye. But now you may say, hey, Daniel, how can you optimize an auto-optimizing indicator? Isn't that a contradiction of some sort? The answer is no. There's actually some stuff that we can do to further optimize the indicator. All right, so what can we do? First off, we can determine how exhaustive or how fast the optimizer should operate. Meaning, in other words, how many different combinations of parameters should be tried out to find the best ones. They could be as detailed or as fast as you want. So you can customize this. You also can customize, and I touched on this earlier, you can adjust your trading style. So if you already know, hey, I only want to trade long, let's say, you can tell the optimizer, hey, optimize only for long signals and ignore the short ones. That's another thing that you can do. And the third thing is you can combine SuperTrend Bullseye with another indicators of ours, which we call the Trend Radar indicator. And how this indicator looks like, you may have already seen it on my prior charts, is as follows. Look at this heat map below the chart, which has these greenish areas and these reddish areas. It shows you at a glance what are my short-term trends, medium-term trends, and long-term trends doing. And one real cool thing, what you can do with this indicator, and you can scan for this, is you can find pullbacks within this trending market. And that's a trend trader. These pullbacks are your best friends. You don't want to get into a trend trade when things are overextended. That's typically a bad idea because a reversion to the mean is about to happen. It's quite likely. Where you want to pay attention is when the opposite happens, when we see a pullback, like this one here or this one here. And this indicator down here allows you to find these pullbacks. Do you see this little red patch here in this overly green area? That's a pullback. And depending on how far you go down, in this case, 1, 2, 3, 4 levels down, this would be a level 4 pullback. This year would be a level 3 pullback. This would be a level 1 pullback, and so forth. And best of all, you can scan for these pullbacks. And this is now where everything comes together. We are going to combine this pullback scan with our SuperTrend Bullseye indicator. Because what we want to do is you want to find a long entry, let's say for the long direction in this case, we're going to find a symbol where SuperTrend Bullseye is long, but currently we see a pullback of that signal, allowing us to get into this trend trade at a better price. So this is one of the most powerful signals that we found internally here for us. I'm going to share this with you now. How can we do this? Well, in Metastock, you can simply scan for it. So let me quickly go back to the scanner in Metastock. As you will see, I'm going to run the scan live. I'm going to actually close this window here. I'm going to go back to my power panel. All right, go down to the exploration tab here. And in this case, I'm going to combine two different scans. First off, I'm going to run a scan for level 4 bullish pullbacks, long pullbacks. You can see here the L for PB, a long level 4 pullback in Trend Radar. So I'm going to click this one. And I'm also going to click this expiration here. SuperTrend Bullseye trades expiration, which basically will show you in the scan results whether SuperTrend Bullseye is currently long or currently short. And now the kicker. I will combine the scan results of these two scans in a way that, hey, first off, we're going to run our pullback scan, and then for every symbol which is currently in a pullback state, we are going to run our SuperTrend scan on top of this. So Metastock, you can combine scans like this. You can simply now click on Start Exploration. If it's not already open, 1 second. So you can click this button here. Let me just quickly see. I think it's, there we go. I have to close this window first. All right. So now that's done, and I hope I can, there we go. Now I can click Start Exploration, and we're gonna look at this together right now because this will only take a couple of seconds. So now our pullback scan is running first through the S&P 500s, and afterwards it's going to be our SuperTrend Bullseye scan. And why is this running? Niklas, are there any questions, or does anybody have questions so far?
No, Daniel, I think you're good to continue. We've answered all the ones that have come in.
Oh, perfect. All right. So what you can see here, and my computer is quite overloaded with sharing this webinar. The scan is running. We're almost, I think 1/5 through this scan through the S&P 500s, and it's going to run. And once done, we're going to look at some of the results that we're getting. And spoiler alert, my trade of today will be, if any luck, among these scan results. Okay, so let's see how this works. So just have a bit of patience. And while this is running, let me quickly look at the chart together with you. Let me just drag this away just to explain to you how powerful SuperTrend Bullseye can be. Let me just go back perhaps to gold. All right. Gold signaling here, just taking a little bit of time to get in. Look at this long trade here. Price is going, of course, a nice follow through, but every once in a while, price is pulling back a little bit, taking a break. And look how this coincides with our trend radar reading. In this case, it's 1, 2, 3 levels down. That's the level 3 pullback. Here, that's a level 4 pullback. And why is this so important? The level 4 pullback. Look at this. Because you can get in to this trade at a much better price and with a really, really tight stop loss. This can be the kicker to turn on your profitability, because your reward to risk ratio is going to go through the roof because your stop loss is going to be so nearby. If this works out, if you don't get stopped out, you could be in for a really nice long trade with a great reward to risk ratio. And this is one of our preferred trading methods. Yeah, we oftentimes wait a little bit. Even though SuperTrend Bullseye is long, we wait for some kind of pullback and then we enter, because the stop loss will be much tighter. All right, so back to my scan results. We're almost at the end. So SuperTrend Bullseye pullback scan has run, and now the SuperTrend scan is running, and we are finished. Perfect. All right, so this took 2 minutes and 33 seconds. First off, once I click on my trend radar row here, we can see that, hey, 66 symbols are currently in a level 4 bullish pullback, like Accenture, Google, Amazon, and so forth. All right. And okay, of these 66 symbols, if I go here, we can see that currently these ones here, like where the long column has a non-zero value, these ones here are currently also in the long trade as per SuperTrend Bullseye. What I'm going to do now is I'm going to sort once again here by our win rate. And what we can see here is that, just 1 second, we can see that the first symbol that also has a long trade right now, because we're looking for long setups, is this one here, Equinix Inc. All right, check it out. I'm going to open up the chart real quick. All right, and I know we have 10 more minutes. I'm almost at the end. Okay, so what do we see now? So this is going to open up. We can see first off, I'll make this a bit bigger. Yes, SuperTrend Bullseye is in a long trade for actually quite some time. Trend radar has a level 4 pullback, 1, 2, 3, 4 levels down. And prices, as you can see it here, is quite near this trading stop. This could be an interesting long opportunity. The only thing I don't like too much about this symbol is it's quite sideways. So this, this trend overall, it didn't move as much as, as it could. There are probably other symbols which are trending stronger, which have this kind of pullback. So I'm going to skip this one because it's a bit too sideways for me. Also, if history were to repeat itself, this long trend here has been going on for quite some time. Maybe it's time for it to be stopped out. All right, so I'm going to skip this one. But let's go to our next symbol on the list, which is this one here, Ameriprise Financial. You may remember this from my trade of the day. Let me open up this one, the next one on the list, which has a long signal and a great win rate, 80% in the long direction, which is great. All right, so this is opening up. So what do we see here? First off, this is a very nicely trending stock. Price is much more convincingly trending to the upside because we want to go long. Yeah, that's great. We recently entered into this long trade, and we are seeing right now a very nice pullback towards this trading stop. This could be a great long opportunity with a really tight stop loss. Of course, tight stop loss comes with risk. You may get stopped out, but if you don't, yeah, you might be in for a really nice treat if this trade, long trade, really takes off. If the markets recover, we'll see what happens with Nvidia tonight, and things will go or revert to the bullish direction. And this is the reason why I picked this particular symbol for my trade of today. You can see it here. As a summary, we are in a long-term uptrend. It's a nicely trending stock. SuperTrend Bullseye is long. is currently long. The win rate is really convincing at 80%. 80% of all long trades have been profitable. And our trend radar indicator shows a level 4 pullback. All these things are coming together, which are factors that convinced me that this can be an interesting symbol to go long. So this is how I find my trade of the day. Now, it may have seemed complicated because I talk a lot, but these steps are actually quite mechanical and actually took just a few minutes this morning to find this trade of the day using the MetaStock platform.
Daniel, do you have time for a question now?
Go for it, yeah.
Okay, so we have one question here came in. How does the optimization actually work for SuperTrend Bullseye? And how many bars, or like, what's the look back for the optimization?
Oh, that's a great question. So the optimizer looks at what's happening historically speaking. How did the historical price action look like? And by default, it looks at the last 1,000 bars. But this is just a number. That's the default number. You can change that number. Now you can tell the indicator, hey, let's go back 2,000 bars or 5,000 bars. You can completely customize it. I'm a fan of not going too far back because market conditions change too much over time. So 1,000 is our sweet spot that we use internally. But if you want to use a different setting, you can using the settings of the indicator. And once again, we do have a 2-hour boot camp that will show you step by step how this can be done.
Perfect. Okay. And are you going to take any symbol requests to look at charts?
In just a bit. Yeah, let me just quickly tell users how they can get this indicator, and then we're going to look at some symbols at the end. Let's hold on for these just for a little bit. So if you're wondering, or if you're asking yourself the question, are these indicators, SuperTrend Bullseye and Trend Radar for me? Well, let me tell you, it doesn't matter whether you are a day trader, a scalper, a swing trader, or a long-term investor, you will be able to use these indicators because they work on all time frames and all chart types. It also doesn't matter what you trade, whether you trade stocks or FX or futures or cryptos, no problem. These indicators work with any asset class and work with any symbol, period. Also, I already showed you how great these indicators work with MetaStock, especially with the MetaStock scanner. That's great, but if you're on a different platform, such as NinjaTrader or TradingView, you can also take advantage of our indicators. We support all major platforms. You can see the platforms listed here. And if you are a little bit like me, if you're an engineer by heart, and if you believe that good tools can make your life easier and good trading tools can make your trading life easier, then these indicators are definitely for you because they will do most of the heavy lifting for you. They will auto-optimize. They will show you the predicted win rates, and you can scan for setups using the scanner of MetaStock, for example. So all these are huge time savers when it comes to finding interesting setups. All right, now to conclude, we have put together a great offer for you as a big thank you for being here at this presentation. So we call this a SuperTrend Bullseye Super Special. Yeah. So what does this bundle include? So first off, normally we are selling SuperTrend Bullseye alone for $7.97. So that's the normal price for it, but it's going to get better today. Now, what does this include? It includes, of course, our SuperTrend Bullseye indicator with the auto optimization feature and our performance prediction, how well these sequences have been working out. So that's, of course, included. But we're gonna, and of course, for life, you never have to pay a single dime again for this indicator. You keep it for life. But we're gonna add a couple of bonus offers. First off, you will be invited to our exclusive member sessions, which happen every Tuesday at 12 p.m. In fact, our next session is in just 1 hour from now. You'll be invited to these sessions every single week. These are also recorded. You can see the recordings afterwards. Typically, this costs $9.97 a year. We're gonna invite you for life if you sign up for this package. You don't have to pay any of these subscription fees. Secondly, we're gonna add our Trend Radar indicator to this mix. A value of $3.97, we are going to include it. You'll also get an ebook on how to use this indicator effectively. And best of all, to celebrate today's conference, we decided to slash down the price even further from $7.97 to only $5.97. And once again, this is for life. So if you're interested, and Niklas, please put this link into the chat box. It's tradingindicators.com/597. So tradingindicators.com is our homepage, and then 597 is the special offer that we have. And this link is also in the chat. So please think about it. I think it's a great deal. And once again, this is for life. All right. So we do have 5 minutes. So Nicholas, are there any symbol requests? I believe there are, but what is being requested?
There's a number of them. So
okay.
The first one was Amazon, and that's on the daily charts.
Okay. Go back to my MetaStock, Amazon. I think it's Amazon.o. Let me just quickly see. Always sometimes a little bit cryptic to find out. And this is much faster. Normally I'm just, there we go. Okay. I'm just doing too much stuff on my computer here. So Amazon is loading, and I need to apply real quick the template. 1 second. You'll get this template, by the way, as well. So apply template. Give me a second, guys. All right. So SuperTrend Bullseye and Trend Radar combined. Template is loading, and let's see what's going on with Amazon. All right. Okay, there we go. It's loading. Okay, what do we see here? Okay. All right. Okay, so Amazon is currently short. This would have been a nice trade. So I can see the sequence have been working out quite nicely here. Long, nice winner, nice short. Yeah, very cool. Let's look at the win rates together. 100% win rate for the long trades. Wow, that's pretty cool. We only had 6 trades in our look back period, but in a great profit factor. We're currently short. Short win rate is 66%, which is also not too shabby. And we are currently short. You know, in this case, I personally have a big problem going short stocks in general. It's not my preferred direction because I believe stocks go up over time more than they go down. But in this case, yeah, I mean, this looked like at least a nice start for the short trade. Of course, it would go a little bit against Trend Radar, which is still bullish long term. But yeah, definitely an interesting symbol. And we can see SuperTrend both sides working out quite nicely for this one. Yeah.
Perfect, Daniel. And then one question on the topic of Trend Radar. Are levels 1 to 4 the number of buyers and sellers? Maybe you can explain what those rows are again, real quick.
Yeah, real quick. These basically show you what is my short-term trend doing, which is the highest row up here. What my medium-term trend, which are the rows in the middle, and my long-term trend. If the color is reddish, it means, you know, we're bearish short-term in this case and bullish long-term, the last row. So you can tell real quick what are these different trends doing. And, you know, Perfect. It's really powerful to find these pullbacks. Look at this long trade here. We're gonna get this little patch within this green area. Hey, that's a pullback. And if this coincides with SuperTrend Bullseye being long, this can be really powerful entry signals.
Thanks, Daniel. And the next symbol is Costco on the daily chart. And then if you have time, Cisco afterwards.
Yeah, I only have 1 minute left. So let's quickly do Costco. My system is so slow. I don't know why that is. If this is too slow, we may have to skip that. We'll only quickly go to the, come on, MetaStock. But this is my system, so don't. There we go. I think it's Costco.o as well. Is it? Jeffrey once told me that
it is, yeah.
Everything with every symbol with 4 letters needs an O at the end.
Unless it's a .k, but most of the time it's a no.
Yeah, if this comes up. While this is loading, I think it's just my system is just frozen up a little bit. This normally is really fast. Let me just quickly go to my slides one more time. Guys, if you want to take advantage of this offer, it's tradingindicators.com/597. And just to repeat, it includes our SuperTrend Bullseye indicator for live and our Trend Radar indicator for live. And of course, you get all the features that we've mentioned. And you will be invited to our members only sessions every single week. So you can ask questions, you can, learn tips and tricks. We analyze the live market all the time and so forth. And by the way, you will also be invited to our Discord channel where we have live trade alerts, trading talk, and so forth. So that's also included in this package in addition to our Trend Radar indicator, just so that is out there. All right, let me just quickly see if we have found the symbol. I'm not sure why it's not coming up. I suggest we skip it in the interest of time. It's 11 o'clock. I don't want to take away from the other speakers. Guys, if you have any further questions, you can always also reach out to us via our homepage, tradingindicators.com. Go to the main menu, click on the contact item there, put your question there. It will go straight to my inbox, and I'll make sure to get back to all your questions as soon as possible. All right, guys, that's it from my side. Jeffrey, sorry, I went a little bit over. I hope it was okay, and please take it away.
It was okay, yeah, and it was cost.0. I'm not sure why it's not on your list.
It
So
might be my internet here. Who knows? Yeah, but I checked it out on Metastock before. It definitely is there.
Yeah. In any case, let me go ahead and change the presenter. Thank you, Daniel. We did have a question that I'm going to answer. And is there any sort of a, John wanted to know if there's any sort of a special for people that didn't have Metastock. And if you want to do this offer, we'll include a trial to Metastock, 30-day. So yeah, you can try out the scanning, the expert advisor, the commentary, all that good stuff. And we'll just throw in a free trial because we know you're going to like it. We know you're going to keep it. We do offer it on the money back guarantee. So there's no risk. And then we'll let you try our award-winning software package as part of it. So metastock.com/conf promo. And also, I know there was a lot of symbols also in YouTube and GoToWebinar that we weren't able to pull. If you want us to pull some charts for you, go to metastock.com/saleschat. We'd be happy to send you any chart you want. Or you give us a call, 800-882-3040. Thank you so much, Daniel.
Yeah, you're welcome. Right. Guys, have a great conference. Bye, Jeffrey. Always nice to be here.
Great job.
Yeah.
All right. Let's see. Let me go ahead and do this. And we'll do this. Okay. Very cool. All right. Again, my picture's in the way of the offer. For $597. You get a trial to Metastock if you need it. You can use Metastock real time or the Metastock delayed, whichever one works better for you, whichever one you like best. That's going to include the trend radar, the weekly lunch and learn sessions, a 30-day money back guarantee, so you can try it. If you like it, you can keep it. It's been very, very popular, very well liked. And you can do that at metastock.com/conf promo. You could call us 800-882-3040. Or you can also go to metastock.com/saleschat. So thank you again, Daniel, for coming in and doing that. I want to say thank you to one of our event sponsors, AAII, the American Association of Individual Investors. Great nonprofit. They've been doing stock research, analysis. They have their own dedicated trading systems team, and you can find out more about them. They've been doing their nonprofit since the 1970s. Very well-respected organization, AAII.com. Yeah. Thanks for the sponsorship, AAII. We appreciate it. Of course, we are Metastock. We talked about Metastock. If you want to get an extended try, you want to try it out for 3 months, metastock.com/conf promo. Our next guest today, Fausto Pugliese. He's going to talk about level 2 and level 3. If you're kind of curious about those topics, he is probably the most renowned expert in the field. He's the only one I'm aware of, at least, and he always does such a great job. It's always good to have him. Some things that you might not know about Fausto, because I like to keep Fausto's intros a little bit unconventional, if you would. But Fausto does have a bunch of chickens, and he has a really good marinara sauce that I don't think he's going to be teaching today. Fausto, how you doing?
I'm doing good. I'm just trying to share. If you could just give me.
Yeah, I'm going to kick it over to you.
Oh, there we go. All right. So I get my webcam up and running and stuff like that. Hold on.
There you go. I can see that. I do see the webcam.
There we are. All right. There you go. Jeff, how you doing? How's it going?
Good. I'm doing great.
You're looking good. Looking good. Looks like you got another show going on.
Yeah. Well, everything's going well. Yeah, it's good to see you.
Same here. Same here. Looking forward to it.
Right. I'm gonna get out of the way.
Yeah, actually, you know what? You brought the funny story. You're right. So I got a home living channel. I just posted another video on it. Before I even thought it was kind of like weird. Like, well, you got a home living channel, you trade, and they got chickens and stuff. Now all of a sudden, like a celebrity. Everybody wants to raise chickens because of this whole chicken thing that's going on with the eggs. Can't get eggs. So I'll give you guys a link. If you guys want to learn how to raise backyard chickens. So I'm actually my website's up like 500% in the past 2 weeks because of it, believe it or not. But we're not here to talk about chickens and how to raise eggs, even though it is a very valuable commodity. We're here to talk a little bit about how to trade today's volatile market. So Let me just see. Can everybody hear me loud and clear? Just give me a chat back. Just want to kind of separate these things so you can see what you got going on. I got the questions here. There we go. All right, everybody can hear loud and clear? All right, perfect. All right, so thanks again for having me here. You know, I'm looking for, always know Metastock for many, many years, probably it's got to be at least 25 years now. And I'm going to talk a little bit about more how to use level 3 and level 4. Maybe some of you saw me earlier, see me done for events before. I've posted on YouTube, Instagram, YouTube, Telegram. I'll give you guys the links to all that stuff if you guys want to come and join them if you want to watch more about them. So it's going to go pretty fast. You're going to basically be somewhat of a little bit of an expert understanding the value of it. So I'm not looking to change anyone's style. You could use everything I'm talking about, what everyone taught you. Otherwise, what I'm going to focus on is not what's on the left of the chart. I'm going to teach you what we call that's on the right of the chart. The right of the chart is the future. So let me tell you, the last couple of days have been absolutely insane in trading. And I'm going to show you some stocks that made some really, really big moves. You probably heard a lot of them that moved, and you probably want to know why they went up so much. And then you have seen lately, the market's been taking a very, very big hit. Now, I'll talk a little bit about, you could apply this towards not only a day trading, but swing trading, investing, options trading, all that good stuff on the Metastock platform. Now, I want to go through the live markets right now. I want to show you what's going on. So did anyone trade today, by the way? I mean, I know that we started, you had the morning hours to trade, but let me bring up an execution system up here. I don't know if everybody can see this okay. Hopefully everybody can see this fine. Yeah, you should be able to see that now. All right, can everybody see it okay? Just give me a chat. And the questions. I don't really concede any questions here, but everybody can see it okay? All right, good. All right, Jack. Thanks, Jeff. All right, so there were a lot of stocks that were moving this morning, and what I'm going to do at the end of this presentation, I just want to bring down what's called our trading floor. So this is our trading floor, and if you look right here, this right here on the left-hand side, these are all our instructors, and these are all our people like you, just that are part of the trading room. There's about, the market's kind of like, usually the morning's pretty busy, but right now it's about up here on top. Let me get you could see there in the top left-hand corner. Let me get my crayons so you could follow my spotlight. There you go. It's about 195. We get between 200 and 300. We have over a few thousand traders all over the world that are in there. And I started this trading room about 35 years ago. I started the first one out there. And, you know, basically, I love doing it. And by the way, I'm going to invite every one of you to come and join and see. Now, we practice what we preach, everything. We do live order commentary and everything. But the reason why I'm bringing it here, I want to show you some of the stocks that we traded. And here's a watch list that we had right here. We actually post this, if I don't know if anyone here is on Telegram or X. This is linked to all our accounts, so you can get it for free. It doesn't cost you anything. You could also get some of the views here. These are some of the stocks that we traded. This is one of right here was, obviously you could see this stock was Tesla. The stock was going down. We'll look at that and we'll see why it's going down. But this is kind of a screenshot of level 4. And you could see here Tesla went from 328 all the way down to a price right around 300. That's a huge drop. And you could see around 1045, which is about 15 minutes away, that already passed, it started going up a little bit. And it went from like 300 to 360. So, you know, the whole idea is I'm showing you is a lot of big moves of certain stocks. Here's another one that they were looking at. And you can get all these for free. They're all in our alerts. You can see how the stock came down, and big buyer right here. What we're looking at? We're looking at Palantir. I did a lot of videos, a huge fan of Palantir, but until, you know, the CEO decided to sell about $2 billion worth of stock. And then you had President Trump said he's doing major cuts with the military. The stock went from like 124, and which, by the way, I was on vacation when this crap hit. And you can be a big fan, and all of a sudden things can go totally south on you. But thank God I got out. I think like at 105. I gave a huge profit away. But when you look at where it is today, you know what? 120 would be nice. 105 really sucks. Not 85 is like, thank God I got out of it. But you could see right now, big buyers out here, about 444,000 shares. So we'll talk a little bit about that. And you could see here, these all right here in the middle, these all the instructors just talking about stocks that are moving. So by the way, you're all going to be invited to this. Anyway, there were a lot of stocks that did make some moves this morning, and I want to bring them up, and then we'll show you exactly how they moved and why they moved. Right here, you can see at a stock like ONVO, big mover, a little on a cheaper side. This one was pretty good this morning. $3 stock, WAFU, ran from like 330 all the way to a whopping $7. This is day trading at its best. Then you could see, why did the stock go down? Well, we're going to talk about that in the next few moments. Why is it now back to 4? Remember, what makes stocks go up and go down is not supply and demand. Is not support and resistance levels. It's buyers and sellers. So you think you have a resistance, but to make that resistance, those sellers are out there. We're going to talk about that. Another nice little mover was this one too. Another cheapie, went from like $1 to, these are all like small caps. But then there was stocks like JTAI had a good move this morning. You could see how that stock literally ran from like $6 all the way to $9. And I just want to go back over here, back on our list right here. And let me expand this a little bit further for you. And you could see right here, as I go up, we have these watch lists. We post them up here. And you could see here at 9:30 this morning, here's my watch list right here. These are all the stocks are here. All the ones that we kind of pointed out, like Donut, SBIT, IBIT. We're going to talk a lot about that. Actually, I just posted a video on that too. Let me show you. Anyone here follow me on Instagram? I just posted a video on this right here. We're going to talk about this too. You guys are lucky because you're in for a treat. I just posted this video right here on IBIT about 10 minutes ago. And basically, I'll just play it really quick so you guys could just watch it. So basically, I'm showing a big iceberg order where support levels right here, and you can see there was a big spike of losers. Now, are you ready? What's coming up next? So, we have, that's a, if you're not subscribed to that, we'll talk a little bit about that. But let me get back to the PowerPoint, and these are things we're going to cover. So I only have about 30, 40 minutes left. So let me show you what we're looking at and show you what we're trading. So anyway, President Trump is obviously making some major budget cuts. His goal is to cut and save about $1 trillion, okay? Because his thing is, you know what? You make 100,000, you spend 200,000, eventually you got to keep paying those credit, you got to pay that bill back and credit fees. So there's been a lot of budget cuts. One of the reasons why I'm not a big fan, why I'm more of a short right now than more of a long. You could see what Doge is doing is, you got all this questions they're asking, hey, who's working, who's not working? Some people like it, some people don't. Maybe you're one of them, maybe you're not. But as a trader, we look at this as, what's causing the market going down, like I just showed you how Palantir went down. So a lot of big things. New virus also came out in China too. Another thing that people are concerned about. These are things that really affect the market a lot. Now, let's talk about some of the stocks if you did trade these, because these had some pretty big moves this morning. Right here to the left-hand side, these are all our traders. And by the way, you'll get to meet Chuck and Bell and all these traders. And here's a stock that had a big move, ATCH. This was just a day ago, ran from this morning in pre-market, $3, went to 13. 9:30 this morning, it was right around $4, ran to $13 less than an hour. These are all the traders that were in the room, what they were doing. There was another really nice big runner, MLGO. I don't know if anyone here saw it or traded, but there's another big mover, $3 to $10, up almost 900% over the course of the day. Now, there are a lot. These are just like, I like to trade a little bit more of the small caps because less risk, more reward. We do trade brand names, and I will show it to you. Everything that we talk about does apply to it. You just need more money and, they're a little bit more volatile and everything else. But before I get there, let me just kind of introduce myself to let you know what I teach and why I'm here. Now, I've been doing this for over 35 years. I'm one of the original day traders that started this industry. I've surrounded myself with some of the best traders in the industry. And the thing is, I've learned how to become a very good trader because I live here in New York. I still live here, financial capital of the world. And I like to live here for one reason, not the policies, but more of I've surrounded myself with some of the best traders in the industry. I was just away last week in Aruba. You could probably see I'm a little tan. And it was a senior trip. And there was about 100 families there from my school. that my kid goes to school due to the holidays. And a lot of the people that live here are all in finance, bond traders, futures traders, floor traders, so I'm kind of like connected really close with Wall Street. Now, most of you are on Main Street. That's why a lot of people like to be part of CyberTrend University, because, it goes from them to me to you. And you just gotta know how to play the game. Now, if anyone here just been sitting around here and just listening in, I just want to do this and just give you guys a gift in the meantime. I want to give my book just as a courtesy. You can go to Amazon, you could pay me $47, but as of right now, I'm going to give it to you for free. Here's my email address. If anybody here would like a copy of my book, I'm not going to charge you, no, nothing. Just go to ctutrading.com. Just before you forget, just take my email address right now. Just send me a email, and I'm going to give you a copy of my book. It's good. It's a fast read. It'll teach you everything we're talking about right now. Probably, it's a really good, nice, fast read. Add color, show you some diagrams of everything else. So I'm just going to do a quick, 30-minute demonstration of it, what you're going to get. But if you really want to learn more, send me an email as we're listening in. All right. All right. So while you guys do that, let me just move on. Let me show you what we got going on here. Once again, been featured at some of the biggest, financial institutions in the industry. I do a lot of presentations for NASDAQ, which I'm going to talk about too, which I'm going to teach you on the NASDAQ book. Here's my wonderful family. Obviously you can see I don't make any girls other than married to one. But one of my other passions, which, Jeff just mentioned earlier, I have a home living channel. One of the things I do on my part-time, which is great. So if anybody wants to learn about how to raise chickens, there you go. All right. So anyway, this is not about me. This is really about you. Okay. What's nice about trading is that you do have the freedom to do what you want. That's why I'm here today. I trade this morning. You make money, you lose money, whatever it is. But you know what? It's not a full-time job. You don't have to be here all day doing it. So let me show you how we find these stocks and how we get into it. So finding them is really not that hard on the Metastock platform. Every platform, every brokerage firm has it. We just kind of work off the big percentage gainers and losers. A lot of those stocks that we found that are moving this morning are there. Now, the issue a lot of you here are probably having is that you're looking at the big percentage gainers and list, and you're like, there's a lot of stocks out there, Fausto. How do I know which one that's going to give me the least amount of risk with the high amount of reward? So you got, and there, like I just showed you, some of them up at 300, 500% a day. How do I not get caught on something that's a 500 and drops down to 300? Well, there's these things that are called tradable and non-tradable, which we cover in class, which you'll see in that, in our trading room. We're going to do that for you. But there's so much out there to trade. So there's never a dull moment in the market, especially with this new president we have, because you can't even keep up with him. Every day is like a new adventure in the market. Every day is a new adventure, Mark. By the way, I'm just getting a bunch of alerts. Just a couple little quick shout outs. Joe, I got yours. Vivian, I got yours. Neil, about the book. I'm gonna get them sent out to you as soon as I'm done. All right. But getting back to finding stocks, not that hard. We're gonna cover that in the trading room. You'll find them. That's pretty easy. But mainly we're just working on the big percentage gainers and losers. That's pretty much about it. So getting into finding them, I broadcast live every morning. I don't know if you guys follow me on YouTube also, but every morning we're live at 9 a.m. and we'll go through that watch list and we'll show you which one, and you'll hear me say, oh, this one is not tradable. This one doesn't have enough volume. This one, not enough orders and everything. So if you're not subscribed to our channel, like I said, feel free to go to YouTube and do that. I'll give you the links at the end too also. So what are the best way to trade these stocks, right? So listen, finding them is one thing. Knowing which one is going to continue to trend up, it's all about following the money. That's basically what it's all about. Now, I'm going to give you a link. When we get to the end, we're going to talk about NASDAQ Book Viewer. Now, does anyone here have NASDAQ Book Viewer? Level 3. We're going to talk about level 3 and level 4, but I'll give you the link also. If anybody here wants it, just send me an email. I'll give you the link where to get it to NASDAQ website, okay? This, by the way, this is cheap. This is like 15 bucks. It's all it costs you. I did probably, I don't know, maybe 50 presentations for NASDAQ. I'm like a speaker for them. NASDAQ wants you to know how to trade their exchanges, okay? You can get this on any brokerage firm, but I'll show you where you can get it directly through the exchange. So I'm not looking to change your style, but what I'm about to show you is going to be quite disturbing because you're going to start seeing how to read the right of the chart, okay? And if anyone here wants me to look at any stocks, I'll be happy to look at some of them for you. So this is basically how he utilizes data, okay? So everyone please pay attention because what you're about to see is not only going to be super exciting, but you're going to be quite disturbed. You're like, how did I not know this stuff, right? So we're looking at IBIT. IBIT is an ETF of Bitcoin. So looking at the stock right here, the main goal is not where it's trading now. What you want to know is what made it go up and what made it go down. Now, what makes stocks go up is buyers. What makes stocks go down is sellers. Some of you are looking for support levels. Some of you are looking for resistance levels. I like to look at support and resistance, but that does not exist unless those buyers are out there in the future. So let's look at IBIT right here. You see how the stock is going down? Let me get my little crayon so you can follow along. All right. So you see right here. Oops, I don't like that color. Let me change that color. That's a bad luck color. All right. Right here. So you see how the stock went down? It was basically at 55, came down right around 11 and 12 o'clock. It held, and then it shot right up and it started to go back up. Why did it pick this number at 54? Okay. Why didn't it go at 51? Why didn't it stop at 55? What made 54 so special? Well, what made 54 so special is that when you go to the exchange and you look over here on the buy side, you'll notice down here at the bottom, which I know is kind of hard to see, but it's up here. Right here, there were 330 orders, and there was about 129,000 shares looking to be bought at that price, okay? Now, if you look down, listen, you got to understand, there are buyers at every single penny. What made 54 so special? I don't know, and I really don't care, other than there's 330 people think so. It could be program trading, could be algorithms, could be AI, it could be anybody. But as a trader, and as you're a trader, we don't sit there and analyze it. All we care about is what's the street doing? And that's Wall Street, not Main Street. And orders are what make stocks go up. And that was a big order, which makes a support level, and that what drove the stock up. Now, let me show you a couple other ones here. What makes a stock hit a resistance levels? Sellers. Here we have a stock, Palantir, okay? You see what Palantir it is today. Broke up down to 95. What drove that stock down? Well, how are we known to get out of it? Look at all this. Look at the stock, how it trended up. And by the way, this is all in my book. You can read all this. You're gonna and I'll even show you where to get this data, right through the exchange. Stock goes up. All of a sudden, when the market opens up, resistance, resistance, resistance. What made resistance? I don't know. Maybe the big sellers out here, right? Down here at the bottom. Sure enough, that seller came in. Nobody wanted to buy it from him. Well, there's only one way of a seller to get out, right? Hit the bid. If he starts hitting this bid with all these small little orders out there, 200, 300, 400, 600, 100, to get at a 94,000 shares is a lot of shares when there's only buyers looking to buy very small lots. And that's when you get boom, down to 88. That is a substantial drop. Once again, it wasn't Mr. Fibonacci that did that. It wasn't Jeff that did that. It wasn't Fausto. It was the 94,000 shares out there that drove that stock down. Now, did I lose anybody yet? Just out of curiosity. All right.
So we lost your microphone.
You lost my mic?
Oh, now you're back. Okay.
Okay. Maybe the mic wasn't too closer. All right. So let's go over a couple of more examples. Okay. Stocks that we trade this week. Archer, another big stock that went down, right? Was a great runner, great mover. I don't know if this was a good mover. It was one of our stocks that we showcased on our YouTube channel and our Instagram and TikTok, due to, remember what happened in November with the whole drone invasion in Jersey. So these stocks did really, really well. Well, I think that ship has gone and sailed. So these stocks obviously came down. What drove them down? Well, sellers. Not just, and remember, everyone wants to know where the seller is. So if you look here on the right and you see here on the sell side, and get my crayons out here for you. You see right there on the sell side, if you work your way down, you'll see what drives stocks that go up and down are sellers. But now the thing that you want to look at is, well, how much lower is it going to go? You own a stock and like, okay, I'm losing money, okay, but it can't go to zero, which could happen. Where are the buyers? So when we work our way down here, we could see here around 10:06, we got 65,000 shares looking to be bought there. All right. So why did it go to 11 and stopped only here at 10? Well, it must be the 10:06 buyer out there. And if you saw that buyer out there, now the stock went from 10:06, now it's at 10:60. Why did it go up? Why did it pick 10:60? You know, that is for another conversation when I invite you in a trading room. But as of right now, to keep it simple, which we like to call the KISS method, keep it super simple for all engineer friends out there. You probably know what I'm talking about. It's all about following that order on the exchange. Now, let's talk about resistance levels. Tariffs on imports, bullish for Intel. Intel did really, really well. Intel had a big trend on it. But nothing goes up forever, okay? So I even though I'm a big fan of Intel, I used to trade it. Intel is, I mean, Jeff will tell you, Intel's been like, was probably the NVIDIA back in the 90s and early 2000s. Not really that as much, but Intel really benefit from it. But you got to know where to get out. You always got to always prepare to take a profit. That's everyone's biggest issue. Some of you here probably realize you're selling your winners too soon and you're holding your losers too long, right? Well, the way you prevent that is it's okay to take a profit, because is this going to go back to the years of 2000 when it was in the 80s and 90s, $100 price range? It could happen, but we got to get past some sellers, and we got a big seller out here at 145,000 at 26.33. Now, I don't know why the guy picked 33 cents. I don't know why he just doesn't pick 26. It doesn't matter. That's irrelevant. What is relevant is is the shares, not the orders. And if you didn't know that number, look what ended up happening. It went to 26.30, and now it's down to 25.20, right? So where is Intel now? INTC. Oh, unfortunately, now we're down all the way down here to $22, okay? So it's all about following the orders. Let's go check out another one. Anyone saw what happened with MSCI? That stock was insane. I did a couple of good videos on that one too. Let me bring it up here on my Instagram. And I'm only going to Instagram because it's a little bit easier. Everything here is posted on my YouTube shorts too. We did one on Costco. Yeah, these are supercomputers. So this one was a really good explosive stock. So I did a good video on this one right here. This was just the beginning, how the stock, I actually went into great detail of explaining why it went up, why the stock ran up. And the question you have to ask yourself, is it going to continue to go higher? Is it going to continue to push up? So I kind of show a little bit, explain a little bit more, you know, about the news, what came out on it. The earnings that came out on, because the stock was an earnings play. So let me move this out of the way. Let me show you what happened. So here you can see the stock just literally went from 56 up to 66. This is actually in one day, 10 o'clock in the morning to 1:30. And actually, we were trading this stock. And if you go back, you could, like I said, you can back test us, CyberTrade University. You could back test all our trades. You know, we saw this stock start making a big move around the $30, $40 price range. This was just in one day, actually. You can see it right here. Ran from in February, beginning of February, ran from $25 to $65. So these day trades turn into swing trades, into really big swing to even sometimes a long-term trade. Now, where do people sell? Because sometimes you say like sometimes you get out a little too early, right? Well, we got close to a big iceberg order right around here. There was about 144,000 shares. Now, is 144,000 a lot? Well, it could be, could not. So if you go to the exchange, and by the way, I don't know if you guys know this, there are several exchanges in this world. You have the New York Stock Exchange, NASDAQ, you have ECNs like BATS and ARCA and all the other ones, which we'll talk about that in our classes. But NASDAQ actually, just to give you a heads up, probably controls about 50% of the total volume on most stocks. So they're the biggest. So you could just work off this. Don't worry about all the other ones. So don't worry about because people ask me, what about New York, whatever? Can't compare it to NASDAQ. NASDAQ is like probably where most people do their trades. But anyway, getting back to what we're seeing here, look at all these orders out here, 6,000, 5,000, 15,000, right? But when you work your way down, this is the big one right here, right around there. So you could see like, wait a minute, we're at 63. You really telling me we're going to go down here to 66? Well, it could go down. Anything could happen, but as in theory, I always look where the big, where the right of the chart of the orders are. And that's where the biggest seller is at 66. So when you go here and you start looking at the orders, look what just happened. 11 o'clock, 12 o'clock, 12:30, 1:30, and like, oh, well, like, look at this, we're doing great. And then all of a sudden, out of nowhere, absolutely out of nowhere, in less than 30 minutes, you just made about almost 10 points that took you several hours and lost it all in 30 minutes. How could that possibly even happen? I don't know. Did you see the orders out there maybe? Oh, but it's a double top. Or, the indicator didn't tell me that. Listen, the problem with indicators is, they're specifically for day trading, they lag too much, okay? It's a lot easier to see the right of it because you wouldn't have seen that if you didn't see what was out there. And guess what? Even if you got out at 64, you still did pretty good because guess what? Now you're down to 56. All right. So if anyone here would like to get that, I actually did 2 really good videos on that on NASDAQ Book Viewer. So, if anybody here would like it, like I said, you got my email. I'll send you the links. If anyone here, they're about 5-minute videos. There's 2 of them. I could tell you where to go to NASDAQ's website, but the problem, I don't work for NASDAQ, just to let you know. I don't get anything. I don't get no benefits from them. I'm just trying to do you guys a favor because I hate to see traders lose money. Trading is about an 80, 90% failure rate. So if you want to be in like the 50 percentile, these have a half fighting chance, you might want to get this. So, but I'm not going to tell you where to get it on the website because you'll probably get the wrong one and not going to know how to use it and not set the defaults. But here it is right here. I got a live version of it right now. I had somebody who was asking me about hymns, right? Let me break up hymns really quick. And what I do here is you can see all the orders out there in hymns. And you see all these ones and everything. I was going to show you something really quick. I'm going to teach you something really quick here. I'm going to click on where it says filters. And I'm just going to say, show me everything above 1,000 shares because kind of limit all the hundreds. You know what I mean? All the small ones. See, now what it does, it brings everything up. So now what you're seeing here is, if I could do 60, a 60 lot. Yeah, that's it. So you got 100 orders out here at 35 and not really any sellers, right? So I'm just going to go here to the execution system. I'm going to see the market, what's going on with hymns. And let me bring back this screen over here really quick for you. So here's hymns. And you could see here, hymns has been dropping down a lot. See it right there? I mean, they had earnings, and they beat earnings yesterday, but you could see how it came all the way down. It keeps going lower. It's getting close to the 35. So let me tell you, 50 down to 35, how you prepare for it? Well, I still don't think that's a lot of shares. I mean, it's 100 orders, but 35 looks like where it's going to be testing it, and we're just almost there. By the way, anyone else want me to look at another stock before I move to level 4? Because that one was a big drop. Oh, we were looking at Tesla, right? So Tesla, for everyone here, they're looking at Tesla. We got a couple of big buyers here at 298, 295, 20,000, 32,000. No real big sellers out there on the right. A little bit more of the buyer. Maybe it's testing support, right? Let's go check over here. Let's look at Tesla. So here's 300. And let me bring up the intraday chart here. And it looks like it's been kind of holding here, right? You see that right there? Let me zoom in a little bit closer. Yeah, right there. Draw a trend line. So you got going on here. Right? So we're at right there. And it looks like, you know, there's the buyers right there, right? 298. So it looks like since like 1045, it's kind of holding pretty strong. On the long-term chart, where are we? It's not a lot. You see the highs at 285, right around there. So we're pretty much hovering right there. All right. A couple of you here. Tracy says, can we look at MSTR? Sure, we'll look at MSTR. That we've been trading that. I did a video on that one too. That one's not looking too good. It looks like it's holding here now, though. Here's MSTR. And if you look over here, like, and you draw a trend line, it doesn't look like there's any real support levels up until about 223, which is pretty much out of the way. You got some lows right here. Let me see what's going on here in level 4. Let me see where Wall Street's at. MSTR. I'm not seeing any buyers out there. Not really seeing any buyers. Maybe we'll see it on level 4, though. I'm going to show you something really cool. All right, let's go look at level 4 really quick. How much time we got? All right, we got time. So if you're interested, level 4 basically is just a heat map. So envision this is level 3 right here. This is what's called the current order book. And now we're going to see it on a heat map. For some of us like a little bit of a charting, you see on a heat map. All right. Now let me show you what we got going on here. How are you going to utilize this data? So now this probably will be a little bit more easier to read. And hold on. Here we go. All right. So let's look at Palantir really quick. And this is what we're looking at. So you see how there was this big buy right here for 260,000 at 95. So right here, we're looking at the open at 9:30 in the morning. And you can see here that the stock literally, you know, this is all pre-market. So you could actually see pre-market trading. And then all of a sudden, when it got here to 95, then all of a sudden the stock went up. And there was this order's been out there since early this morning, actually. And then what happened, you get program trading that kicks in at 9:30, which, and you can see how the line got pretty red there. And then that probably was, I don't know, maybe it was maybe 100,000. And then you could see how it added in, and now it's down to 260. And you can see how the stock went from 95 up to 98 in a matter of about 5 minutes. So the thing what's nice about, you know, using level 3 and level 4 is you saw the orders early in the morning. Here's 9:20. This was this order right here. It looks like you got executed, which obviously is not a good sign. So, and once he got executed, that's why I went down to the next one. But this one was pretty thick over here, and he kind of added to it. So you kind of have that game plan, you know, where to get in and where to get out there. All right. Here's another example. So continuing with the stock Palantir really quick. So at 9:32, you could see how the stock hit it, went all the way up to a price of $99. So that was a huge run. And then all of a sudden it came right back down again, and it came back to 95 where that 281 was. And then sure enough, look what happened around 9:40. That order got filled, and now the next biggest buyer was here at 90, and he was out there since 9:30. So let me just explain something to you, fellow traders. Like it or not, hope all you want, this stock is going there with you, without you. Okay? Now, support levels get broken all the time. What makes the support levels? Buyers. How do you know if those buyers got executed? Well, that's the thing we talk in our trading room, which I'm going to invite all of you guys in there, because you know what? If you didn't know that buyer got filled and you didn't get out at like 94, guess what? Now you're down to 90, and you all know, I just mentioned earlier, you're selling your winners too soon and you're holding your losers too long. And the reason why you're holding it too long, because you don't want to take a loss. And the reason is that if you, and we kind of like teach you a little basic charting 101. This is the first floor. This is the second floor. This is the third floor. Follow me closely. This is what we call the floor. This is what we call the ceiling. This is what we call the floor. This is what we call the ceiling. What happens when you break through a floor? You're going to go to the next floor. How do you know where the next floor is? Where the next biggest buyers are. That's how you know where the support and resistance levels is. This is like basic trading 101. This is what I was taught 35 years ago. So I don't know how you kind of read charts, but I was always taught of looking at it more of an architecture view. Okay, floors and ceilings. And you know what? If you take your eyes off the screen, if you look up, yeah, that's the ceiling. You look down, that's the floor. There's no such thing of anything in between. So very simple math. All right. By the way, did I lose anybody yet? Always like to stop and ask. All right. So let me go and let's go into the market. Let's do some live trading. Okay. Let me show you what's going on right now in the market. And by the way, is anyone here want to look at a stock? Okay. Let's look at NVIDIA. Who's that? Carmela? Okay. Look at NVIDIA. NVIDIA is a popular one. NVDA. Okay. There's NVIDIA. All right. And you can see here NVIDIA on the long-term chart, not doing too good at 140. And it's right down, it kind of hit 125. Now, if I draw trend lines here, I want to show you something pretty cool here, right? You could see pretty much where support and resistance levels are by these trend lines. Now, how do we really, 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 really know if these supports and resistance levels really exist? So I'm going to bring up what's called level 4 here. Well, first of all, I'm going to look over here on NASDAQ Book Viewer, NVDA. All right, here's NVIDIA. Here's all the orders. And you could see, like, I like to focus on like the 5 and 6 digit numbers. So you could see that there's a pretty big buyer here at 126. And here's a really big one. There you go, right there. Did you see him right there? Yeah, there he is. Shoot, can I freeze it? Yeah, okay, I froze it. This is a really good one right here. I just froze it. You go pause. You see this right here? Everybody see that number? What number is that? 125, right? There's 2,000 orders out there, and there's about 100,000 shares looking to be bought. So I like to do this. This is fun. How much money is that? All right. 100,000, simple math, times 125. It's about $12 million, $12.5 million worth of stock that's looking to be bought out there. And there are 2,000 orders around the entire world that are out there. So right there, you could see it just by using the NASDAQ market. Now, let me look at level 4. Because I do have it here. Here's NVIDIA. Blow this up. And look right there. Does everybody see that right there? So NVIDIA started at 9:30 this morning. There was a buyer right here, 128. He got filled. There was another buyer here, 127. But you could see the big buyer out there was really at 125. And look where we're at now. We're at 126.70. So the buyer's out there. He got hit, but he came back. he was out there, he refreshed, it's called refreshing, and you could see that it never really wanted to get past that, and then you could see how the buyer showed up again. So that order right there, let me just tell you, because I can go back and I can see how much that order was. That was actually 445,000 shares out there. So everybody see that right there? So right there is the current order book. That was back then. So that's the only difference between level 3 and level 4. All right. So, I mean, what you're looking at is at the right of the chart. So when you thought that 128 was support levels, boom, broke it, broke 127. Why did it go to 125? Because that's where the orders are. I want to show you one more. I want to show you Bitcoin, because Bitcoin's actually a pretty good one. Now, I just did a video on Bitcoin. I want to bring up that video one more time, okay? I just posted on Instagram. All right. So let me X out of this one. This one I just did. How's it doing right now? Here we go. Let's look at this video one more time. So if you look at here, Bitcoin had buyers out there. If you look here in the bottom, that was right around 10 o'clock this morning. You see that at 185. Those are all the Bitcoins. So if you really could see it, Bitcoin's on the edge. And some people are like, wait a minute, but Bitcoin was at 100,000. How did it go down to here? And if anyone here trades Bitcoin, you have to trade Bitcoin. They also ETFs out there like IBIT and everything else. But you see, like this order's been out there all this morning. Let me show you right here. If you look here, you see all these orders out here, all these orders out there. So Bitcoin, let me just scroll down. This was nice about this. You can go really, really back in history. But look, I'm looking at 100,000. Look at this big, big, big yellow line out here, orange line. This guy's been out there forever, right? Now, if anyone here trades IBIT, because the ETFs are out there, or one of you local trading MSTR, because I know they own a big piece of it. Here is IBIT. See how it's basically got there at 48 and went back up to 49 and came back to 48. And you could see right here on IBIT on the long-term chart, you might look at it and be like, Fausto, I don't really see any support levels here. So you might have missed it. I mean, like, you know, there's a little bit here on this candle on the wick on the bottom at 148, but like some of you might be like, you know what, the real support level is right around 50. We're below it. So some of you might say, shit, I got to sell it. I got to get out. And then all of a sudden, like, why is it going up now? Well, you can't tell on the chart because the chart tells me, I don't know. I mean, the real big support level is right around 152 and right around here around 150. We're just below that. So some of you might pull out the parachute. But you know what? I see buyers out there, been out there for a while. All right. Any other stock? We got one more stock I want to check out. Well, actually, let me do this really quick. I'm going to check another stock, but who here would like to come and join the trading room? So I want to invite all of you guys to come in there. Here's the trading room. And let me just clear this out. So I want to invite all of you guys to come in here, and let me just because I'm almost out of time here. So I'll show you a couple of more stocks. I don't want to be caught up for time. First of all, here is my if anybody here wants to watch all those YouTube channels, those videos, I got over 3,000 videos. Damn, that's a lot of videos I put on there. I didn't realize that many. Yeah, so I got some great shorts. If you don't have the patience to watch something for 10, 15, 20 minutes or an hour, I got some nice 30 seconds, really quick ones there. So just go to follow me at Cyber You or Instagram or TikTok, whatever you like. Just make sure you like us, friend us, and leave a comment. And we answer everyone back. Very important that you guys do that. Also here at SuperTrend University, for some of you who don't know this, we're probably the most highest recommended school in the industry. You can see some of the big names up there. I've done presentations for all these companies. We actually had Tom Sosnoff from Tastyworks, the founder of Thinkorswim. That was on my podcast last week. But TradeStation, Schwab, Metastock, all of them were endorsed by all these brokerage firms. Also, probably won't see this anywhere, but we have a 5-star rating on Google. We're also ranked #1 on ChatGPT as educational schools. I'm very proud of that on our reputation. So I think that has a lot to do with it. But if anybody here would like to learn more and would like to come and join that trading room, see like why we've been ranked so high, how you can find these stocks and everything else, this is all you have to do. We're not looking to break the bank here, but I want to give you guys a free 1-week access to our trading room. It's only going to cost you $9. That's it. Not looking for 9,000 or 90,000 or 900, just $9. So if you have your phone, you can scan that QR code, or you could just click on that link right there, which says cybertradingu/trial. And for $9, let me just tell you everything you're going to get, and I'll go back and do some more trading with you. But this is what you're going to get for $9. All right. So we do live commentary all day long with all our instructors. Okay, so we're there all day. We actually start at 7:30 in the morning Eastern, and we go up to about 4:30 in the afternoon because we like to trade. Sometimes you'll get some after hours, earnings announcements, everything else. You'll have full access to all our classes with our chat board, everything. Everything we post, we practice what we preach. You'll be able to interact with the other traders in the room, the thousands of traders that are part of it. You'll have access to all of them. We also have in-depth workshops that we're going to give you. We're going to give you full access to all our podcasts that we do, workshops, podcasts, everything that we do. We have some of the best podcasts. This is everything that you're going to get. And by the way, if you not interested, and don't like what you could see, I'll give you money back. I don't need your $9. We're not going to bill you a week later. We do not do that. If you don't want to continue at CyberTrade University, just let us know. You don't have to. Okay. But you're going to get all this great stuff. A week in our trading room. You're going to get 3 workshops. You're going to get Traders Talk Library. And one big bonus I'm going to throw on top of it for all of you here. Anyone here registers, I will actually personally give you a personal coaching class. And the reason why I do that is not that I have the free time to do it. I'm actually looking for traders that can be part of my team. If you feel like you're somebody that is been struggling and really trying to find someone, a mentor or whatever it is, well, I want to interview you and see if you're really, if this is something for you. And I'll be honest with you. I'm a very honest person. If I think you're not going to make it, I'll let you know. I'm like a doctor, I'll tell you, I'll be honest with you. But if you're somebody that wants to know a little bit more and has questions to ask, I know it's kind of hard to do it in events like these workshops that we have, these webinars. There's so many of you here. I think there's over 100 of you that are in here right now, more than 100 actually. It's a great opportunity to work one-on-one, not only with my staff, but with me personally. But we're not asking you for to break the bank. We're only talking for $9. That's it. So when you do register, I just want to kind of clarify something really quick. Make sure that we're going to ask you some questions, 5 questions. Nothing personal, just if you ever got training before or what brokerage firms, you want to make sure you set up. If you're using a meta stock, you're golden. Very important that you do. We always find that people out there want free stuff, which by the way, I'm just going to let you know, if you're someone that likes free content, you're in the wrong business. You're not going to make it. You got about 90%, you got 10% or 5% chance of making it. You don't got to spend a lot of money, but you can't do this for free. I'm just being very honest with you. All right. And by the way, when I started, just to let you know, I was one of those cheap people. I was 22 years old back then. And that book viewer that I just showed you, this thing right here, I just showed you right here, I had to pay $1,000 a month 35 years ago. Today it costs $15. Okay. Why would you not want to see something where you could see orders, the 2,000 orders out there in NVIDIA, knowing why it's going to bounce at 125 for $15? Why would you not want that? I still can't figure that one out, but maybe someone here could explain to me. But you're going to get all this stuff. Now, let me go back to the trading. Does anybody want me to look at another stock? Any other stocks out there anybody wants to see?
We had a couple coming through YouTube, Fausto.
What's that?
We had a couple that came in through YouTube. Let's see. Jay Kelly wanted to look at ETN, Echo Tango Nancy.
BPM?
ETN, E Edward T Tango N Nancy.
EPN. EPN's not coming up.
E Tango T Taco. ETN. E Edward. We'll get there. No. ETN.
ETM.
Yeah, like ETF, but ETN.
Okay.
N is in Nancy, though.
ETN.
Yes, correct. You got it.
There we go.
Don't do anything else. Just hit enter.
You know what? It's your accent. No, it's okay. All right. So the problem with ETN, it's more of an ETF. So you're not going to see a lot of the orders as easily. You could see that the orders out here are not as easy. It doesn't work as well. So if I look at ETN here, you could see it's not really, it's, no, actually, no, it's not ETF. You could see there, it's support levels here at 285, but it's not, this stock is not actually working too well on the orders wise. I'll check over here on NASDAQ Book Viewer, ETN. Yeah, you see right here, there's not that many orders out there. Very, very low orders out there. Any other stocks out there anybody looks at? I mean, we got, what else we got here?
Winston wanted to look at SOUN, sound without the D.
Yeah, type it in there. It might be easier.
Okay, yeah. It's in the.
Soons. Soons is actually a pretty good one. We traded this stock before. So Soons, obviously taking a very big hit here on Soons. And Soons right here, you could see, I'm just looking over here on NASDAQ right now. You got a big order here at $8 and 808. That's about it. Let me look here on level 4. You could see it's bouncing here at 805, but like right here, here's 808. You can see support levels right around there. I'll go check here on level 4. Let me clear some of these things out. So Soons. Let me get the data. Let's let it come up. Let's see what we got going on here on level 4. So you could see here, let me go back 3 hours. So you could see here, here's a big buy right here at 850. As I go back a little bit further, you could see here's the $8, 157. So what's nice, what's different about level 4 and level 3 is you're getting more ECNs on top of it. That's why the order is a little bit higher there, where NASDAQ Book Viewer, but obviously this costs a lot more money, but you know, that's the difference between level 3 and level 4, but that's at least your problems right now. Right now, you could just work directly off level 3, and you can see the order right there. That was that big order at $8. And if I scroll down here, you could see it right there. So out of that 150,000, 90,000 is on NASDAQ, and there's 558 orders. So that's usually where you support. Now, there was support levels here at 850. And if I click over here at 850, you can see it has 28,000 right there and 119,000 shares out there. So just kind of tells you a little bit more where the right of the chart is. All right. I'm almost out of time here. Oh my God, I didn't even realize it. All right, so I got to go. I don't want to take too much time away from the other presenter. So if anybody wants to register, once again, CTO.co trial, it's only $9. You can't afford $9. You really can't afford the trade. I look at it. So join 1 week. You could scan us. Make sure you follow us on all our social media. Like us, friend us. We have a great podcast. I even had Jeff came on. Got a great podcast with him. You probably want to watch that one too, Jeff. And we got to have you back on. People loved your podcast. So we'll definitely have you on again. But any last minute questions before I go?
I don't see any more questions. A ton of symbol requests, though. Unfortunately, we just don't have time for them.
Yeah, you know what? I'll go over that in a trading room. You know what I mean? So you guys can go over it. I know we've got a minute. I want to pass it over to him and then go from there. But Jeff, thanks for inviting me here.
Always a pleasure to have you.
It's always a pleasure having you. And you know what? Great audience. You always do a good job. And everyone, just tell everybody, a little advice for everybody here. Definitely listen and try to listen to as many speakers you can here. Try to sample a little bit of everyone's stuff. Don't get overwhelmed. You know, you're going to be overwhelmed, but try to find someone that has your style, that you like, that you adapt to, and then and stick with it. But please do yourself a favor There's a very big failure rate. Don't try to go do it on your own. You think education is expensive? Try ignorance, like I always say. All right, Jeff. Thanks a lot for having me. Good luck, everyone.
Thank you, Fausto. Great having you. All right, let me go ahead and do this. All right. And we will be right with you, Martha. Before we get there, I want to say thank you to Stocks and Commodities Magazine for sponsoring today's event. Always do such a great job. They've always supported the conferences and the summits and the events that we've done. Great magazine as well. You can get a subscription, and you should. www.traders.com. With our gratitude, thank you for the subscription or the sponsorship, and also the subscription. I get it every month. So I do also want to say any of the Metastock events that we've kind of talked about today, you can get at metastock.com/conf promo. We do have a special extended trial up there and all that kind of stuff. Martha, since you're already here, do you want to help me give away a prize?
Sure, I'll help you give away a prize.
All right.
Awesome.
I have failed to give away prizes, but I have some books here to give away. And so we're going to give away Steve Bigelow's High Profit Candlestick Patterns.
Yeah.
One of his mouse pads and his Eliminating Emotions book. So I'm going to give you, Steve was a great friend of Metastock. We miss him. Very, very good partner of Metastock. I got some of his books. We're going to send it to somebody. And Martha, what I need you to do is help me pick a winner. And
Okay.
so what I need you to do is just give me a number. That number can be anywhere between 1 and 7,351.
71.
Okay. And that is in the US, Robert M. with a Gmail account. So I'll make a note of that as we get started. And Robert, I'll just make sure I have an address for you. I'm going to email you Monday. After this whole thing is settled, we're cleaning up the dust. I'll send you an email, make sure we have a good address for you, and I'll send this. I'll actually take it myself to the post office and drop it off. So there you go. Our next guest is one of my favorites, Martha Stokes. Martha is a CMT, which is a chartered market technician. She has built a lot of really cool things into Metastock. She has a very, very well accredited, I think it's a A+ rating with the Better Business Bureau coaching business that she runs. She does a lot of coaching through there. Talks a lot about how insiders and dark pools. We're only 2 days in and I'm already forgetting my words, Martha. How dark pools kind of can manipulate the markets and that kind of stuff. She always does a really good job. Grab a pen, take some notes. Martha's on. Martha, how are you doing today?
I'm good. Can you see my screen yet?
Not yet. I'm sending you, it should say, do you want to share your screen right now?
Okay. And are we on?
Yeah, you're on.
All right.
It's all your
Good
turn.
morning, everyone. I just survived a very severe windstorm and I'm here today, so I'm very excited that I can be here today. We're going to talk about outsmarting AI algorithms. I know all of you have heard about AI since last year. Has been a flood of activity. AI has been in development for over 40 years, and it just was introduced last year. So stock indicators for smarter trading so that you can access things. I believe if you know more about the market, then you will do a better job. That's my goal. I am a retired buy-side professional. We are, a disclaimer, we're not an investing advisor. I don't do advisors. I'm not a guru. I don't want to be. And everything is copyrighted, including the Metastock charting software, which we used in this production and with our things. Okay, stock indicators for front-running AI. I'm Martha Stokes. I'm a chartered market technician, a member of CMT. I've written 2 doctoral theses that have been both included in the CMT organization as advancing the body of knowledge of cycle theory and advancing the knowledge of technical analysis. We have a really great gift for you today, so wait till the end. This is an actual photo of an HFT system that a friend sent me that he helps manage. Algorithmic trading is not new. Using artificial intelligence software to enhance HFT algos is only a few years old. It's about 3 years old. They've been working on it for a while, so not everything happened last January. AI is still in the test mode, and it is imperfect in many ways. HFTs have been front-running retail traders for many years, a couple of decades, and most of you don't realize that. Today, we will learn how to outsmart and front-run HFTs' AIs, because they're using that now. Currently, the financial markets are on an exponential growth trajectory due to the acceleration of the use of artificial intelligence in 2024. Today, you will learn how high-frequency trading companies, also known as HFTs, use AI in their algorithms to front-run the stock market open with huge gaps and accelerated runs up or down. If there is a gap at open, it is always controlled by the HFTs. They have massive quantities of money and data to do that with. So it is not Wall Street versus Main Street anymore, folks. Get rid of that idea. HFTs are the maker-takers for the public exchanges in the US. In other words, they make or take liquidity to keep the balance going and keep everything active. HFTs are not new. They've been around for over 20 years and transact on the millisecond, or 60,000 transactions per second. They are fast, and you are not as fast as them no matter what you do, but you can outsmart them by knowing how to get in before they gap. Computing versus AI, there's a lot of confusion, so I want to clarify this and clean it up right now. Number crunching, data gathering and sorting statistical data, algorithms, and computational data are the realm of the original computer software. Deep data mining and data sorting and analytical computing evolved from the cloud technology, which provided access to streaming data and billions of data feeds starting in 2011. Computers do an excellent job of managing and sorting and storing vast quantities of raw data, and they are better than your brain. Okay? They can do it faster. Any computer can beat you at chess. AI is incapable of doing this kind of computational work. Okay? So there's a separation here. AI is a software program that is connected to and on top of, so to speak, the computational data from cloud technology. AI is still in its infancy and is actually in test mode for most of the professionals of the market, as the SEC has restricted the AI usage because they don't want the market to crash, and AI makes lots and lots of mistakes. Industries like healthcare adopted AI too early, and the consequences are severe. Attorneys told AI to find a similar case than the one they were going to defend or testify against, and the AI went out there, couldn't find any of those things. So what did it do? It took and amalgamated all the things that it did see that weren't related to this, and it made up a case and sent it to the lawyer. And the lawyer's going into the courtroom with a false piece of evidence. Healthcare. Some people are being told they have cancer and go through the whole treatment only to discover they don't have cancer at all. Some people have cancer and the AI doesn't get it, doesn't see it, can't catch it. So that's why the SEC said, wait a minute, let's not kill the stock market with AI. So HFTs are allowed to do it because they're trading on the public side, not the professional side. The professional side are the ATS venues. There's 50 of them right now. And so let's talk about milliseconds, because you don't understand this. This blue fuzzy line are thousands and thousands and thousands of orders, okay? The larger ones are the slightly larger ones, and the teeny tiny ones are the little ones, the outliers, okay? They're out of the bid-ask spread. That's a penny spread on the millisecond. This is moving up, and you can ping these large ones. And how large do you think the dark pool orders are? How often do the professional traders that are sell side, buy side, and independents, what share lots are they using? Anybody have any idea? It's not 50,000. It's not 100,000, because they can't make any money on that. Those are the smaller funds that are doing that. And that's what you see on your secondary level screens. They're trading 1 million, 2 million, 5 million, 10 million. And then dark pools are trading 20 million, 50 million, that type of thing. So pretty big lots. And there's a really large lot sitting out there waiting for activity. This is a rundown. and it runs down faster because there's lower liquidity. And you can see the lower liquidity started over here and then is expanding and falling and falling. So you have this huge chunk of selling going on down here. Over here, you can see that there's a lot of illiquidity going on in the millisecond going on. So that can move price up or down in the millisecond very quickly. So this is what you're trading against, and you can't see it. It's not allowed. You can't be on an ATS venue, no matter what you pay. You have to be a dark pool. You have to be a buy side, a sell side institution, which are the banks and financial services, or professionals working for those. So let's live in reality. HFT gap ups based on AI algos. So you have this stock and it's sitting around. You think, oh, this is volatile. This is not volatile. This is choppy. And this is choppy because there's a TWAP pinging on these orders over time. And as they ping on the penny spread, it moves it within the range that they have said, I will start buying the stock if it drops below this level or lower, and I will stop buying if it goes above this price level. So they have this pinging. They can spend weeks accumulating, having an open order of 50 million shares for this stock, and over several weeks they slowly accumulate from the public exchanges and from the dark pools also. So then we have this sudden gap that gaps up, and this is a little typical more. It's actually a pretty lousy morning star, but it is there present. But you have to get in before the gap ups, and a lot of times you're using crossovers or indicators that are not showing. What you want to realize is that there's activity that's going on in here, and a lot of times there's just a couple of little tiny candle patterns before it gaps. This is one where you actually have a standard Bigelow entry signal right here. And if you could get in, if you had the crossovers and you had the signals, you could get in and write it up. But a lot of times they're just little tiny things. And another thing you need to watch is this is angling slightly upward. Spatial pattern recognition skills are something that I teach. Here's a little resting pattern. We're just sitting here and boom, it gaps up big time. So your pros are in here and they're nudging. This is called a nudge. And they're nudging and they're nudging. And then a couple of little retail traders get in a little bit later at market orders type of thing, maybe investors. And then it gaps hugely, HFTs. So you want to get in on these little things, and you can see that there's a shift of sentiment going on here, and dark pools are getting back in and buying that. They buy based on fundamentals, so they have a price range based on fundamentals. And when it starts to get away from the fundamentals, they stop buying. They just wait for you and HFTs to gap it up. But if you try to get into this on the day that it occurs, you will be late and you will lose a lot of money because they're selling against you. As you buy, they sell. So that's something that you have to be aware of. You can learn to front run HFT AI. Fact, a human brain is far superior to the current AI technology, stunningly more sophisticated. However, as traders, you need to understand what data is used in the AI-driven algorithms so that you can be in a stock before the HFT gaps it up or down. You are chasing the stock because you hear on the news, oh, NVIDIA is doing this or that. Oh, I got to go buy that stock. And it's already gapped. Pro traders are selling, HFTs are selling, hedge funds are selling, and they're going, this is sweet. These guys are buying this stock like crazy. Yes. And you lose money that day. And you go, why did I lose money that day? You're late. You're very late. You're late for the party. Example, the DeepSeek retail news manipulation targeted specific stocks, initiating a huge gap down by HFT AI in early 2025. Oh, the world's coming to an end. DeepSeek. DeepSeek isn't new. It's been around for 3 years. It uses OpenAI, which is an American product, and it's open source. So American programmers have been using it for years and testing it and working. It's nothing new, but the retail news made it sound like it was retail news and that China was going to take over the semiconductor industry, and millions of Americans bought it. It's like, don't believe everything you read. Try to check it out, make sure what it is. If you had seen the pre-setup of this action, then you would have been in on the targeted stocks before the gap down. Professional traders were already in the stock selling short, and you could have taken a huge profit in a single day because a void of buyers occurred. So the stock price went from here to there because there was no buyers to match the sellers. And so that's what they do. They want to drive that down, and you go, oh no, I'm not going to buy this stock, and you lose. you lose. And you got to stop doing that. Gaps are common. Gaps, little gaps, big gaps, huge gaps, and huge rundowns also are, and reversals are also common. So if they drop into a buy zone, it's going to go right back up. Dark pools have a weighted time weighted at price. If price drops below this price, buy me back in until it comes up into my fundamental levels. Got to know this stuff, so write this stuff down. So this is all how it works. HFT algorithmic automated trading has been around for over 20 years. It is not new. It's the AI part that's new. However, using artificial intelligence to fine-tune and improve the analysis and programming is relatively new, a couple of years. Adding AI provides faster interpretations and analysis because it can analyze more data faster than a human brain. In some instances, this is important as market data has increased exponentially. We are at $300 billion changing hands every single day. It is massive. Most of it is on the buy side. You can't see it. Analytical speed in the professional side of the market is crucial to the highly competitive internal market structure. 80% of all activity is on the professional side. 20% is on the retail side. The public exchanges that you're on, only 20%. They have such high speeds that they have to have every advantage they can to stay ahead and be competitive. The sell side, the banks and the financial services companies, and the buy side, the long-term investors, mutual funds, 401k, pension plans, are in a war, and they're battling each other. Okay, so you don't want to be caught in the middle of it. Shifted sentiment indicator is something that I've written that is very, very important. It compares the uptick versus the downtick on large lots versus small lots to determine what side of the trade was actually transacted. This tells you when something is shifting, and it shifted right here, and then you could have gotten in any number of places and sit and wait because it's going to do a breakout and run up. This is something that I teach my students how to identify the breakout patterns, the shifted sentiment patterns, and everything using metastock charting software that we designed. We designed these indicators. I helped design them, saying this is what I want from my programmers. I had programmers actually develop these for metastock exclusively. HFT AI pre-market open activity. Monitoring stocks for significant changes in price or volume activity. So before the market opens, there's a lot of activity going on. There's overseas activity. There's all kinds of different things. Everybody wants to trade the US market. Why? Because we are the largest stock market in the world. If you combined all of the 225 other stock markets in the world all together as one giant entity and compared it to the US stock market, the US stock market is still gigantic compared to all the others. They have a very small number of stocks that they are publicly trading. So everybody wants to trade our markets. Also, our 7 financial markets are all the largest in the world. As far as financial systems, we dominate the entire world. China is way behind us, way behind us. So all this money is in here, and we want to control it. They recently opened up aftermarket orders for Europe. Let's get everybody trading the US market instead of trading their markets so we can make more money. They didn't do it for your benefit, although retail news tells you they did it for your benefit. But it's not working as much as they had wanted because there's quite a bit of the liquidity the HFTs would have to take over. So they're monitoring for all these stocks, trying to take care of everything and track everything before. So they're listening to see chat rooms, social media, all that stuff. This is done mostly pre-market open. The transactions are on the millisecond and fill the queues of public exchanges within a second of the market open. 60,000 transactions, small lots. They're not using large lots. They're tricking the little computer. And they're allowed to do this because they're maker takers. They provide liquidity. So if we have an imbalance, they can balance it out. Oh, we're going to sell short because there's not enough buyers. And then we'll buy to cover for those buyers way down here. Okay? Think about what's going on in the market. Within another few seconds, the market computers set the price for every stock on all the public exchanges, eliminating any arbitrage from the overseas markets. There's no arbitrage that you can participate in. Within another few seconds, the market opens and your payment for order flow order is filled not by your broker, sending it to their preferred market maker. Brokers rarely fill your orders anymore. Payment for order flow provides income to your broker, and that's why it's allowed. So Citadel and some of these other big companies are now the major designated market makers for brokers. Brokers no longer keep inventory. They're sending it, and they're selling it on the millisecond. You're typing in your order, 500 shares of NVDA. I want to buy this. And before you even hit the click button, they already know what's going on, and within a millisecond, it's at the Citadel market maker, and they're waiting a few seconds because they know they can. It upticks a little bit, ding, your order is filled. You are paying for everything that you do in your brokerage. Why? Because brokers, like the rest of us, software companies, brokers, everything that provides services to you, have to make income to stay around. It's a business. So wanting everything free means that we hide what it costs you. Momentum trading, taking advantage of a temporary supply and demand imbalance with short-term trading momentum until equilibrium is restored. So during the day, they can be trading one side or the other with a maker taker. And it doesn't really matter if they make money at that point, because they're making the market, they're filling the void, any minimal void that goes on. HFT strategy is used for retail trading activity and smaller fund activity, and it's highly profitable. The HFTs you're often trading with them. So you better get to know them and really get down to the nitty-gritty of what do their candles look like? What are the pre-market and pre-nudges from professionals look like? Because I can assure you, your crossover indicators will not signal until it's over. Front running of the retail crowd chatter on stock twits, Benzinga, TradingView, large guru chat rooms, social media, memes groups, tweets, and so on. Any open forum that can be monitored and analyzed is analyzed, and they know exactly what you're talking about. They know which stocks to front run because you tell them. My communities and discussion groups are private. It's on a private thing. You have to come into that area and be very private. I'm sure that that's how Jeff and Metastock do theirs too, so that your communications to each other are not public domain. HFT AI algos, retail news. Retail news is designed to create a significant emotional reaction from small funds managers with less than 3 billion assets under management. There are somewhere between 10 and 15,000 small funds managers who often go around going, well, we're big. We have 3 billion assets under management. Woo! $1 to $3 trillion of assets under management is a large fund. Okay. Anything under 3 billion assets under management is a small funds manager, and they're not even considered on the professional side. They're trading on the public exchanges. They're considered retail. Retail day traders and retail investors investing long term. And that news affects them. News algorithms are based on sentiment or the emotional reaction of the news. The news is intended to create panic or buying frenzy. Herd mentality is a powerful money-making opportunity for HFTs. And how many of you are guilty of running with the crowd? Yes, yes, yes. Novelty, something that will catch the attention of retail investors and traders and cause them to either buy or sell in panic or stop buying. Market impact, type of news and other factors, economics, job reports and layoffs. Oh, job reports and layoffs, so that's a biggie. And you fall for it every time. Buy-side institutions and corporations know that when their revenues start to decline and they can still boost their earnings for a few quarters, They know they have to start doing layoffs, and the sooner those layoffs happen, the faster they're going to be able to turn around that revenue and start building the revenue and the earnings back up again. So buy sides are impressed with a company that lays off as quickly as possible. Saves money. But everybody goes, well, it's layoffs, it's employees. Don't they care about the employees? They only care about their investors. Deal with it. Secondary factors such as the volume or news, search engine trends, and social media, as well as broker activity, lighting your order before sending to the PFOF market makers. So that's what you've got going for you. The most important indicators. So the market is intentionally biased against you. Deal with it. And embrace it. And then use it to your advantage instead of griping about it. HFTs and professionals can see the retail orders as your broker is required to light your orders before sending to the PFOF. This happened about a decade ago because the brokers were taking advantage of retail traders and spiking up the price or waiting for the price to spike. And so the fills were poor. To be consistently highly profitable, you have to use professional style indicators. You can't do anything else. Price and time indicators react only after price has moved. Why? Because it's a smoothing of price action. And so as you smooth with moving averages, it smooths out all of the fine details that we have in candlesticks that tell us who's doing what. To front run HFTs, you must be in the stock before it moves up. You must be in the resting day. Professional traders use what I call nudges, which are a new entry signal that price and time indicators do not signal. And these are new indicators that are occurring in recent years, and during the pandemic and everything, I started noticing these little changes that are going on because nothing is static in the market. There's constant change. So we're going to have new candlestick patterns because the penny spread has forced us to do that. Okay. Also, that's very common is sideways patterns. The market moves sideways. This is not volatility, folks. This is quiet accumulation. This is this gap down and immediately ran up. What does that tell me? That tells me that that is a buy zone. It dropped below its buy zone, and this is the level of the buy zone right here at that time and time. And the buy zone is always fundamentally based. This is telling you where fundamentals are, And if they continue to accumulate as it goes up, but no, we have HFTs coming in here, and we have a lot of smaller funds coming in here. How? Because these bars are longer than they should be. Dark pools have very short gray to green bars. And that tells me when they're getting in and when they're just holding. And they'll just hold. And you have some more little nudges here encouraging, come on, HFT, come on, HT. And they're just nudging that up slightly, and then all of a sudden it gaps it up. Yeah. So that's, be aware that they're sideways trends, they're choppy, they're dark pool controlled, they're pro trader controlled. Look at this nice, beautiful control. Oh, so sweet. And then it goes up. Okay, so that's what you need to start looking for. What is the most important indicator? Price in its purest form. Candlesticks. High, low, close, open. All the data you need to know. Okay. You should be able to read the candlestick chart as easily as you read the text on this PowerPoint. Pure price analysis is far superior to any price and time indicator. Why? Because price and time indicators automatically smooth out a lot of the nuances that are current in the market. This is a new market structure change because we are moving so fast with the speed of how these transactions occur on alternative trading system venues that are hidden, that are completely dark. You can't see any part of that because there's no limit order book. There's no market maker there. This is peer-to-peer transactions from dark pools to sell side to buy side to corporations and dark pools buying directly from the corporation. You can't see this stuff, okay? It's dark, and that's why they call it dark, because it's not a lit market. You trade on the lit markets. Indicators smooth and average price, so the minute details that tell you who is in control of price are missing in the indicator analysis. Bad idea in the modern market structure that moves so fast, and it's going to be even faster with AI analysis, quantitative analysis formulas for finding fundamental levels and technical patterns is speeding up. What do the candlesticks tell you? What are they telling you as you look at the chart and you study the chart to see what's going on? Is this controlled by dark pools and professional traders? No, it's highly emotional. Buy, sell, sell, buy, oops, sell, gap down, sell, buy, sell. If you were, I took a piece of a chart one time and put it to music. I actually made a musical piece, and it was very interesting to hear what the candlesticks sound like in music. If you read music, or if you're a technical person or in any kind, it becomes easy to read. With that, we have some quiet action going here, a little run up and then a little run down, but we're persistently seeing more downside, and then it gaps down. So these are important things that you need to learn. Okay. Retail traders and smaller funds VWAP orders. Okay. Time weighted at price pings on a specific price range. Buy me in if it hits here. Do not stop buying if it comes up to here. So it's a tight penny spread. So when they're in control of price, it moves fairly consistently along the small sideways choppy action. It's a consolidation or moving slightly up and down. Dark pools will move slightly up and down. Pro traders, they will just be because they are completely controlling price. Completely controlling. So are they completely controlling price on this chart? No. They are not controlling price. Who is controlling price? Retail traders and small funds that use VWAPs. Now, VWAPs are the most dangerous order type in the market. And I'm sure at some point they're going to be more regulated than they are, but they're on the public exchanges. So there's more flexibility than the rigidity of the professional side, where they have to follow all these rules and regulations so they don't get in trouble and get fined. That doesn't happen here. Retail traders don't get fined for doing stupid or gambling or meme scoops getting together and then trying to kill a hedge fund or try to push a stock up. They don't get into trouble because you're not regulated like the professional side is. So this is a volatile action. And VWAPs are in play right here. They started here. And when a VWAP played, it says volume weighted at price. The more volume, the faster the price should fall. The more volume, the more accelerated the VWAP orders are. So the more VWAP orders there are, the faster the price falls because they're sell, 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 sell. And then because there's more volume, then it increases the speed. Sell, 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 sell. And so because there's more volume, it even goes faster. And that's why we have flash crashes. And that's why there's all kinds of problems with this. And it can be a huge mess. This poor stock got shoved down and gapped down and everything. And their fundamental values are right up in here. So it marches right back up in the fundamental levels. And there it stays. Okay, so be aware of there's more to this than just, the Boeing is on the news today. They just got rid of their strike, and so it's got to go up. Not necessarily. And they hear you, and they know, and they can trade against you. Which market participants control price? At any given time, one market participant group controls price. Is it HFTs or dark pools, or independent professional traders, or sell-side institutions, or retail traders and small funds, or whom? You should look at the chart and say, who created that? Who made that big candle? And why? There are 12 different market participant groups, not 2. It's not Wall Street versus Main Street, big banks versus the little guy. It's not like that anymore. Who controls price at any given time tells you what to expect and how to trade. These patterns are in the new candlestick patterns that have been developing in recent years. Many of the Japanese candlesticks can indicate the wrong direction from time to time. This is a good example. This is an inside day. This is a Haramari. It would say that the stock would move down the next day, but it didn't start the day that way. It gapped up. So you were in a sell short order, and so you sold buy to cover, and you lost money on that transaction. So you have to be careful. You have to be careful what you use. 20% of all the market activity is retail side. So we have buy side institutions, dark pools. I've shown you this before many times. These are long-term investors. Professional traders on the buy side manage the return on investment by trading short term to keep the return on investment that you have been promised for your 401k or a pension fund, and they keep that at within the low of that level of, say, 4% to 8% a year is what you can expect. Okay, so that they are trading actively. They also do a support the market. If the market drops to 20%, the buy side institutions will move in and support the market and push it back up above 20%, unless there's a catastrophic event like the black swan. Professional traders are independent. This is a huge group, and it's expanding every year. It's growing. They expect to make 1 to 5 million or 10 million a year. They expect to earn $500 to $1,000 an hour. How much are you making an hour with your trading? If you want to make only $50 a day trading, and you spend several hours getting ready to trade for $50, how much are you worth an hour? Think about that, because you need to raise your expectations. You need to have a better, more self-confidence, and you have to have more understanding of the market, which will give you self-confidence, and then you will know and make more money and be more toward the professional. I have lots of people who are semi-professionals now and professional traders who come to me for more information because I'm a wealth of information. Sell-side institutions are the banks and the financial services companies like Goldman Sachs. They have the best of the best of the best professional traders on floors trading actively short-term, short-term, long-term, long-term, short-term, long-term, okay? All professionals, corporations use the sell side for buybacks. They also use them to also buy certain stocks. So they hire these companies to buy stocks for them for the long term or for buybacks to boost their stock price. High frequency trading is, and hedge funds are on the professional side, but they trade the retail side, public exchanges, private ATS venues, okay? So foreign funds, everybody wants to trade our markets because we have thousands and thousands of stocks, the Fortune 1000 group, and we have tons of ETFs, cryptocurrencies that are embedded in the stock market, and so on. All the small funds and all the small assets are here. They get in late, they buy on the dip. They haven't got a clue what they're doing. They trade with VWAP, it's a disaster. Memes, retail traders, they're slightly more savvy, but they still take a lot of losses. They get up, they're speculative traders or gamblers. The small lot investors always get in late because they often are told to buy on the dip, so they're waiting and they buy on the dip. Retail trading chat groups are really vulnerable to HFTs, and so they often lose. And odd lot investors are just gamblers. I want to make $1 million, I'm going to do it. So we have a special for you, so hang in there. And on the sell side, it's completely different. These are when the different groups come in and start selling. Now, buy side starts buying right in here. So as the stock starts to bottom, you should not be selling short. But most of you wait until you're near the buy zone. And then you try to start selling short. You need to start selling short with the professionals because they know what they're doing. But you need to recognize their patterns in the sell side and not be overreactive and try to just take pennies rather than dollars. High frequency trading also comes into this. So sell side institutions get in and they go, well, let's put our buy to cover way down here because we know there's a void of buyers right now. And then there'll be panic selling that comes down. And this works for a daily, weekly, whatever. The buy side start bending the curve of the stock of the trend up. So on a weekly chart, you're going to be looking for this bending because they're slowly, quietly rotating out. They're not selling all their shares. They're just lowering inventory so they can place it someplace else to adjust their portfolios. So they're slowly bending, 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 and then all of a sudden the sell sides and other professional traders go, the buy side is selling. Let's sell short. And that's That's what causes the big thing down. Some sort of news is set out there to scare you to death. And you and all of the other investors, not just you, but investors in general, small funds managers are in a state of seizure and panic all the time. And they get out very late. They're on denial. Oh, it's not a bear market. No, it's not a bear market. We'll buy on the bounce. No, it's not a bear market. No, it's a bear market. I'm going to get out here low. You have to be careful with those because they have no education. They have no formal training. They haven't taken any courses. They don't even attend a Metastock conference, and they should. They would learn a lot, and then they would do far better. Okay, so who controls price? We have a stock that is bottoming and coming down and pinging. And then we all of a sudden have a huge gap. This is quiet accumulation. They're accumulating and they're shifting the sentiment from selling by late sellers to the dark pools buying on a consistent basis. And of course, there's always a little that sells more, but that pings the HFT to gap the stock up. And then we have this nice tight price pattern again. This is not volatility. This is choppy sideways pattern created by TWAP orders. And then it runs up a little bit. And then everybody gets scared. The retail side gets scared. Oh, I got to sell. But then we have pro traders, nudges, and they don't worry about retail selling right here. That's no big deal. And then it runs up again. So you can see the dynamics of the situation that's going on here, the large lot versus small lot indicators, which really, really help. Indicators that front run HFTs. Using candlesticks as a primary price indicator is the first indicator. You will also need indicators you are probably not using, or maybe some of you are. Large lot versus small lot indicators. These indicators are often contrarian to price, revealing dark pool zones and pro trader activity. Dark pools and professional buy-side traders are independent traders do not move price unless it is out of the fundamental zone or out of the buy zone way below. Then they will move price. Most of the time, they strike the penny spread. What this means is the accumulation or trading activity will be very small candles most of the time, or a choppy sideways pattern. To differentiate these candles from void candles, you need large lot versus small lot indicators that tell you what side of the transaction the large lot completed. Dark pool buy zones are followed with pro trader nudges and then HFT huge gaps and runs. Volume is usually low when dark pools are in accumulation mode, as they use TWAP, time weighted average price orders. Smaller funds use VWAP, volume weighted at price, which is very fast. So you're mistaking VWAP orders that are smaller funds for large lot dark pools. Okay, so large lot versus small lot indicators. I've created 5 different leading indicators that tell you before it goes down. Whenever you see this huge blast of this TTQA blasting down, that tells you that it's the final capitulation of smaller funds. And then we have a steady incline that goes up with some selling going on that was tradable in certain instances. And I love these indicators because they tell you, oh, we're going to have a reversal. They tell you the day before. And that's really sweet. The day before it starts to go down. How sweet is that? And you always need a flow of funds. Is it going in or going out or starting to climb? So this is a shorter term for swing trading, day trading. This is for a longer term, but also gives you plenty of data and information. And again, large lot versus small lot is crucially important. It tells you what's going on based on what is happening, the length of the bars, the color of the bars, the position of the bars in relation to the candles. Has to be studied. It's not something that you can learn on your own. It takes a bit of time for me to train people on this, but once they have, they go, oh, wow, this is so much easier than what I was doing and more profitable. And again, volume oscillation is important. You need to use a volume oscillator. You need to use a flow of funds indicator that is slower paced that you need to know about. So let's summarize. In order to take advantage of HFT gaps and runs, you must enter the stock before the nudge gap, the huge gap up or down. You want to be in on the nudge. You want to be sitting there waiting and waiting and be comfortable knowing that you're in with pros, and the pros are swinging constantly 5 million share lots. I see it all the time. Early pre-market large lot order transactions. It's like, oh, oh, okay, they're thinking the market's going to go down today. 5 million, 10 million, 2 million, 20 million. Yeah, it's going to go down today. Oh no, they're buying like crazy. So they know that there's a lot of buy orders in the brokers because the brokers like the orders and they go, okay, yeah, I can do this. No problem. This requires honing your skills of chart analysis using the new candlestick patterns for price analysis rather than the lagging price and time indicators. The lag time on many price and time indicators is getting bigger and bigger. And so you may have 3 days up before it actually crosses. And that is not good. Plus you have floating action, and floating action in your crossover, all your crossover and price and time indicators means, and it crosses over and you think, oh, I need to sell. And then it just floats and the price is going up and up and up and you're not in it. You're not in it. You're not in it because your indicator can't tell you what's going on. Moving average crossover signal indicators are ancient. They were designed for a market that didn't have volume or accurate volume numbers. It was created for a market that was totally different, where everyone traded on the public exchanges. There were no such things as ATSs. ATSs venues have been around since 2002. When the So's bandits made such a mess of everything, and then the trading was so active and you could scalp like crazy in the 1990s and have a ball and just do great, those days are gone. The big banks and some of the buy-side institutions, mostly the big banks, went to the legislature of 2002 and said, the poor retail trader can't understand what a fraction is. We need to move to decimal. And the legislature said, well, that sounds so unfair to the retail trader. Sure, we'll tell the SEC that they have to change the price from fractions to decimals. Now, I know that most of you can handle fractions, but that was the excuse. The banks were losing money to the professional side, and they were very angry. So they were trying to do decimal trading so their short-term trading could make. What happened is a too efficient market. It was so efficient that nobody could make any money because I was moving a penny at a time. Yeah, so things have changed a lot. You also need to learn how to use large lots versus small lot indicators, also known as uptick versus downtick for penny spread trading, that dark pools and professionals use. You can see it on the after the market closes. Now remember that there's that 1 minute to 3 minute open cry option, which it really isn't open cry, but that's what they call it. Professionals. The professionals only can trade that. And they trade that last 1 minute to 3 minutes, and they set up for the next trading day. That's how they day trade. They don't buy and sell a stock in the same day. They buy the stock the day before and they sell it the next day. And so they avoid all of the SEC regulations about day trading. Sweet. Additional confirmation is the volume accumulation indicators that provide entry confirmation before the gaps or huge runs up. So you have a confirmation of volume accumulation. They're accumulating volume. We know that as the dark pools draw liquidity and draw liquidity and draw liquidity, that's going to cause a lower liquidity for that stock, which is going to cause the buyers to have to force them to pay higher prices for the stock. You got that? You see how that works? So as they're drawing, they're the most important market participant group to follow, because as they pull that liquidity out slowly over time, it's creating this demand, and price will start to move up. As soon as it starts to move up, they stop accumulating. Boom. And the pro traders take over and they go nudge, 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 however long it takes. And so HFTs finally see, oh, dark pools were in that stock. We can gap it up because buyers are going to be coming in because there's a shortage. Okay, there's an imbalance, not a shortage. There's always plenty of shares of stock to trade, but there's an imbalance between the sellers and the buyers. So they supply the buyers and the stock runs up. Okay, these indicators were designed and written by TechniTrader specifically for metastock charting software and are therefore proprietary. And you're all going to moan. Moan. Okay, let's get it over with. Why? Because these indicators are professional style indicators that require more education and analysis to use properly. When you learn to use these indicators, it will take your trading and profits to a whole new level of profit ease and use and consistency, and is worth it. It's worth the time and the effort and the money. I am not going to have people butcher my indicators and use them wrong. You have to be taught properly. So market analysis is another thing I'm really big on, and I have 7 different market analysis scans that I have embedded in Metastock that tell me momentum buy to the upside versus the downside. Where are the institutions? How active are they? Are they accumulating or in rotation? Consolidations. Where are the pro traders? What are they doing? How many stocks are in consolidations? How many stocks are in trading ranges? How many stocks are how much of the market is improving price over time, and how many stocks are in bottoms. And this gives me the market condition analysis that I give to my students every day. There's a subscription service. It's free with a course for a couple months, for a month or so, and it shows what the things are going on, and I tell you what's happening. I tell you the market condition. There are 6 different market conditions. I tell you the trading conditions. I tell you the bias. Is it up or down? Market open futures only tell you how the market's going to open. They don't tell you how the rest of the day is going to go. So all of these things, and then I have the 5 leading indicators that are proprietary indicators for Metastock, and everybody loves them to pieces. They're just great. So we have a 24 hours to claim your gift free starter course. Visit this page, https://im/ms0225, or use your little smartphone to catch the little icon. Choose a topic to learn. Apply the coupon code MS0225. Start learning for free. Access is for 1 week. There's 1 course per person. If you don't see anything here that you want to study, contact me at info@technotrader.com, and I will see that you get whatever learning you want to get for free, okay? Maybe these aren't interested to you, but if you are, you have a limited time to come into this and claim your free gift. So we have 24 hours and then it closes, and there's different ones that you can check and study and see what's going on. You can also ask questions or anything after this if you come up with this, and be sure and study the YouTubes that I've done before, because I cover a different aspect of the internal market structure, and you can build some knowledge based on that, which is critically important to you. It will make a huge difference in your course. I have lots of students that said, Martha, I don't know why I spent $50,000 on other courses when I could have just come to you first. I have beginners that go, oh, I can't believe how this has really changed my life. I have, I got the sweetest Christmas cards and things from students saying how much they appreciated the changes that I've made in their lives. And that's very rewarding. That's why I do it. Education isn't a big income. It isn't. If I wanted to make a lot of money, I wouldn't be doing this. I'm doing this because I want to educate you, and because I believe that when the retail side learns to trade better, that it'll be better for the whole market, and it will actually be a stronger stock market. It is the business of businesses. The stock market should have respect. You should not just look at it as gambling or speculation. I have a lot of professionals that work with me and come and study under my realm, even though they're floor traders for the sell side or the buy side as well. Internationally, they'll come and study with me because I have information that isn't available anywhere. Also, if you're successful or you want to take and earn the IRS or other national tax benefits that are in as a professional trader, trader tax status is what it's called in the US. It's called something else elsewhere. You can study that under my courses. I have a lot of different courses for professionals to very, very new beginners and things that are going on. And I've been doing this for 27 years now. It's in my retirement. It's my legacy. This is what I leave behind, is this knowledge base that I give people, and I keep expanding on it because the market keeps changing all the time. And giving this information out helps you stay ahead. Instead of, I say, don't trade like it's 1999, because it isn't. It's 2025, and you need to understand what's going to go on so you can profit in this market rather than have whipsaw trades and losses. You shouldn't be taking, you should have, my students can't go live until they're 70% success on their simulator. So, and 30% are very small losses because I teach a unique type of stop loss placement. Howard Johnson, the co-founder of TechnoTrader, designed this. He also designed a special, very special order type that is unique to TechnoTrader. He called a market maker named Herzog, and he was on the phone. He was on talk. I came into his office, and I'm saying, "Who are you talking to?" He says, "Market maker." I'm going, "Market maker, what are you doing?" Anyway, the market maker asked Howard if he could use his special order type in his market making, and Howard, of course, was so pleased. He said yes. So the order type that we teach is unique. It's proprietary. It's only for students, and it gives you the added edge that, and that order type has been changed somewhat. Professionals still use it to this day. I'm very proud of Howard for that. So I will take any questions at this time if you have any.
Have questions. So Cynthia wants to know if you have any thoughts on volume weighted average price.
On what?
On VWAP.
Oh, I have very strong negative feelings about that.
Okay.
I feel that it shouldn't be used by the retail side because it accelerates the selling down faster and there's more risk of losses. And you can watch it and you can see what's going on, and if you can use it to your advantage, that's fine. But it is a very dangerous order type, and it should be on the professional side, not on the retail side, in my opinion. But that's my humble opinion. That what you want to do is you want to control your entry and you want to control your exit with specific order types that do that, rather than say, okay, let's do this, and if in this order we'll just start rolling through, and then you have no control over what happens. You have to always have absolute control on your orders at all time and know when to sell and when to buy, and take high profits and minimize your losses. So it's a tricky thing to use because it can get out of control really fast. It has caused several flash crashes, and the SEC doesn't like it.
Sorry, I didn't mean to cut you off there.
Sure.
Cynthia and Uday chimed in again and say, do you have a different opinion about anchored VWAP?
No, I don't, because it's still a foundation basis. It is. I know they're proposing these, but they're proposing them for their advantage, not yours.
Let's see, Bob wants to know, when HFTs place orders, do they do a lot of little orders or do they just do a big one?
No, they do little orders, because if they did a big order, the computer cruncher would go, wait a minute, this is a large order, and it would totally change the dynamics. So they actually do 100, 200, 500 is about the largest they do. And they scatter them, and then they put in thousands and thousands of orders just before the bell rings, just before. Yeah. And then, they're in the milliseconds. So all they need is a second to do that.
All right.
There's
Let's see.
10 big guys out there that do that. Yeah.
Patrick wants to know, what is the course cost and the duration of them? Now, you're going to get a course for free, and I know you have a number of courses, but can you?
I have about 52 courses now. So it depends on what your needs are. Courses can start as low as $100, or for my professionals, they can go up to about $5,000 if it's a professional that's learning. So that's the range. It just depends on what you need. We have to talk and see what it is. I don't want, all of you have training, all of you have education. Every bit of that is useful. There's nothing that you have learned that isn't useful. But you have big holes in your education, that are really, really hurting you. And you don't have some of the special tools and the things that we put into the courses. And you don't have the student mentoring that we do. We have a student mentoring thing that happens every month, and it's really fun for everybody to get together and talk about what's going on. We have discussion groups, we have communities. They're all private. Nobody can get in and do anything, but you get to talk to professionals as well as us. And we have that. We have an extensive library of Q&As. And every day I write a DME, Daily Market Educator, and I choose a different topic and we go over it. Sometimes there's homeworks and things. There's a very intensive course if you're taking one of the major courses that we have that are called the Methodology Essentials. So first of all, we have to find out who you are, what you know, what you've trained, what you want to trade, how you want to trade, how much time you have, your risk tolerance, that type of thing. I don't need to know. You can say I have a small capital base or a large capital base. I don't want to know what it is, but you know, if you have a very small one, that makes a difference on what we do and how we manage that. So it's very specific. There's not one course fits all because you're all different. Every single one. I have never had two students that were exactly the same, and I've had thousands of students over 27 years. So.
All right. Timothy wants to know, with all the AI that starts to hit the market, do you think this is going to massively exaggerate the speed of the market as well as the volatility?
Okay, we tried to go to 90,000 millisecond. We tried in 2006 and 7. We tried to go to 90,000 and it didn't work. It was just too fast. So everybody decided that 60,000 would be the millisecond max that it would occur. What is going to happen is that the analytics behind the scenes, not the actual transactions, but the analytics behind the scenes, AI being used by dark pools to say, okay, we have quantitative analysis. We have all of this analysis of this company. We want to study the fundamentals going forward, the projections, the estimates, the outlooks, and all of this. We want to study the industry, da, 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 da. Well, that takes a massive amount of human brain and a lot of time. AI can do it in minutes and give them an assessment of what the projections and probabilities. They call it predictive in a lot of areas on the professional side, but we're not predicting the market. We're doing probability analytics. But a lot of times you'll hear the word predictive and then everybody says, oh, you can predict the market? No, we have no idea what it's going to do tomorrow. No, you can know what it's going to do in a near term of 2 to 3 or 4 days. But you get it out a year, 2 years, who knows? Who knows? Would you know where we would be in 2023? Where we would be in 2025? Nobody can predict that. So when you see predictive, it's probability. Their probability, and what they want to do is get that range so that they can manage that return on investment percentage, and that's what they're worried about. So, yeah.
All right, I think last question. Sri Dharma wants to know if this is applicable on markets outside of the US.
Oh yes, I have lots of students in Europe. I have students in Australia. I have lots of students in Canada. I love my Canadian students. I have students in Africa, some African students too. Yeah. So pretty much worldwide. Oh, and India. Yeah, we have some from India as well.
Cool.
Just trying to think. Yeah.
One more last question. Wu wants to know, where is the information of, is there a place where you can see where the dark pools are buying? Is there a research reference you can use?
When they say dark, they mean dark. HFTs tried to sneak into the dark pool ATS venues, and SEC slammed them shut and fined them big, billions of dollars for doing so. Is dark as is intended because it is the vast wealth of the United States and of Europe and other countries is residing under the umbrella and the hands of the buy-side institutions. $300 trillion of assets worldwide. That has to be protected at all costs. You can't have front running. That's why they built the dark pool. So there would be no more front running. There'd be no more SOS bandits. There would be none of that going on. And the SEC was right to do that. You have to keep it dark. Otherwise, everybody's retirement accounts and long-term investments are at risk. Yeah.
All right. Great. Thank you. Good job, Martha. You can get the free course if you go to ttrader.im/ms0225. If you want, you can type that out, or you can click on the link that we've put in the chat for both YouTube and GoToWebinar, and that'll be a little bit easier for you. The coupon code for that is MS0225. Martha, big thanks. Great job today. I appreciate it.
Thanks. Bye.
All right. We're going to do this. I'm going to go ahead and take control. Thank you very much again, Martha. All right. I'm going to make me the presenter here. And we'll go ahead and show my screen as well. All right. Very cool. Do want to say thank you to Martha. I also want to thank the Traders Forum for being a sponsor of today's event. You can join the Traders Forum for free. With that, you can learn a lot about lessons about technical analysis. You can live chat with other traders, learn a lot about candlesticks, the markets in general. It's designed to be a community of traders, helping traders, and you can join for free, thetradersforum.com. Thank you to the Traders Forum for sponsoring the event today. Of course, we are Metastock. Metastock has been rated the best software in its price category for 32 years in a row. Our newest update to Metastock DC will actually give you delayed updated charts all day long, which you can scan against, you can look at, all that kind of stuff. We have a full-time, real-time version. Prices start at $75, and you can do a trial where if you buy a month, we give you the second and third month for free. So for $25 a month, you can do that trial, and that'll run you until the end of May almost. So go ahead and set that up. There's a reason it's been rated #1 in its price category for 32 years in a row. You can do that at metastock.com/conf promo, metastock.com/saleschat, or you can give us a call at 800-882-3040. Okay, I see your request for the website. It's technotrader.com, and I will post that. Well, we'll get that posted up in the YouTube channel as well. I was going to say I'll post it, but I can't actually post links in YouTube. They don't let me. Greg can though. Kelly, before I get you started, I'm going to have you give me a hand for a second. Let me know when you're ready.
I'm sorry, did you say Kelly or Greg?
Should I just put up a hand?
Oh,
sure.
It's Kelly. If you want to.
Sorry, Greg. I'm stepping in.
Well,
you can help later, Greg. Don't worry.
I'm pretty sure that Jeff thinks he's qualified to introduce you. Well, I'm telling you, I'm not going to introduce you, but if I had the opportunity, I'm sure I'd do a much better job.
Well, first we're giving away a prize, though,
You're
right?
the best boss ever, and I know it. Jeff may not understand that.
All right. Yeah, you'd probably do a better job. In fact, if you want to introduce him, I'll let you do that right now.
Oh, no, far be it for me to horn in. You fellas go on ahead.
All right. So we're going to give away a prize.
Yeah, let's do that.
We're going to give away a 3-month subscription to the Option Strategies newsletter by Larry McMillan. Larry spoke yesterday. That's a $99 newsletter, so about $300 value, $297-ish. Let's do math in the morning. Larry does a really good job. He wrote kind of what is considered options as a strategic investment, considered by many to be the book to read if you're interested in doing options analysis. And so we're going to give away a 3-month subscription for him. Kelly, I'm going to do it a little bit differently right now, simply because I'm booting up a new laptop and I haven't pulled a full list. But you know, when we do these events, it's really important to have audience interaction. You know, it helps. If you're watching on YouTube, it really helps. We love to see questions. We try and answer them as best as we can. So what I want to do is I want to reward some of that audience interaction. Would that be okay with you?
Works for me. Let's do it. So
what I'm going to do is I'm going to load up this whole list of questions that have been asked in GoToWebinar all day, and comments and whatever it might be. If you said something in GoToWebinar, we're going to randomly pick you. And the way, have you ever seen us do this, Kelly?
Nope, I haven't seen this one.
What I generally do is I take a look at Corey right here. And I'll just start scrolling slowly. And at a point, you're going to say stop, and that's where we're going to stop.
Okay.
So I'm going to go ahead and look at Corey. He's busy programming Metastock over there. And I'll just have you tell me when to stop. I'm going now.
Stop.
All right. Earlier today, Tracy M said MSTR. She wanted somebody to look at MSTR. I do not. It was when Daniel was talking. So Tracy, for that simple request, you just won a 3-month subscription to Larry McMillan's newsletter. So there you go.
You're welcome, Tracy. I'd like my access too.
We could probably get you. I could probably hook that up for you. Let me go ahead and make you the presenter.
All
Let me
right.
go ahead and talk a little bit about Kelly. Kelly's been with Metastock. How long has it been now?
23 years.
It's been 23 years.
Too. Kelly started with me in the sales team, and now he's what we affectionately refer to as the decider. Every time we have a question, we kind of go see him. His official title is president, correct?
Yes,
Yeah,
correct.
correct me if
Yes.
I'm wrong. Yeah, he's great. He's great to work with. One of the friendliest guys you'll meet. We absolutely love him around the office. And despite what Greg says, he's handsome and intelligent. So,
Oh,
there you go. Without further ado, though, I'm going to get out of the way. Kelly, it's your turn.
all right. Well, hey, well, thanks for that introduction. Well, hello, everyone. Thank you for being here at the conference. We appreciate it so much. And, I'm going to, as my side here, thank Jeff and Greg for all the time that they put into this conference and making sure that everything runs smoothly, everything runs efficiently, and you're getting all the information that you're here for. So thank you to both of them for all their hard work. It is a lot to put this together. For me, what I want to talk about today is powerful trade identification, ways that you can use in your everyday trading to identify powerful trades. So that's what we're going to talk about. So let me go ahead and jump in. And of course, the first thing that we do have to do is read our disclaimer. So I will go through that as one of my decider things, is that we have to read our disclaimer. So this demonstration is designed to instruct you on using Metastock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as an investment advice or solicitation to buy any security. So that's the fun part. Now let's get on to the good stuff here. As Jeff has talked about, if you were in Jeff's presentation yesterday, you learned a lot about the history of Metastock. Jeff's been kind of talking about what Metastock does and how it can help you in your trading, since we are the sponsors of the conference. And Metastock really has been around a long time. I mean, if we go back to 1982, kind of the birth of the computers, everything was coming out. And Steve Akalis had the foresight to sit down and create a computer software so his dad would have to stop charting by hand each and every day. I mean, that's cool. That's why he invented Metastock to start. So we go back to 1982, purchased by Reuters in 1995, so we could be their premier technical analysis charting software for their institutional traders. Then they let us start using their real-time feeds out to retail traders back in 2005, called Quote Center. We then changed to Metastock Zenith in 2012. And Metastock has just continued to grow over the years. We've grown more and more in the user bases, the countries that we're in, people who use Metastock. Technical analysis is so important to the trading you do today. Charting is key. And we're going to talk a lot about that today as we kind of go through the presentation. But again, Metastock has won the Stocks and Commodities Reader's Choice Award for more than 32 years. I mean, it's awesome. If we can win it for 32 years, it's something you should be using. And let's talk about why you should be using it, okay? But first, what I want to talk about is a little bit of the emotions of trading. Because trading, as much as we try and take it out of it, is a very emotional thing, right? When we trade, we get that excitement from that trade that's going up. When that trade is going in the direction, either up or down, if we're going long or short, when we're making money, this is how we feel, right? We are excited, we are pumped up. We just want that trade to keep running in the direction that it's going and making us money, because that's what we want to do as traders, right? We want to make some money. So we feel this way when it's going our way. When it starts to go against us, we start to get frustrated, right? We start to lose our cool. We start to think, hey, this has got to turn around. This has got to keep running. I've got to keep making money like I was making money. So let's turn this around. Let's get back to that other feeling. And it keeps going against us. We just keep It keeps going against us. We don't get out of the trade. It keeps going down. It keeps going down. And then we just get deflated and we think, what just happened? What was my roller coaster of emotion? And the one we really want to focus on again is this emotion, right? We want that success. We want to be successfully trading. And that's not going to happen every time. I mean, we wish it could, right? We'd all be bazillionaires and living the lives we wanted to live, but trading can be difficult. So what we need to do is we need to talk about having a trading plan. So one of the things I really like to focus on here is a cockpit here of a plane. Now, Jeff did a quiz yesterday asking about which profession ended up being the best trader after they've left their profession. And if you were there for that quiz, one of the answers was a pilot. And that's typically correct because a pilot, when they are trading, tend to follow rules because they're used to following rules. When a pilot gets into the cockpit of a plane before you take off, what they have to do is go through a checklist to make sure that everything is in order before that plane pulls away from the gate. And if they don't, well, that's when things go wrong, right? We've seen an increase in airplane crashes recently. I actually really enjoy a show called Airplane Disasters. I don't know if you've ever seen it, but it's a show about airplane crashes and what happens in airplane crashes. And the reason why I enjoy it is I enjoy the walk back. So they go through the accident, show what happens, and then they show the investigators who go through and try to figure out what happened and what went wrong. And oftentimes, if it isn't mechanical, if it wasn't something in the plane that went wrong, it's because the pilots didn't follow their checklist. They didn't follow that step-by-step instruction that they had to in order to make everything go smoothly on your plane. Okay, and so what we want, and then what happens is when that happens, they'll go out, the investigators will make recommendations as to what should change to actually change pilot behavior or mechanical behavior or updates. And those are the kinds of things we need to be able to do in our trading. We need to say, hey, this went wrong. What did I do wrong? Where did it happen? And how can I correct that next time? And that's part of a trading plan, is understanding that and being able to develop and see what went wrong so we can improve in the future. And we're going to talk about some ways that you can actually do that in the software to help you gain more confidence in your trading. Now, I should mention as well, if you do have questions during my presentation, feel free to ask. I am happy to stop and answer any questions as I go through it. But let's go ahead and talk about trade identification and what trade identification is. Well, I mean, obviously trade identification is finding the best things to trade. Now, I say best stocks to trade. It may be futures, it may be crypto, it may be Forex, whatever it is you trade. How do you find the best opportunities to take? When you should get in and out of a trade, how to test your system before you spent your first trading dollar, okay? How you can build confidence, and that's a big part of trade identification. And then finally, how to add clarity to your trading decisions. This is really what we're going to focus on today. Okay, so to do that, when we're trading and we're using technical analysis to trade, we need to understand the indicators that we're trading with. And when we talk about indicators, there's really four main categories of indicators. Okay, and those types of indicators are trending indicators, momentum indicators, volatility indicators, and volume. And they kind of break down, you've heard of a lot of these indicators, but maybe have not classified them before. So if I talk about trend, well, I'm talking about things like moving averages, MACD. Those are trending indicators and help identify trend. Momentum indicators would be things like the stochastic or the RSI. So if you like to look for momentum trades, these would be the type of indicators that you would use. Volatility would be things like Bollinger Bands or average true range. And then finally, volume would be, well, volume for one, and then on balance volume, Chaikin money flow. Now, obviously, this isn't a comprehensive list. This is just some examples of what you can actually use when you're trading. Now, the question is, well, what do I use and which one applies to a specific chart that I'm using? One of the things we kind of encounter when we're trading if I was to pull up a chart, which we will in just a moment, if I was to pull up a chart and look at the daily chart, and then I go to a 5-minute chart, are those going to look the same? There's going to be some level of similarity, but the 5-minute chart may be more volatile while the daily chart is more trending. It just depends on how you're trading. So the same indicator may not work the same, even though it's the same instrument. Okay, so that's something we have to keep in mind, and we'll talk more about that. So again, so if I look at this chart, this is a Best Buy that I'm looking at here. How do I know out of that group of indicators which I should be using? So what we're going to do today is we're going to talk about 2 main workflows. Okay, one is using your preferred indicator to find trading opportunities on whatever time frame that you're interested in. And then the second workflow we're going to go through is how to find the best indicators on a specific instrument that you're trading. Okay, so those are our 2 workflows that we're going to talk about today. And we're going to be going through these 2 different workflows and spending most of the time now in software. Okay, we're not going to be spending any more time in PowerPoint. But what I want to talk about first is market scanning. Now, one thing I wanted to talk about first, just to kind of go back to something Martha said. And if you didn't listen to Martha's presentation, it was a great presentation. I always love listening to Martha. She's got such a depth of the market. She really understands what traders need. She's done intensive research. I really enjoy listening to her and her depth of knowledge. So one of the things she talked about when she was going through her presentation was candlesticks. And she kind of threw out that, you know, as you're learning and going through, it's important to be able to look at a chart and understand what's happening with, say, candlestick patterns. Now, that can be easy for some people, and it can be difficult for others, because it may be hard to look at a chart and say, well, I can tell every pattern that's happening on there. And if I was to ask everybody in here, hey, could you identify every chart pattern on this chart for me based off of candlesticks? The answer would probably be no. I mean, there are books upon books of candle patterns and what they mean and how to interpret them. And that's one thing that's great about Metastock, is I can go into a tool here that we have in here called the Expert Advisor. And what the Expert Advisor can do is it gives us expert advice, right? It can actually go through and identify for you on your charts whatever it is that you're interested in, say candlesticks, MACD, RSI, stochastics, Bollinger Bands. It can give you some expert advice based off of what's happening on those charts. So if I look at this expert, you can see it's highlighting and giving me text here about different candle patterns that are actually happening on my chart. So I can say, oh, well, that's cool. I have a hammer right here. Well, what does that mean? Well, you can go into our expert commentary. Okay, and I'm right here on the hammer. You can see I've got this little arrow down here showing me I'm on that hammer, and it's going to explain to me what a hammer is and how it relates to what's happening on the chart right now, because that's important. You know, if I were to go read a book and say, well, a hammer means this, well, how do I interpret that on the chart I'm looking at? That's where the Expert Advisor comes in. So a hammer here a hammer has a long lower shadow and closes near the high. Hammers must appear after a significant decline or when prices are oversold to be valid. When this occurs, it usually indicates the formation of a support level and thus considered a bullish pattern. Okay, so we had another bar that went up after that and then a decline. Okay, so it kind of goes through, but it also tells you any pattern that's happening right there on that chart. And I can just click on any of these candle patterns to get an idea of what they mean. Okay, so if I were to go to the current bar, okay, it's got a long lower shadow. This typically is a bullish signal, particularly when it clears near a low price level at a support level or when the security is oversold. Okay, so we've had this reversal down and we've got this long lower shadow. So you can see that long lower shadow there. Okay, so the Expert Advisor can really give you some great things. And this isn't just candlesticks, it's just about any indicator. So let's take, for example, let's talk about the MACD for a moment. We're going to use the MACD in our market scanning. Okay, so let's pull up the MACD here. And I'm going to put the MACD on the chart. Now, if you're not familiar with the MACD, again, it is a trending indicator and it helps us identify trend when trend is happening. Okay, the way we interpret this is we look for crossing of the signal line here to identify buy and sell opportunities. Now, so this would be a buy right here because we have a crossing above the signal line. And then here would be a sell signal because it's crossing below. Now here, it's a little tough to see if it's crossing. So that's where the expert advisor can be really awesome right here. So let's change our expert and let's look for the MACD. Okay, so we can see our MACD buy signal here, right where we said the signal line crossed. Okay, and then we have our sell signal over here, right where it said it crossed below. So this is my buy. So we didn't have any crossings in here, even though it was very close. So we had a buy here and a sell here. Okay, so the MACD is really very basic in the way that it works, but there's actually 4 different ways that you can identify opportunities. You can have a buy signal, you can have a signal line crossover to the bullish or bearish side, you can have an overbought or oversold, and then you can also have a divergence. And the expert commentary over here will always tell you if one of those things is happening. So let's do this. Let's start by actually going in and doing some market scanning. So market scanning is a way for us to identify if there's a current opportunity based off of our strategy. So we're going to look for the MACD expert system here. So this is going to be a buy signal or a sell signal or an overbought or an oversold. Okay, so it'll look for those 4 things in this one scan. And then we'll just go through and let's go through the S&P 500 here. Okay, so I've got the S&P 500 selected. So it's going to take the MACD on the S&P 500, and then here I need to tell it what time frame I'm looking at. So I want to just scan on a daily basis. Now, Jeff kind of alluded to this a few minutes ago. So I'm using our Metastock RT version, which allows me to look at 1 minute, 5 minute, 30 minute, 60 minute. I can do delayed. If I pay exchange fees, I can do real time. If you have our Metastock end of day, you can look at daily, weekly, monthly, quarterly, yearly. But our new version of this, using data powered by Metastock Zenith, will actually allow you to scan on delayed data during the day on the daily bar. So it's actually really cool. So that $74.95, you're getting daily delayed data, so you can scan and look for setups during the day or before market close, which is awesome. So let's go ahead and start our scan here. So what this will do is this will just go through and look at those 500 stocks for me to see if there's any that are matching any of my criteria. So we're taking out about 90% of them. So about 10% of the S&P 500 have either a buy signal today or a sell signal or an overbought or an oversold. Okay, we're going to get that information here. Okay, so you see we have 67 results. So if I come down here, I can rank on any of these columns. I'm going to rank on buy here first. So let's see how many buy signals they are. So I'm going to just go down, and the buy signals are represented by these ones. So if I select them, I can see that 14 have buy signals today. So that's where we're sitting. Okay, and then if I rank on sell signals, got a lot more sell signals than buy signals. We've got 34 sell signals. Okay, and then I could do the same with overbought, oversold. So we're definitely having a more bearish day because there's more sell opportunities than buy opportunities. But our question here is now, okay, well, great. I have 67 opportunities that might present themselves here to me to say, well, what should I trade? Out of these 67, what is the best stock to trade? And that's the question. So I could open up and go to Hormel Foods here. I'll just open up the first one, and let's put the MACD on here. Okay, so we have our buy signal. We have our signal line crossover. How do I know that this one's the best one to buy? How do I say that out of the other 66, how do I know that this one's the best one? Well, what we want to do is we want to do another step here to identify the best trading opportunity. And what we're going to do is we're going to do some back testing. And what is backtesting? Well, backtesting is a way for us to quite simply look at how it worked historically to give us a good idea of how it might perform in the future. Now, backtesting is not a crystal ball. It's not going to give us, it's not, you know, it's not going to give us the future here. But it's telling us that something has worked historically to give us a better idea of if it is going to perform well in the future. Let's talk about that. So let's look at what this definition here is. So backtesting is a method of evaluating a strategy or model's performance by applying it to historical data. It's commonly used in finance to assess the viability of trading strategies. It's used by all level of traders from beginning to institutional level traders to identify the best opportunities. Now, when I talk about backtesting, sometimes it's tough. You know, we're talking about going through and doing all this work to see how something has performed historically. But what I can tell you is this: it's not just retail traders that use backtesting. We talk to institutional traders here every day who need backtesting, who are going through and saying, how do I take my system and test it against a basket of securities to see how it's working? Okay, they have to prove the analyses that they're doing each and every day. And backtesting is a great way for them to be able to do that. Before a strategy is implemented, if you don't think that it goes through rigorous testing to make sure that it's a good strategy before a hedge fund or bank starts trading it, well, you know, that's okay. But, you know, it is what they are doing. They are using these methods every day to make sure that the methods that they are trading are being implemented correctly. Okay, so let's talk a little bit more about why to use it, and then we're going to go in and jump through and show you how this works. Okay, so why use it? One, backtesting can help traders identify strength and weakness in their strategies. Can help you make more informed decisions. Well, we say that twice there basically. Manage your risk, understand how a volatile asset class can be and how to manage the risk, improve your confidence, and backtesting can help traders increase their confidence in a strategy by showing them how it would have played out over time. Okay, the big one I like here is improving confidence. That's what we want to do when we're stepping into a trade. We want to be confident of that trade, right? That's what we're after as traders, is confidence going into a trade. We want to be that happy guy at the beginning. So let's talk about system testing and how to use it. Okay, now remember we had 67 trading opportunities that had presented themselves. So if I'm thinking about which one of those I want to do, I want to find out which one has performed best historically. So I'm going to go into my system tester here. And what I want to do is I want to find the MACD again. Okay, so we're going to do the expert system here. And then I want to go down in my list here in Metastock. You can select the last exploration results. So these are all 67 stocks that I just had identified. Okay, so now what I want to do is I need to tell the system tester a little bit about the way that I trade. Martha said this really, really well in the last session. Every trader's different. Every trader has a different amount in their trading account, has their own risk tolerances, you know, has studied different ways of trading. Every one of you is different. And if I was to ask each of you those questions, well, how much do you have in your trading account? What is your risk tolerance? Obviously, those I don't want to know that. Like Martha said, I don't want to know how much you have in your trading account. That's you, that's personal. But what we do want to do is tell that to the system tester. And this isn't on the server side, this is on your computer. So whatever you put in here is up to you. But you can say, well, I trade long trades, short trades, or both. Okay, so if I'm going to say I go both because I found opportunities that were both long or short, but I can say, hey, I'm just a long trader. That's the way I trade. You can put that in here. I want to tell the system tester how far I want to look back. Now remember, we found an opportunity on a daily chart. If it was on a 5-minute chart, I'd want to change this to 5-minute or weekly or whatever it was. Okay, so I'm going to tell it to look back over the last 750 records. And what that means is we're going to look at 750 days. And that's about 3 years of trading data because there's about 250 trading days in a year. okay? And then we're going to go in here and just set 1 or 2 more options, and then we'll be all set. Okay, this first tab here is just a reporting tab. We don't usually really do anything with that. The account tab is really the biggest one, okay? Because here you're telling it how much money you have in your trading account and what you're willing to risk, because that is going to be different for every person here, okay? So for my example here, I'm going to put in that I have $100,000. Well, you could put in that you have $1 million or $1 billion. I mean, if you want to feel like a billionaire, you can feel like a billionaire and put it in here. Or you can say I have $1,000, whatever it is, whatever your trading account is, just put it in here. And then say how much of that you're willing to risk. Okay, so in my example here, I'm willing to risk 20%. Now, do I really recommend risking that much in a trade? I do not. I do not recommend putting that much of your assets into there. Why am I putting that here for this? Well, it's just an example because the math is easy. So if I have 100,000, I am willing to risk 20% of that. So I'm going to risk $20,000. If that account goes up to $200,000, well, now I'm going to be risking $40,000. Okay, so it'll adjust and play with it. So that's kind of why I do that here for this example. You can also here set if you like to just trade 100 shares at a time, 200 shares at a time, 1 million shares at a time, whatever it is, you can say I trade that based off of number of units. You can also do transaction cost, where you just say, well, I'm only going to trade $10,000 at a time in any given trade. You can do that as well. So the system tester is very, very flexible in the way that it lets you define your personality here. If you're a futures trader, you'll want to put points only test. That is the way that futures are done, is by points. Broker, you can put in here if you pay commissions to trade. Some markets you still pay commissions for trade. Futures markets, some different international markets have you still pay commissions. Luckily here in the US, mostly we don't pay that. If you trade on margin, you can put that information in here. And then finally, trade execution. So this is our last option. And really, you don't have to touch it. Really, the big thing that you want to mess with is just the account tab. Trade execution is if you get into kind of some advanced system testing, you can say, well, for example here, we say realistic market prices. Well, what does realistic market prices mean? Really what it means is, if I have a buy signal today on a daily bar, when am I most likely to get into that trade? It's typically the next bar. We want a closing confirmation of the bar to buy on the next bar. Okay, so that's what realistic market prices is. If you wanted to change that, you can do that here to say, well, I want to actually buy at the low of the day or the high of the day. So you can change that, and you can say, well, I don't want any delay. I want 0 bar delay, so that means you get in on the current bar. Or I want a 3-day delay. You can set that. But let's go on the next bar. Okay, then you can put some slippage in here. And slippage is, well, you know, if you're getting in on the open of the bar, are you really getting in right at the open? Maybe it's a 1% move or something like that. So you could put that in here as well. Okay, that's all we need to do. And then once you've set that, if you're comfortable with those parameters every time, you never have to go back into that again. That's a one-time thing, so it's very easy to get into. Okay, so let's go ahead and run our test. So what it's doing here for us is it's going through and crunching and taking every trade on all 67 of those stocks over the last 3 years. Okay, and then it puts together for us a result here. So what you're seeing now is how these stocks performed over those 3 years and how they grew. So let's take a look down here. So I've got a few columns here. I've got my instrument symbol. We did a daily, my date range, my net profit, my percent gain, my number of trades, trading profit loss, and average profit, average loss. So let's rank here on percent gain. Let's see what this looks like. So if I'm looking at this and I walk in and I go, okay, well, I have an option here to trade 67 different stocks. Well, and I'm trading based off of the MACD, well, instantly I'm going to lop off these, right? These have not historically done well using the MACD, so why would I want to go trade them? It wouldn't make any sense. Historically, they've been poor performers. let's wipe them out. We take them out. Okay, but let's maybe focus in on just our big ones. Let's see how they've done. So Ford Motor Company here was our best performer over that 3-year period using the MACD of today's signals. Okay, so we had a net profit of 21,000, which was a 21% gain. That took 126 trades, 63 were winners and 63 were losers. Okay, so that's really interesting. That doesn't happen very often. But so I had the exact same number of winners as I had losers. Well, what does that tell me? Well, it tells me that my winners were probably big and my losers were probably small. Now I can identify that a little bit more by diving in here and going into this analysis. Now there's a lot of information that comes out of system testing. You can really dive in and you can really crunch and you can really analyze. If you're a very analytical person, you're gonna have a great time system testing. A lot of us aren't very analytical. We just want some key points of information that are going to help us understand how well it's worked. And that's what I want to focus on, is just that kind of critical information. Okay, so let's look at my average profit was $988. My average loss was $657. Now there's one thing I want to clarify here. Okay, so my average profit was about 1,000. My average loss was about 657. Now, you may say, well, what stops did you use? Well, actually in my system testing, I did not use any stops. Would you want to use stops when you're trading? Absolutely. Now, the reason why I tested it this way is because I just wanted to see how the system stood on its own. Did the MACD perform well on its own 2 feet without any stops? Now, of course, I would trade with stops when I was trading. But here I just did it this way. Can you put your stops in on system testing? Absolutely. So if you say, hey, I always use a trailing stop. If it goes down 3%, I'm out. You can programmatically put that into Metastock. That is not an issue at all. So you can test using that data if you want to. And that's important to note. But here I'm just, again, seeing how it stands on its own. Let's see. So our highest profit was 6,800 and our highest loss was about 41.95. Okay, so what I want to do is, again, so you can go through how every order looked when you placed it. You can go through the positions and see what they look like, check efficiency. What I want to do is focus on one thing, and that's this equity over time. So this is our equity line. So this is how Ford and my money have worked together. Let's take a look at how Ford and my money have done together. Okay, so this is my initial investment, $100,000. And then these are all the periods that I tested over. And this is what my money did trading Ford over that time. So you can see going back, Ford traded really, really well right here, and then kind of went flat, went really, really well right here. And then what's been happening trading the MACD and Ford over the last year and a half? It hasn't really performed very well. So that's, now if I'm looking at this and I'm saying, well, okay, well, it performed well 2.5 years ago, but it's not performing great now. If my equity line looked like this right now, this would be a higher consideration. But the way that the equity line looks now, it's actually losing money. It made all its money back in time. So that's actually not something I'm interested in. So I'm going to throw this one out for me. Let's go to CarMax. Let's look at the equity line there. Now think in your brain, what you could say it out loud because you're home and your microphone's not on, mine is, so I'll say it out loud. But think about what you think about this equity line compared to the last one we just saw. So this equity line, it's a little choppier, but what's my money doing over time? It's going up. So trading the MACD, it's going up slowly. Okay, so this versus Ford where it was going down. So this may be more of a consideration for me than Ford because this one has actually been performing well in the recent history. Okay, let's look at the next one. okay? Now let's look at and this is so important as part of our analysis and system testing, is understanding what our money's done. And if I look at this one and go, okay, well, is this how I want my trades to look? Do I want this big whipsaws in my equity going up and down? Well, no, I'd rather have smooth, consistent trending up, right? So if I look at this one doesn't appeal to me either. So now I've got 1 out of 3. And you don't have to go through 67 of them. I tend to go through maybe the top 5 or 6 when I have this many, and then just pick 1 or 2, right? We don't want to spend a lot of time analyzing. We want to get right to the trades. Okay, so this one, okay, this one has been fairly consistent up over time. The last 30 bars or so, it hasn't been working trading it. So a little iffy, but the overall picture I really like on this one. If I wasn't looking at the last 30 bars here, I'd be like, oh, maybe this is one I consider. And again, I am not making any recommendations about what you should buy or sell here, but just showing you how you can interpret this to actually look at it. Let's look at Intel. Okay, kind of choppy. Again, I'm looking for that smooth, consistent, which is more what we saw kind of with CarMax. Okay, that's kind of smooth and consistent. So that's one that we could consider. Now, what I'd like to do, because I spent a lot of time kind of walking through how to do all this, I'd really like to quickly show you how I could take this with a different indicator. Let's maybe do RSI and walk through the same process without, that's actually relative strength. Okay, so we're going to do the same thing with the RSI. We're just going to go ahead and scan through that same S&P 500. We're not even going to open a chart. We're just going to go to and find opportunities with the RSI, back test them, and see which one, just to show you this quick workflow. So I've set up my scan. It's running through. It's identifying opportunities for me. Let's see, Kenneth, I'm going to come back to your question in just a second. I like that question a lot, so I'm going to come back to that here in just a second. Okay, so we have here 25 results. So let's do the same thing. Let's go over to System Tester now. Let's look for RSI. Oh, I need to. Okay, let's check the RSI. Well, I have 2 selected here, so let me go back and unselect the MACD just to make sure we're only doing 1 test here. Okay, so now I've got the RSI against those 25. I don't need to check any of my settings. I'm just going to go and run my system test and see what information I get. Okay, let's go ahead and view results. Okay, same type of thing. Let's rank here on percent gain. Let's go into Starbucks. Let's look at our equity line. Okay, and what do we think of that equity line? Okay, for the most part, very smooth and consistent. We did have some drawdown and choppiness here, but what's this doing in recent trades? We're having some pretty good go, right? So that's it. So if I like that equity line, now I've got myself a contender for something that I want to trade, because I understand historically that this has performed well and I can throw out other trades. And that's what system testing is all about. Okay, I know it can be, there's a lot of math going on, there's a lot of different things, but if you could just scan, look at the equity line, understand how it's trading, and then you can get into more detail, then man, absolutely. It's such a beneficial thing. Kenneth asked, has anyone looked at the characteristics of the most profitable share and the biggest losers to determine why a particular indicator is successful or unsuccessful, or is it just one of those things? It's a great question, and that's what system testing can actually do for you, is help you identify if something is working with something. And that's if it's a trending, let's actually do this. I'm going to take one other approach to system testing. So if somebody wants to throw any symbol, somebody throw a symbol into chat, and we're going to take a different approach to kind of talk about what Kenneth is asking here, because it's actually a great question. How do we determine what's working and what's not? to determine what's successful. So I'm going to give you just a second to do that while I clear out what I've got in here. And let's just unselect everything. Oh, somebody's got to have one symbol. Or maybe I'll scroll back in time here if I don't get a symbol, and we'll see what the last one that was asked was. Oh, everybody's being shy. Let's go back to the last one here. Okay, Microsoft, it looks like is the last one. Okay, so what I'm going to do here is I'm going to do this a little differently. So what we were doing before is we were scanning, identifying opportunities, and then back testing those. But let's say that you have a stock that you like to trade, that you know, hey, I understand the personality of it. I want to do more analysis on it and understand what works, what doesn't. Well, what we can do here is we can say, well, I just want to take Microsoft this time, and I want to put it against a basket of trading systems to see what trading system works best on the system, on the stock that I'm looking at, or the future, or whatever it may be. So what I'm going to do is I'm going to take what we call the performance systems in Metastock. There's 80 performance systems that we have in Metastock that are used to be an add-on. We used to charge $300 for them, but now they're included inside of Metastock. And these are systems that were rigorously tested and put through the paces to see how they performed in system testing. And they're ones that have performed historically very, very well. So what I'm going to do is take these 80 performance systems against Microsoft. So I've just searched for everything with PS in it, and you can see all these performance systems. And I'm going to leave all my other settings the same. So what I'm going to do is go ahead and start my system test, and it's putting that one stock against 81 different systems. So when I look at my report here, I can see that it looks very, very different, right? Because what I'm doing here is I'm putting all of these systems against Microsoft. So if I rank on percent gain here, so what's come up best was this PS projection oscillator 2. So over that same course, it had a 10% gain, 66 trades, 34 winners, 32 losers. And if I go in, oh, I clicked on the second one down. Let's go back. I keep clicking on the second one. Let's go back to the first one. Apologies there. Okay, so if I look at this equity line, yeah. Now this one's an interesting equity line because if I look at it, what I'm actually seeing here is, okay, we've got some other systems that we'll test here, is we're seeing this choppy equity line, but look how it's performing in recent market. Okay, so we're seeing some actually really good, a really good equity line here. So that's something that I would consider if I was trading this. Okay, then I'd go to the relativity, go to equity. Now look here, so this is one where we had all of our gain a few years ago and pulled back. And that's why it's so important to look at this equity line to understand what's actually trading here. Okay, let's punch in a few of these other systems that are coming in here. Affirm, I don't know the symbol for Affirm. Okay. Now, while there's multiple things coming in here, this is actually something that's really cool that you can do, is you can actually just type in symbols up here. So if I went Affirm and then somebody else requested IBM, and then let's see, we've got BP London, which would be BP.L, so we can get, that's actually trading on the London Stock Exchange, and then a BTC equals. Okay, so I've got 4 different symbols here, and when I type those in, what it'll do is it'll go through and it'll run all 80 of those systems against each 4 of those. Let's see, Phil's asking, can expert advisors be analyzed? Yeah, so you can take whatever's in an expert advisor and you can put it into a system test, and then you can actually do that same test, step 1 to step 2. That's actually a really good question, Phil. So I'll just put yes in there and send it all. Oh, sorry. Yeah, got it. Thanks, Yosh. I appreciate that. Okay, so we got our report here, and I clicked off of it while I was answering that other question, but let's go here and view our results. Okay, so what I'm seeing here now, remember I tested against 4 different symbols. So I'm seeing how all of these strategies performed against the 4 different symbols overall. Okay, so you could actually do this against the whole S&P 500 or the entire stock market, whatever you wanted to do. You can get really granular with your back testing here. So over those 4 different instruments that we tested, the dynamic momentum system was the best performing. So it had the best performing over time. I could then drill down into it and see which of those 4 were actually driven by that. So Affirm, there we go, was actually the best performing one over those 4 systems using the PS Dynamic Momentum Index. So you can get really, really granular and trade with and understand it and play with it. Now, I mean, granted, I've gone through a lot of information here. When you get Metastock, you get started with it. How are you going to remember to do all this? Well, there is amazing training that you get with Metastock. There's hours of YouTube videos that you can watch. There's great documentation. There's free support. So you can call them up and say, hey, I need some help understanding how system testing works. And they can screen share with you and walk you through step by step what you want to get out of system testing or out of market scanning or out of charting, whatever you want to do. Our free supports will help you do that. Let's just look at this equity line just to look at it while we're here. Okay, now that's a pretty good consistent equity line from here. So that's, I like the way that that looks overall. And that's one of the things I really like to preach, is looking for that smooth, consistent equity, because it really helps draw a clean picture of the way that we need to trade. We want consistency in our trading. I mean, obviously we all like the big runs, right? We all like that big jump in our trading, but consistency is a big key as well. Let's look for those big runs and let's look for those as well. But consistency in trading and being able to look and say, well, this has worked historically. So my odds are here that I'm going to have a better chance of success moving into that trade. And that's the whole goal, improve our confidence level in what we're getting out of our trades. Okay, so let's go back to our PowerPoint here for just a minute because I'm running out of my time. So again, the big key I like to emphasize here, improve confidence. If I can take 67 different opportunities and narrow it down to 1 or 2, that because I have improved confidence based off of how it's performed historically, well, that's where system testing can help you. And again, this is used at all levels of trading, from the most basic retail trader up to the most advanced. And if you've ever just sat and looked at a chart and said, well, how did this last symbol look? How did this last symbol look? You've done some back testing, okay? And this helps you automate it and make it easier for you, okay? And that's one of the reasons why Metastock has been the best analysis software in its category for over 30 years in a row, because it is just such a tremendous package in what you get out of it. Market scanning, back testing, expert advisor, world-class charting. It's just one of the best packages that you can get out there. So if you get Metastock, you can get Metastock DC, which is our daily charts, which lets you look at daily, weekly, monthly, yearly, quarterly. That runs $74.95 a month. It's powered by Zenith for daily charts market data. If you want to do real-time analysis, where you can do 1 minute, 5 minute, 30 minute, you can get real time or look at delayed on those. It runs $265 a month, and that includes our Zenith real-time market data and news package. So that also gets you real-time news as well. And that cost does exclude exchange fees. So if there are exchanges that you need to get real-time, you'd need to pay exchange fees. And then with Metastock, of course, you get our free support that I just talked about. They are amazing. You know, if there's Metastock customers in here, go ahead and chime in how you feel about Metastock support. That's how confident we are in our support. I can ask anybody anywhere, how do you feel about Metastock support? And they will tell you it's amazing, okay? They rank near 100% all the time in their surveys, so it's fantastic. You get free white glove support to help you get it. if you don't have Metastock 19 and you want to upgrade, you get the free white glove support to help you upgrade and get to the latest version, and then free access to all of our recorded training. We want you to be successful in trading, so we want you to be using Metastock. What we're offering here is you can get a 3-month trial, which would be a buy 1 month, get 2 free. So you pay for the first month of either of those packages, the DC or the RT. That gets you your first month, and then your second and third month are free, giving you through, I think Jeff said through May, which would be awesome. You get Metastock 19, which is our latest version. You get the data region of your choice. Both of our packages give you global delayed data, and then if you want real time, there's some, you just need to pay your exchanges and maybe a different region based off of what you're trading. The white glove installation support will also give you what we call Unleash the Power of Metastock, which is a great, it's a user manual that's a PDF that you can go through that walks you through all this stuff step by step with an accompanying video set. That's normally $99. We'll throw that in as part of the trial. To get that, you just need to call us 800-882-3040. Go to metastock.com/sales chat. Our sales guys are amazing. If there's any screenshots of anything you'd like to see or understand, chat with them. They can give you some screenshots of anything. Or you can just go to metastock.com/conf-promo. There, all the offers from the conference are up there, plus the 3-month trial of Metastock, so you can take advantage of it. Try it out. See how back testing and all these other tools, market scanning, can help you identify trades and make better trades. Whoa, I went a minute over. I'm sorry, Jeff. Forgive me.
You're forgiven. Let's see.
Okay.
Before you go, though, we'll just go ahead and have you leave that screen up. Before you go, let's give away, I'm going to the post office next week.
Oh, he's going to be mailing some stuff.
Yeah. Personally mailing a prize winner. The prize we're going to give away right now is Around the Horn by Dr. Adrian Metz. Kelly, I'm almost out of these. I've got like maybe 4 left.
Oh,
so,
that's an out-of-print book. The only way, it's the only way you can get it is through Jeff these days.
yeah, exactly. So what I need from you, Kelly, just to kind of determine who that winner is a number between 1 and 7545.
6,902.
Okay. A Mark F in the USA with not a email address, msn.com if you don't mind. Thank you very much, Kelly.
Yeah. Hey, I want to answer one quick question. We're being asked in chat, how delayed is delayed data? That really depends on the exchange itself. Some exchanges are 15 minutes, some exchanges are 20 minutes. Most stock market exchanges are 15 to 20 minutes. Some futures are up to an hour. So it just depends on the exchange, but typically between 15 to 20 minutes is the delay that you'll see.
Thanks for that question, Yugs.
Yep.
All right, cool. So it is till May 25th.
May 25th, let's go.
And it's $75. That's like $25 a month. I don't know if you mentioned this, but I think it's been rated #1 for 32 years in a row.
I think I said over 30, which is close to 32 years in a row.
They're both technically accurate. Thanks a lot, Kelly. Appreciate it.
All right, thanks everyone.
All right, very cool. Good, I'm going to take over right now. And show my screen. Okay. Just want to make sure the audience view is correct. Okay, very cool. You can do that. If you have any questions at all, get in touch with us. The sales team is also very, very good. They can answer questions, help you decide what version is right for you, all that kind of stuff. If you have the DC version, which is the delayed chart version, it'll do daily charts, and you can also do real time. 800-882-3040, metastock.com/sales chat, metastock.com/conf-promo. Very cool. Set it up. There's a reason it's been rated #1 for so many years. I wouldn't trade without it, and I hope you won't either after you use it. Want to say thank you to our sponsor, AAII, American Association of Individual Investors, sponsor of our event today. We appreciate their sponsorship. You can find out more information about this tremendous nonprofit at aaii.com. And with that, further ado, let's go ahead and get over to our next speaker. Our next speaker is Dan Passarelli. Dan Passarelli is an author, a trader, a former member of the Chicago Board of Options Exchange. He's written a couple books on traders. He's a great friend of Metastock. I remember seeing him back at the Traders Expo a bunch of times, way back in the day. He's been doing this for a number of years. Dan, let's go ahead and get you started. How you doing today? Oh, Dan, how you doing today?
Dan, your mute is on. Perhaps that's the problem.
Yeah, no, I just sent him an unmute request.
There we go. Things are going great today. Things are going super good.
Let me go ahead and make you the presenter. We'll make sure you can get, we can see everything. And just say your camera went on, so I'll make sure I can see you too.
Okay, how's that? All looking good here.
Greg, can you confirm that things are coming through? Because I don't.
Yeah.
Oh, there you are. Okay, I got you.
Yeah, Dan's camera and your camera and Dan's screen that says why time spreads are outperforming right now.
All right. I might need to, and this happens once or twice, but I might need to log back out and leave because I've stopped.
Just make sure you don't shut down the session. I'm sure Dan and the hundreds of people watching would not appreciate that.
Actually, now I can see everything. I can see Dan. I can see the. Okay, we're good. I'm slow here. And so is my computer. Dan, it's all your turn. Go.
All right, friends. How are you feeling today, folks? I'm really excited to be with you here today to share this really great trading system that I developed, and I think that you will like. I think you already saw this. Don't trade with money you're not prepared to lose. These examples are general information, not specific to your situation, and read characteristics and risks of standardized options before trading. So on June 28th of last year, a big trader traded a time spread in Target, expecting the stock to be around $148 over the next 7 days. And this trader turned out to be right. In TradeWeb Markets, symbol TW, on July 12th of this year, another trader bought 1,100 time spreads. This time, this was a directional time spread, expecting the stock to rise, which in fact it did. 7 days later, on July 19th, the trader could have locked in $189,200 winner. Who is making these trades? Well, I've spent a lot of my career being among professional traders, watching the market like I'm on a stakeout. I've dedicated my career to getting and putting to use the available market information that most traders miss. Information of what professional traders are actually trading right now. Imagine the amount of time you could save and how much better you'd trade with the same information a professional trader who has all the tools, all the training, who does all the research, and you get to see exactly what he or she trades and makes based on the research. Imagine the stress it would save. Imagine how much of an advantage you would have. Because you know what? You can have access to that information too. This is my promise to you. I'm going to share with you a way to get access to professional traders' trades live, real time. So you can trade with the exact same information only the most elite traders have, and piggyback the trades of the best trading firms in the world without having to do any of the research. Sounds pretty great, right? Also, at the end of this presentation, I will share how you can take the next step so you can start getting immediate results. Fair deal? Yes? Hey, hit that questions box and let me know if all that sounds great to you. Hit that questions box, please, right now. Let me know if all of that sounds like a pretty darn fair deal to you, all right? That'll also let me know that you can hear me and get the most out of this and You can find the questions box as well and participate in this. All right, thank you, Sean. Thank you, Cameron. Thank you, Eddie. Thank you, Jennifer. Yes. Thank you, Ingrid. Okay. And be sure to stay till the end of this presentation. The most important things I will share come later. And to keep focus, I'm going to hold all questions. If you have a question, please write it down and I will get to it at the end. William, that question will be answered throughout this presentation, rest assured. I'm Dan Passarelli, and I traded for years down on the floor of the Chicago Board Options Exchange. I wrote 2 of the most popular books on option trading, worked for every major options broker, options exchange, and all of the great software providers in the US and abroad, and get to be on TV a lot, which is kind of fun. But this is also a slide of who I am and what I do. And these are the important things. The most important thing to me is my family, my wife, Kathleen, my kids. And one of the things we all like to do together is travel. We enjoy new cities, learning about new cultures, nature. We enjoy food and wine. We've been all over the world together. These are the things that are important to me, and trading helps me be able to do them. But hey, enough about me. Let's talk about the important person here. Let's talk about you. Why do you trade? In fact, while we're talking, go ahead and type into the questions box, what is your reason for trading? Just in a couple of words. Is it to have a wealth building activity that allows you free time, or to play golf or whatever? To buy some fun toys, like, convertible Mustang to joyride in? Or maybe a family vacation to an amazing home you found on Airbnb, to give more money to your family members, or to church or charity. What is your reason for trading? And somebody here just asked a really long question, and I'm not able to read that whole thing. You can email me later, okay? Thanks. William says he trades for fun. Uday says for financial freedom. Carmela says just to pay for the holidays. Excellent. I like that. Eddie says financial freedom. I like that too. Sean says pay for college. These are all really good reasons. All these things are possible. Now, did you know that according to macro trends, in 2004, Goldman Sachs spent $629 million on research. That's over $500 million. What a lot of people don't realize is that when professional traders make some of these huge trades where they make millions of dollars, it's the research desk that does the heavy lifting. At a professional trading firm, the research desk is a team of a whole bunch of extremely smart people with advanced level degrees from the best schools in the world that are trained to find the information that leads to the big trades that the traders at the firm then make. The research desk, they put in like massive amounts of time studying this stuff. Then the traders just look at the smartest way to trade it that leads to the highest profit. Look, to set up and make a trade, there are basically 3 parts, right? There's research, which takes most of your time. There's identifying the trade that makes the most money from that research, which, by the way, is a highly trained skill and still takes a lot of time. And then there's the easy part, clicking the button to enter the trade, right? Clicking the button is the easy part. Now, those of you who know me, you know that I always speak the truth and I tell it like it is. I don't hold anything back. Well, the sad reality is that no one trader actually has the time to do all this. Not to the degree it takes to have enough information to make the informed decisions traders at the big firms make. The truth is, we can't compete with them. What if there was a way to just do the easy part? What if you could somehow get all the research that the research desks uncover and have the knowledge to know how to set up the positions so you make the most money, and all you have to do is make the trade? Because this is possible. In fact, you can get all the alerts of these trades when they happen. And I've discovered that often time spreads reveal a great deal of information and are the strategically best trades made by the institutions. But before I share how to get started in the trades that professional traders are making that telegraph market information, first let me share with you the knowledge of how time spreads work. So here's what time spreads are. You buy a call and sell another call on the same underlying with the same strike price, but the one you're selling has less time until expiration. Or they can both be puts, doesn't matter. Call time spread, put time spread, same thing. We also call them calendar spreads, and let's look at an example. So say a trader here is studying this stock, happens to be just an old screenshot of IBM, and thinks that it'll stay in a range for the rest of the week, hovering around $128 a share. Well, the trader can position him or herself to make money as long as IBM stays around $128 a share over the next 4 days by selling the 128 strike calls that have 4 days until expiration, and at the same time, as part of the same trade, by buying the 128 strike calls that have 11 days to expiration. So they sell the 4-day calls at $1.26, buy the 11-day calls at $1.97. So collect 126, pay out $1.97. That's 71 cents. Let's see, right down here. That's 71 cents that this trader is paying for this time spread. 71 cents of option premium is $71 of money. Now, on a 10 lot like this, that's $710. If the best case scenario happens and the stock is at that shared strike price of 128% at expiration, and I'll share with you why that is in a few minutes, this trader can make around $500, which comes out to be about 70% return in the 4-day life of this trade, and to do so with limited risk. But we can't just think about the profit. We also need to think about the probability of winning. So this is a probability curve. Now the horizontal axis, this is the stock price, and the vertical axis is the probability of the stock being at that stock price. So what I have here is a bell curve. Technically, it's a log normal distribution, but you know, this is an artist's rendition. Here's what this shows. Simply put, smaller moves are more probable than bigger moves. If we look at the past 30 closed trading days, if here is today's stock price, most expected future prices would fall like right around here, close to where today's stock price is. But a small number over time would have closing prices farther away from where the stock is now. So the stock in this example was at $127.73 at the time of this trade. The way this time spread was constructed, the most probable scenario is that the trade makes money. Only if the less likely big moves happens does the trade lose. So remember that probability curve we were looking at a minute ago? Well, this looks kind of like it, doesn't it? That blue line is the profit or loss at expiration of the 4-day option. Let's overlay that probability curve that we're talking about right here. Same concept, right? Moves too far up or down, the trade loses. If it does the most statistically probable thing, the trade wins. This diagram actually shows some key information. Again, the blue line is the profit or loss at the trade expiration 4 days from now. The best case scenario is that the stock is right at $128, the shared strike price, here at expiration. Now, we don't expect the stock to be exactly right there, but just close. We can still reap a solid profit if the stock is anywhere in between this range here, as long as the stock stays between the two break evens, which in this case are $125.33 and $130.58, the stock is a winner. If it falls to be below $125.33 or above $130.58 at expiration, then the trade can lose. Now, the most this trade can lose is the amount the trader paid for it, or 71 cents a contract. The break-evens are 1.8 and 2.2% away from the current stock price, respectively. So the odds of success are in the favor of the trade winning, but not massively. So we need a way to improve those odds above and beyond the professor math and what the probability curve tells us. Remember those option prices we were looking at? Well, what if there was a way to get a better price, where you lose less if the trade goes wrong, make more if it goes right, and the break-evens are wider, so the likelihood of success is greater? Well, there is. If the option we're selling was more expensive, the spread would have a lower net price. Make sense? Like here, we're paying $1.97 for this one and selling this one at $1.26. So the net price we're paying is 71 cents. If we took 197 minus something more than 126, well, that would mean we're paying less than 71 cents, right? Make sense? So the lower the spread cost, the less risk. Plus, the profit potential would be greater. And the best part is the break-evens would be wider too, thus making it more likely to make money. All right, so this is the secret sauce here. I just had lunch. This is not a picture of my lunch. But this is why time spreads work so well right now. In fact, if this might be the best time ever to be trading time spreads. That is, if they're set up with an edge. We need to sell overpriced options while at the same time buying underpriced options relatively. And the tool we use to analyze the relative value is called implied volatility term structure. Now that's a pretty fancy term. There's kind of a lot to it. And again, I'm simplifying this and in some ways oversimplifying. Later, I'll share where you can get a resource that makes doing all this really simple. But basically, we look for situations where the option we're selling has a higher implied volatility than the option we're buying. All right, remember this guy staking out the market? The stakeout's the first part of any case, right? We watch thieves' moves, right? See what they're doing, but then you've seen crime dramas, right? Columbo, Kojak, Law and Order, Hawaii Five-0, Bookham Dano, right? What comes next? What comes next? Well, booking them, right? So let's get the facts. Let's find the motive. Get them to spill the beans about what they did and why. Build the case because we want to see what really happened. And that's exactly what we do with this trading system. We watch what trades the big traders are making, and then we figure out why. We do our version of the under the hot lights interrogation. And we find out the rationale behind the trade to see if we should jump on and follow along. But the thing is, we've gotten so good at this. We've gotten so great at cracking the case. Honestly, it's kind of like waterboarding the market than just asking a few questions. I'll tell you the truth here. So we make it very simple to do this. And I call this the genius method. After seeing what professional traders are trading, we verify the technical setups using support and resistance, that we can trade favorable volatilities, that there are no planned announcements, and that can cause the stock to lose. So this basically gives us an unfair advantage. They say if you for you to become an expert, you have to do something for 10,000 hours. How long would it take you to log 10,000 hours of experience in trading? A year? Well, 10,000 hours in a year, that's 10,000 divided by 52. That's about 200 hours a week. So no, we're looking at many, many years realistically. So I figured out a way for you to skip putting in the 10,000 hours and learn to become an expert. Because we're letting the experts do the work for us. We let the team of the best researchers in the world do the time-consuming but extremely thorough research. We let the top traders in the world interpret the research to figure out which trade is the best money-making trade, and we just do the easy part. We're piggybacking on the 10,000 hours of expertise in research, tactics, strategy, and all these other folks have accumulated over many, many years. And not just from one firm, but from all the major firms. Now, before I get into how to see the trades the institutions are making, let's first look at what this looks like in real life. So in NVIDIA, on this day at 11:23 and 39 seconds in the morning, a big institutional trader bought 300 of the July 19th, July 26th, 119 call time spreads at $1.77. That means the trader sold short 300 of the July 19th, 119 strike calls. And at the same time, as part of one trade, also bought 300 of the July 26th, 119 strike calls. That is a time spread. Two different expirations, same strike. Now, because the July 26th calls had more time until expiration, they had more premium. Thus, the trader paid $1.77 when the trade was made. $1.77 of option premium is $177 of actual money times 300 contracts. Well, that's a pretty big trade. So the July 19th expiration came along 2 days later, and this trader could have closed the trade and made $39,900 on the afternoon of expiration Friday, July 19th. That's about a 75% return. What if you were alerted to this trade the second it happened? Well, a small trader following along and trading just 5 contracts could have made $665. Now, $665 might not look like a lot compared with $39,900, but imagine doing this many times over and over again. This is what leads to this being a wealth building activity, even and especially for smaller traders. And bigger traders might consider trading somewhat bigger trades. I mean, a 10-lot trader could have increased his or her account size by $1,330, and a 20-lot trader could have brought in $2,660 over this 2-day period. 75%, 75%. It scales with your account size. So this is a really good trading method for traders of all account sizes. And by the way, if time spreads are, or even options in general for that matter, are new to you and you're not 100% clear yet on everything we're talking about, in just a few minutes, I'm going to share how to make all of this really super simple to follow along with. Now, I mentioned a moment ago about how these trades can be scaled to any account size. This is a perfect example. In NLY, which is Annaly Capital Management, on this day at 2:57 and 56 seconds in the afternoon, a trader bought 400 of the July 5th, July 19th, 19 strike put time spreads at 14 cents. So this trader sold 400 of the July 5th, 19 puts, and at the same time bought 400 of the July 19th, 19 puts, paying a total of 14 cents a contract. Now, if this trader held this trade until expiration of the short option a week later, he or she could have locked in up to $2,800. Now that's a smaller trade than the last one we looked at, but this is why it's so versatile and beneficial for small traders as well as huge traders alike. Imagine if you have a small account that you're trading, you're trying to grow it, and you see this trade the millisecond it happens, right? A trader following along and trading just a 5-lot time spread could add over $35 to his or her account. A trader who typically trades 10 lots could have made $70, which, who knows, might be adding 5% to the account in a week, right? Bigger traders who want to scale this trade might trade like a 50 lot investing just $700 into this trade and could have made $350, which is a 50% profit, whichever way you look at it. A somewhat bigger trader might buy 100 of these, investing $1,400, and at that 50%, that comes out to $700. That's just following along. And then we have this one in Southwest Airlines at 9:56 and 18 seconds in the morning, 2,764 of the July 19th, September 20th, 27.5 call time spreads, traded at $1.22.9. Yeah, big traders can negotiate tenths of a penny. Then just 14 seconds later, 1,488 of those same time spreads traded at $1.23. That's a total of 4,252 time spreads trading. If this trader held this position to expiration of the short option, he or she could have profited up to $165,828. We see straight call time spreads like the NLY trade or the LUV trade all the time, where the stock is forecast to basically stay where it is. But many trades are directional time spreads, like this one in Cameo Corp, symbol CCJ. At 9:30 and 3 seconds, right after the market opened, a big trader bought 250 of the July-August 45 put time spreads at 87 cents. Now notice at the time, the stock was at $50.09. Because the stock price is different from the strike price, this is a directional time spread. Remember, the ideal situation is that the stock is trading at the shared strike price at expiration. The stock is at $50.09 and the strike price is $45. So this trader was looking for CCJ to fall about 10% in 9 days. Now, the advantage of directional time spreads compared with just buying a put is that the overly simple long put would lose money as time passes, while time spreads have time working in your favor for them. So often with directional time spreads, the stock can actually move even a little in the wrong way, and the trade can still make money. Again, we're looking at the smartest trades strategized by the smartest traders. Well, guess what? CCJ ended up hitting a low on expiration day of 45.82. Pretty close to the expected target price. If this trader held the trade to expiration day, which in this case was 9 days later, this trader could have made an easy $19,500 or so in profit. Imagine you see this trade the millisecond it happens. A trader following along and trading just a 5-lot time spread could add $390 to his or her account. A trader who typically trades 10 lots could have made $780. 20-lot traders could have made $1,560 following along. These are just a few examples so that you get a feel for how this works. And I have dozens and dozens of examples of how all this works in even greater detail that I'm going to be sharing in a boot camp video class. In just a few minutes, I'll show you how you can get access to that boot camp video. I'm sharing this with you now so you can start getting the results that you deserve. That you deserve. Like this one. In Costco, a trader could have followed the institutional traders and traded a 5-lot of the April 26th, May 3rd call time spreads, could have made $1,700 holding it till expiration. 10-lot would have been $3,400. In eBay, a trader could have bought 5 of these time spreads at 42 cents and made up to $205 on just a 5-lot. 10-lot traders, that's $410. You know, it's great for small traders and big traders alike. So I want to invite you to join us and start using the time spread genius system right away. So first, you're going to get the Time Spread Genius scanner so that every day you get real-time alerts when the big institutional traders are trading time spreads on neutral stocks, directional trades, or even rolls that tip off what their research team tells them that the stock is going to do in the future. This simple scanner searches the universe of over 5,000 stocks for the setup and makes it possible to find trades you would never have access to without it. This is my easy-to-use alert system that instantly alerts you to big institutional time spread trades. With this, you can see unbiased trade information, no pundits, no analysis, just the real trade data, real time. You get password access to these real-time trade triggers sent directly from the Chicago Board Options Exchange. Yeah. So I pulled some strings for you. I've negotiated a contract with the Chicago Board Options Exchange for you to get professional trade data that you cannot get from any other source. I repeat, you literally cannot get this from any other source. You can't get this from your broker. You can't get this from anyone. I, as a professional in this field, I pay for the data. And not only is it expensive, it can be like $7,000 a month for professionals, but it's not available to non-professionals at any price until now. And the best part is it's all legal. When you sign up, you'll sign up as yourself, a non-professional trader, and get access to these signals through this deal that I made with the exchange on your behalf. This is powerful and this is simple. So let me ask you, when the plumber comes by for 30 minutes to fix a busted pipe, you're not paying him for his 30 minutes, really, are you? You're paying him for his 30 years of experience. So I decided to save you years of time and put everything you need to know about this from my 30 years of experience into a few super short, quick, easy videos to get you up and running so you can start using Time Spread Genius right away. This video training course reveals step by step exactly how and why the Time Spread Genius system works. It talks about which trades to follow, how to set up the trades, and of course the targets and trade management. Because every step is laid out for you. Trading the Time Spread Genius system removes the emotion from your trading, making it easier to get the results that you want. The bottom line is we know it can work for you because we're going to make sure you have all the training you need to make it work. Today, you will also get access to the Time Spread Genius Boot Camp video. This is the complete masterclass on every single aspect of trading the Time Spread Genius system, so you're going to maximize your chances of success. This is a rare opportunity to drill down on a specific strategy to see the 4 ways professional traders trade time spreads. You'll completely master how to use them. Now, this boot camp was recorded from a half-day class, so you can watch it on demand whenever it's convenient for you, for your schedule, and you can go back and review it anytime. The Time Spread Genius Boot Camp is a la carte $3,750. Now, in addition to that, bonus number 3, this is the updated MTM Spreadsheet Trade Tracker. This is my personal spreadsheet for monitoring all my trades. I put it into a template that now you can use too. Its formulas are designed to easily calculate all the trade criteria you need to analyze trade and manage your time spreads, as well as other proprietary trade setups, in addition to time spreads. I've made it so simple to track your trades in this sheet, it is like cheating. This is a $500 value, and it's yours today as part of your Time Spread Genius Traders Package. Now, you might ask, why is this $500? Well, it's not just because of all the months of work I put into it based on my 30 years of experience. Not only that, and not only that, if you subscribe to an online trading tool like this, It'd easily be at least $100 a month, and you're getting to keep this spreadsheet for life. Not just that either, but if you can manage your trades more effectively and make an extra couple hundred on your winners, lose a couple hundred less on your losers, and increase your win rate, geez, this simple framework has the power to massively increase your bottom line. So what that means is today you're going to get the Time Spread Genius trade triggers, and within a millisecond, the trades made by professional traders are just going to pop right up on your screen. You are going to get the accelerator video course to get you up and running fast. You are going to get the Time Spread Genius Bootcamp video so that you can completely have this mastered. And I'm going to give you the MTM Spreadsheet Trade Tracker to make sure you're following exactly every step trading it how I would. This is a total value of $7,000. Now, Time Spread Genius works on all platforms. Open a simple browser window to deliver your trade triggers real time. There's no special software. Trade on your platform of choice. But you want to know what the best part of this is? It's the working leverage. That's what I call it. This is what I mean by this. So typically, when we think of more leverage, we think of more risk, right? Well, I'm not talking about that. In this case, less work means more return. I'm talking about leveraging your work. You're leveraging your time. Because you know what? I spent years working on this. I've done 50% of the work on this. I worked with a team of programmers, and now the trades just pop up on that window that we created. Institutional traders do 48% of the work for you. You just do 2% of the work, and you get to keep 100% of the profits that you earn. Buy now. You can see why the Time Spread Genius trading system is a steal even at $7,000. If all this did for you is identify the best neutral and directional time spreads in the market, or show you roles so that you know what direction the insiders think the stock is going, wouldn't it be worth it just for that? But today, this is not $7,000. Because you've made the investment of being here live on this training and for being one of my action takers, you are the elite. And you deserve to be rewarded. You're better than millions of other traders out there. Millions. And I want you to have the results that you deserve. Get started today for a small, easy investment of just $247 for this month. But you have to take massive action by going to markettaker.com/TSG123GO. That's market as in stock market, taker as in take what's rightfully yours, 2 T's in a row, markettaker.com/TSG. Now, a lot of times they say this is limited to the first 20 people or something like that. Bobby, my marketing guy, says I should limit this to 20 people, but I don't think that's necessary. I'm not going to do that. I want as many people to have this as possible. And I want you to have it for just $247 a month only. So let's talk about that. Why would I give such a huge discount? Because you know what? It's my objective to create 1,000 trader success stories this year. And this powerful tool is your best opportunity to help accomplish that goal together, to be part of that group, to be one of our great success stories. And you may ask, what happens after the first month? Well, look, like you, I sign up for a lot of online classes and invest in myself too. Not options classes, I've been doing this for 30 years, but other things that help make my life better, help me be more profitable. I estimate that I've invested well over $100,000 over the past 5 years on classes to improve my life in various ways. When I see an amazing trial like this, I figure that after the deeply discounted first month, it goes to full price, right? And honestly, that would be fair, right? I get to try it before I buy it, but I don't believe in that. I don't believe in that for me, and I don't believe in that for you. So when you join today, right now, and go to markettaker.com/TSG and invest in this for just $247, you will get to renew at $247 a month for life. Now, when I say for life, there's no long-term contracts. You can cancel anytime, but if you join this and you're making these trades, let's say you make $2,000 the first month. Okay, well, you're going to want to renew. And instead of joining at the full price, you're going to get to lock this in and renew at this. And if it turns out to be the investment that I think it will be for you, and I think you think that too, then you get to keep this renewal rate for life. Now, I was not kidding. These trades literally come directly from the Chicago Board Options Exchange. In fact, as soon as you go to markettaker.com/TSG, you're taken to the CBOE subscriber agreement from the exchange. And again, that's because of the deal that I worked out with the exchange so that I pay for the data. And because you're a non-professional, only through me can you get this data. So they require everyone to complete this form first. So this should be what you're seeing right now. And if you are not, go to markettaker.com/TSG and see. Now, as a reminder, here is what you're getting today. You are going to get the Time Spread Genius trade triggers that just pop up on a browser window, show you the trades, and you can follow along. Now, which ones will you follow along? Well, the first thing you're going to do is you're going to watch the Time Spread Genius Accelerator video course, which is a handful of short videos, so that you can determine, is this a directional time spread? Is this a straight time spread? Is this trader rolling, which gives me an idea what his or her trade desk team believes is where the stock might be going in the future. But then I want to get you up and running fast, but that's not all I want to do. I want you to be great at this. I want this to be your favorite trading tool. So I want you to have this mastered. So today you're going to get the Time Spread Genius Boot Camp as well. And I want to make sure you're doing it right. I want to make sure you're looking at all the right criteria and following every step. So you're also going to get the trade spreadsheet trade tracker spreadsheet. And yes, you can enroll using PayPal. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit for that matter. So you can lock in Time Spread Genius today when you check out and just go to PayPal. And if you want, choose PayPal credit. Now there's one bonus that wasn't on one of the earlier slides here, and that is access to the MTM community chat room. The MTM community chat room is the greatest online community for option traders ever created. And I'm a little biased, but it is. It's your access to the world. If you have questions for me or for our other coaches, you go to the chat room. And, you know, like another thing, one of the best things I can do for you is to put you in a community of traders who are going through the same struggles as you are. Well, you're going to be in it together, and you're going to have all the guidance of the entire Market Taker team. Now, there's one more thing. Do you mind if I over-deliver? Today, you're also going to get a 30-minute phone call with our Trader Success team. This is a strategy session. You're going to get on the phone with our Trader Success team. They're going to talk to you about what's holding you back, what you can do to improve and develop together a plan to take you to the next level. They might even talk to you about other classes or one-on-one coaching, anything that it takes to get you to be one of those success stories that I mentioned earlier. Now, this we bill out at $500 a session, but today, this is limited to traders who join right now. You're going to get it free. So with the trade triggers, the accelerator videos, the boot camp video, the spreadsheet trade tracker, and the chat room, and the 30-minute strategy session call, a total value of $7,800. You're going to get all this today, right now, when you go to markettaker.com/TSG, and you get to keep the renewal rate for as long as you are getting value out of this. Now I'm going to open this up to questions here in a second. Okay, I'm going to open this up to questions. Yogi says, do you use stop losses and take profit when the option is filled at entry? I cover all that in the videos. We don't use stop losses on any spreads because you end up getting just horrendous fills. So there's a different methodology for that, but we do use good till cancel profit taking limit orders. While you're putting your questions in the questions box, here are some frequently asked questions that I get. What if I can't install it properly? Well, there's nothing to install. If you're able to open up a browser window and type something on Google, it's actually easier than that. You just type your password into a browser window and it displays your trade triggers live real time. Is this time consuming? No, I know you have a busy schedule. Many traders have a busy schedule. I've designed Time Spread Genius so you can literally trade this system in just a few minutes per trade. What if I can't figure it out? Well, you get both short videos in the accelerator course for reference, plus the half-day boot camp, sharing literally everything you need to master time spreads. What if you have a small account? Do you like having a small account? Well, how does that change? You want to grow it into a bigger account, don't you? Consistency in your trading is the most important criterion, and I want to help you with that. Now, there's actually one more thing. Let's say you try it out. You find that time spreads aren't for you. No problem. We have a credit spread scanner. We have wing spread scanner. We have 0-day scanner. We have short squeeze scanner. We will swap out this scanner risk-free with any one of our other scanners that might be a good fit for you. So please right now go to markettaker.com/TSG, or you can call 773-302-1645. That's 773-302-1645. Or you can grab your phone and go to the camera app and aim it towards that funny little thing in the bottom left-hand corner. It's a QR code, and a little yellow web address will pop up, and you click on it, and you can just easily join right there on your phone. So like I said, I'm going to open this up to questions. Uday says, haven't done any option trading, only swing trading. Will this help me as well? Yes. The nice thing about Time Spread Genius is you're going to get anywhere from, it depends. It's when professional traders make the trades, they pop up. So you might get anywhere from 3 trades in a day to 15 trades in a day. Some of them might be long-term. Most of them are short-term. I would say most of them are swing trades or short-term trades. Some of them are directional, some of them are sideways. I mean, you want to talk about how it'll help you. So as it sounds like maybe you've been trading for a little bit, Uday. One of the things I know you figured out already is that every day is not a perfect day for whatever the specific method of trading you do. Some days the indicator just doesn't happen for you. Some days you just don't get the signals. This is another tool in your toolbox. If you're just trading the underlying swing trading, you need some mini trends, you need some breakouts, you need some momentum. If there's no momentum, these direction neutral trades are going to be the thing that unlocks another world of potential profits for you. It balances out what you don't have now. It is the missing piece for you to be a more consistent trader. And if there's directional short-term trades that pop up on Time Spread Genius, which there are on a very regular basis, you might be able to make one of those instead of one of the trades you were planning on making and get much lower risk with much greater leverage. Here's a question. Do I have to install any software? No, don't have to install any software at all. It's just we send you an email with a link and a password. You click the link and you type in the password and you're off to the races. William says, how much is your scanner for all the option strategies? You'll have to email me separately, William. And I'm going to send my email address to you. I just sent it to you. What I would recommend you doing is to join Time Spread Genius right now, get a hold of this, and then do one of two things. Just email me right away if you know that you're all in on all the scanners, and we'll take care of you. Or just try this one out for a little bit to get a feel for how how it works, and whether you want to be part of the other ones, which you probably will, to tell you the truth. But what other questions can I answer? Oh, will this work with my trading platform? Yes, this works with every trading platform out there. Yes. How many trades come through in a day? I covered that one, anywhere from 4 to 15. Should I follow every single trade? That's a great question. Thank you for asking that, Sean. And I just noticed, I want to welcome all the people who just joined us, who was Sean, Sean and Ethan and Inga, Dean, Stephen, Omar. Welcome, congratulations for joining us. Nice job stepping up and investing in yourself too, by the way. But Sean, should I follow every trade? No. And that is all covered in the accelerator videos and the boot camp videos, which ones to follow and which ones to extract market information out of, so that you can make better decisions about the whole market or better decisions about this stock going forward and trade in a somewhat different manner than the actual trade is. Like the roles give us great information and we end up trading them a different way than the actual role. I think I probably have time for 2 more questions. Can I access this from my mobile device? Yes, absolutely you can. Sure. If you have an iPhone, go to Safari or Chrome. You can access it anywhere you can get a web browser, which is Safari or Chrome or Microsoft Edge or whatever. What if I miss a trade? So the nice thing about these trades is it's not like day trading or anything where like, oh, I missed this. The signal was 2 minutes ago. I missed it. Oh, can't do it. This is, you make money on time spreads from, time. So if you miss it for a half hour, an hour, that's not a big deal. So, some of them I'll see like 3 or 4 hours later, because maybe I'm doing a seminar like this. And I'll say, oh, well, geez, is this still valid? Sometimes not, but sometimes it is. How long will it take me to learn the system? Honestly, by the time like the accelerator videos, I forget how many there are, 5 or something like that, 6. And they're less than 10 minutes long on average. So, just watch them in your free time and you'll have it pretty much down then. But I know you're here because you want to be great at trading. So you'll probably want to watch the boot camp too. I mean, you'll get this down really, really quick. And that, you know what? That about concludes the questions. Welcome to the new people who just joined us, including Anton and Quentin. I think I missed a couple of people there, and I'm sorry if I didn't read your name, but welcome. Good job investing in yourself. You're going to love this, and especially being able to lock in this 247 a quarter, or not a quarter, a month, 247 a month. That said, I'm going to hand the ball back over to the good folks here at Metastock. Back to Jeff, I guess.
Hey, before you go, Dan, one quick question that came in through YouTube. I was wondering if I could trade on a spread betting platform. Could I use your information to go long or short on the S&P?
Kind of. I mean, you know, they're trades that somebody actually makes. So if you see somebody make a trade on like something, maybe it's not exactly designed for that, but you might be able to do it. Yeah.
Okay. All right. Very cool. I think that's all of the questions.
All right.
Thank you very much, Dan.
Thank you. See you, Jeff. Bye.
And the web address for that again is markettaker.com/TSG. Thanks, Dan.
Thank you.
All right. Okay, just making sure we've got the right monitor shared and all that kind of stuff. All right. Thanks again, Dan. Appreciate that. markettaker.com/TSG. I actually want to talk about stocks and commodities this time. I want to say thank you to Stocks and Commodities Magazine for sponsoring the event. They've sponsored the event since we started. You know, you've been here for a couple of days. It's important to get better at trading. It's important to continue to learn. It's important to keep moving forward. I think a good way to do that is to subscribe to Stocks and Commodities Magazine, where you get information, articles on technical analysis every month. You also get access to all of their trading article archives, 17,000 articles in there, www.traders.com. Thank you again, Stocks and Commodities, for sponsoring today's event. We are, of course, Metastock. The offer that we're doing on Metastock is you can try our award-winning software that's been rated #1 for 32 years in a row. If you buy a month, we'll give you the second and third month for free. That's going to get you run until May. You can try out Metastock. We're going to invest in you. We're going to help you get going with it. We have a one-on-one install appointment that we will do with you with one of our support team to make sure you understand everything. We'll give you a lot of training. There's no commitment. You can keep this as long as it's useful for you. But for $75 over 3 months, you can try it. That's about $25 a month. And you can find out why it's been rated so highly for so many years. You can do that at metastock.com/conf-promo. If you have questions, you want to get more information, give us a call, 800-882-3040 in the US and Canada. Or if you want to chat, we'd love to talk to you. metastock.com/sales-chat. With that being said, I think right here is a good place for me to bring Greg Lewis on here and do a real quick prize drawing.
Sounds good to me.
All right, let me grab my list of prizes. Okay. We're going to give away another book, but I don't send this one out. This one is the volume factor book by Buff Dormeyer.
All right.
Value of $22. And let's just go ahead and give that away. Greg, what I need from you,
yes, sir,
is any number between 1 and 7545.
7545. That number would be, according to the Google random number generator, it's almost going low now, 886. 886. 886.
Ken Ducher. Oh, Ken D.
Oh, damn.
Oh.
Sorry, Mr. Sorry, Ken.
All right, let's go ahead and I'll save that out.
Unfortunately, we don't have the technology yet to beep out things. So.
Okay. All right. Congratulations, Ken. Thank you very much, Greg. Appreciate it.
You are very welcome. I'm right here for you all the time.
My screen okay?
I'm
Can
sorry.
You see my screen okay?
I can see your screen. It says Metastock, winner 32 years.
It's really interesting. I have a picture of Dan Passarelli still on the screen, so I just wanted to make sure I can see the last.
And that is not what you're sharing group.
Very good. All right. Then in that case, our next presenter is John Seville. John has been a friend of Metastock. I remember doing a whole bunch of code for John a while ago, like a long time ago. One of the things that stands out in my memory of John is how he the reason he calls his business Acorn Wealth Corporation is because he likes to take acorns, grow them into egg traders, or into oak trees. And really kind of that's the whole design of what he wants to do, is to kind of help traders become more successful. Over the years, they opened its stores in 2007. They've trained thousands of students worldwide. His smart money systems identify key warning signals before the market tops. And he's going to talk to us now. So John, how you doing?
I'm great. Can you hear me now?
Good. Let me go ahead and make you the presenter here.
Okay.
And I will, maybe Greg will let me know when you can see your screen. Mine's all messed up.
Yeah, I can see you and John now, and his slide that says smart money trading.
All right,
So
good. They're just ready to go. Good. I will let you go, John, and then I'm gonna log out for a second. I'll be right back.
Terrific, and great to be back, everybody, and a lot of familiar faces for those of you that caught our last time I was on the Metastock event. We started speaking about this topic about mid last year, right here for the first time at the Metastock event, and it's an evolving story now, but for many of you probably heard of it first right from these very lips. So what was that story? Well, we're going to dive into it today. It's going to be, I'm very excited. You'll have to bear with me a little bit. I have a little bit of a hoarse voice. So we'll hopefully it'll hold in for the full hour today. And we'll jump over here into the quick disclaimer. But g'day, everybody. Great to see you, and thanks for being here. Thanks to everyone at Metastock for organizing a great event. Of course, like any other event, this is for educational purposes only, not a recommendation to buy or sell any stocks discussed. Acorn Wealth is not a registered financial advisor in any jurisdictional province, so always be aware of the risks of trading, as there is risk in trading any security, stock, option, futures, the whole kit and caboodle. Past returns discussed do not guarantee future results, and of course any positions discussed may be being held by myself, Acorn Wealth, or the employees and contractors of Acorn Wealth. Alrighty, so diving into things, it has been it's been all of last year and all of this year so far has been full of volatility. What does everyone think in terms of where the market goes from here? I'd like to take a quick check in with the audience. If you think the market's going straight up from here, put a 1. If you think it's going straight down from here, put a 2. If you have no idea, put a 3. What does everyone think today before we kick off? I'd love to just see where everyone's mind's at so far. Greg says up, 1, no idea. All right. Well, this is often the most common thing that everyone's worrying about or pondering about day to day. But rather than get too caught up in the day-to-day movements, I'd like to take the opportunity to remind everybody that the markets will always, there will always be another crash. There will always be another major crash coming. There will always be another major rally coming. That's what the markets are. Markets will crash. That's where we get terrific buying opportunities. Markets soar again. That's where we get great profit-taking opportunities, right? Volatility as a trader is what we need. In fact, if some people often do, what is the least profitable market for me? Well, because I'm not a spread trader, I don't trade credit spreads and things like that. The most frustrating market for me is a sideways market, right? So as a directional trader, swing trader, option trader, but directional, it doesn't matter to me whether the market goes up or down, but I want it to be moving in a direction. So the kind of markets that we've actually seen over the last year and a half have been phenomenal for directional trading. The key thing is A, don't fear them, and B, how do we harness that movement, right? But there's been tons of these headlines. We've had inflation, rate hikes, presidential elections. You know, there is no lack of news that you could blame market volatility on. But the thing about what we've been observing in the market this whole time is that it still comes back to the exact same things that we've been doing and we've been teaching at Acorn for many years. Now, if you take a look, for example, let's take a brief look at the market, right? Everybody see the meta stock chart popping up? Okay. So if you take a look at kind of this recent volatility that we've seen in the market, how many acorns do we have in the room? How many of our already Acorn family are in here watching today? G'day, everybody. One of the things that we spoke about at length with our Acorn members and Smart Money Trading members back in at the beginning of February was we said to everybody that we expected the S&P to go straight up until February 19th, and then around February 19th, 20th, we would see a sharp, a very important sharp reversal. So that when we published this report, this was on February 4th, and then again on February 6th. In fact, on February 6th, we did an hour and a half state of the market special event talking about where the market would likely go for the coming months. At least the next 6 months ahead is how far out we were looking. Now, when we in this report, and those of you joining us at the end of today's presentation, very special bonuses I've got for you, which include instant access to this deep dive report. But in this report, we didn't go into what we thought the news headlines would be. I didn't go into talking about why the market would reverse exactly there in terms of what would be the exact headlines on that day. In this case, you know, Trump tariffs or geopolitical events that we're blaming it on. Instead, what we talked about was the things that in my mind matter so much more, which is price action, the patterns. And this was the pattern that we drew on back on February 4th as to why we felt the market was going to reverse at that very specific point. And can everybody see the pattern? Just going to highlight it there in yellow. What pattern do you have on the S&P 500? A perfectly parallel upward channel. So when you are in a pattern like this, which is what we call an oscillating pattern, markets oscillate. So you buy into weakness and you sell into strength. And so as the market was going straight up and rallied straight into that resistance on February 18th, 19th, 20th, that was a great time for profit taking. And by the rules, that was the point where the market should reverse. And if you look at it on that day, that if you didn't have that pattern drawn on, would have looked very bullish. It was actually right at that critical resistance point. So why is the market going down? I would not say it's because of the news or because of this, the pattern. If you look at the technical analysis, which is what we live, die, and breathe by, you were at resistance. Okay, and for full disclosure purposes, I do own puts in the SPY, which I still currently own today. And why do I own puts in the SPY? Not because I'm bearish on the market, but because there is a bearish pattern that indicated to do so. So when we look further out in terms of where the markets could go, we are now yet again at one of these kind of key junctures. Excuse me, to see if this does pull all the way back to support, and if so, then we could be getting a test of around that area, which would be your upward channel target, or whether we hold in here a little bit longer. But either way, no matter which way you slice it, the way that this pattern is evolving is one where, as on an overall market perspective, the rules dictate that we should be aware and planning for these potential bearish pullbacks. Should we fear them? Absolutely not. Market meltdowns or market pullbacks is where we get opportunities, right? Who wouldn't want to buy their favorite stock for $10, sell it for 20, and then be able to buy it back for 10 and do the same thing over and over again? That's how money is printed. Right. So, but what we do need to be aware of is how to capture that movement and to understand where those pockets of strength and or potential weaknesses, if you're shorting, might be, where those best ideas may lie. But that's a quick snapshot, I think, before we get into that topic of today, to give you a little bit of a bird's eye view of kind of how I look at analysis in general in a very simple but yet sophisticated way. Who would agree with that so far? I know there's some people that may not, and that's fine. But if you're a technically minded person and you like bringing simplicity and sophistication to charts through patterns, then you're gonna love the way that we look at things. So that's just a kind of brief look at the market before we dive deeper. But that's what the market's been doing. We are testing this kind of, we've reversed off this upward channel. We've pulled back to some short-term support, and we're now back into that noise zone midway between support and resistance. So when we ask that question, when we answer that question to our Smart Money members every week, right, in our daily reports, in our live trading rooms we do on Tuesdays and Thursdays, when we're answering that question, one way we answer it is by looking at price action, as we just did. But another way to look at the market beyond just that typical face value chart of the S&P is to look at where the smart money is going. Because one of the things that my mentor years and years ago, 20 plus years ago, one of my mentors, Strath Curtis was his name, he told me, Johnny, you got to remember that there's no such thing as the stock market. Forget this generalized term. It's not a stock market. It is a market of individual stocks. And so you want to be diving into and looking at where these individual pockets of strength and weakness are on any given day or time. And so we've looked at the technicals of the market right now, but within that group, that very broad group of stocks, of which the top 8 account for 25% plus of the value of the S&P 500. So you're not even really looking at the 500 stocks in the S&P. The S&P 500 is a very distorted view where you're mostly looking at the value of the top 8 companies within those 500 because of the way that the value is weighted towards them. So we've got to get away from this oversimplified way of talking about the market and dive deeper into the layers of that onion underneath. And one way I love to do that, and we've been doing that for 17 years since we started back in 2007, is to look at smart money. So out of all of the sectors in the market, you could go look at all those energy, technology, utilities, financials, et cetera, and all the sectors in the market. Where are the pockets of strength? And so I took a look. I refreshed this just moments before I came on today. There's only 3 sectors in the market right now that actually have smart money moving in at a notable and interesting rate. Right? Who's ready for those 3? Put a 1 in the chat box if you're interested to know what all 3 of those are. Right? The first one you can see on the screen already: consumer cyclicals. So, for example, if you look at the technology sector, which is a place that a lot of people love to stay in, trade the household names, that's fine. But technology has had a downtrending interest in smart money since June, July of last year. The amount of money moving into technology from an insider's perspective has been trending down. It's in a downtrending smart money mode. Excuse me, as opposed to consumer cyclicals. What do you see about the consumer cyclical sector? April, May, June, July, August, September. Is that a trend? Certainly is. It's a powerful uptrend. So insiders, the best fundamental experts of any individual company, have been loading up on stocks in their own companies in this sector specifically, as well as these other 2 I'm going to share with you. As with any trend, you kind of like a chart, you pull back to the moving average and you rally again. Nothing goes straight up. So after this first straight up period, we had the pullback to support, if you will, and then that began again. And from October, November, December, January, and into February, you can see consumer cyclicals have been a very strong sector, not just from price movement, but from what's moving behind the scenes. And that is far more important to me, because that allows me to prepare for where the great ideas may lie, the diamonds in the rough. Making sense so far, everybody? I hope so. So next, communication services. Communication services are one of the only other places in the market right now where there is strong smart money movement. Okay, so in fact, one of our recent trades that we had alerted at the beginning of February, Sirius Wireless, when everything else was going down at the beginning of the month, we were buying. Weird, right? Why would I be buying in a market that which was going straight down? Because this is SIRI, Siri, make sure my phone doesn't go off. Everyone's phone's probably going off now. Siri was actually a counter-trend, contrarian trade and part of the communications services sector. I've gotten out of Siri right now and I'm looking to get back in. But this very much was something that we felt was a stock that was able to go up even in a downward market at the time, because it was part of this special sector. So were we bearish on the market at the end of January going to the first few days of February? Yes, but we were still buying stocks in special areas such as this. And really this brings us to the theme of the day, and not just the theme of the day, but potentially the theme of the decade, and that is energy. Now, when I say energy, I don't just mean oil and gas, and we're going to go into that deeper as we unravel this today. But energy is this slide, or the older version of it, was what I shared with everybody back in the middle of last year. So, August, September, October, right here at Metastock. I talked about this same chart, about why energy was one of my favorite sectors. Who remembers that, by the way? If you were here, put a 23 in the chat box. If you were here at the middle of last year when I talked about this for the very first time. Energy is another major sector that we've been noticing since early last year. And once again, why? Because if you take a look at May, June, July, August, September, when we were talking about this in the middle of the year, somewhere around there, this was not only one of those sectors like the previous two that had this mass amount of insider buying as a sector as a whole from all these individuals. But when you go back and actually look beyond just a 12-month chart into a 15-year chart, which is we look at 5-year, 10-year, 15-year, 20-year charts of this insider data, and to look at how significant it is. This trend is one of the ones that really stood out for powerful buying, and this is where we really started thinking, okay, there could be some great opportunity here in the energy sector. Why? Why is there such extreme levels? When you're looking at a 10-year level, these spikes are actually very high. Why are they so high? Now, some people are then going to go out and try and figure this out. You could spend, hundreds of hours trying to become a specialist in energy, in oil, and what have you. But that's not my preference of the way I'd like to spend time. I'm not an energy specialist, but I am a smart money specialist. And the difference is, rather than trying to compete with the smart money and trying to outsmart everyone else in the market, which I think is a fool's game, I much prefer to allow them to do the research for me and just piggyback whatever it is they know. But what they know is significant. Insiders know about everything you could fundamentally want to know about a company, about the industry they're in, the sector that they're in. They damn well should. There is, in my opinion, there is no better fundamental research one can do than to see what the people that run the company are doing with their own money. Because what they know is everything from product launches, mergers and acquisitions, political risks, big customer contracts. In the case of healthcare stocks, they know how well their drugs are doing. Are they curing cancer, or is it a flop? They know about potential FDA approval. And insiders are allowed to buy and sell their own companies. There's certainly grey area there where there are regulations on when and where they can do that. But that system is gamed. The SEC has reported on the loopholes that exist that they're always trying to close. But insiders certainly have been widely reported to game this system, and their results have been documented. And this is why we want to track them, right? Speaking of the research, here it is. When the Peter Lynch, there's no better tip off to the probable success of the stock. Wall Street Journal, insiders have a persistent edge. Harvard and Columbia, insiders make market-beating returns. These are the kinds of things I want in my portfolio. Who else would agree? So why are we looking not just at the day-to-day movement of the market? Well, more importantly, we're looking at the pattern in the market to give us the roadmap. And even beyond that, we're looking at where those pockets of great strength or great weaknesses are, fundamentally, by then looking at the insiders, the smart money. And that's why everything that we do and what we've been doing since we started 18 years ago as a company is about working smart, leveraging all of this research that's being done for us. So I'm going to play a quick clip because it gives me an opportunity to have a quick sip of hot tea, but also because this is one of the prouder moments in our 18-year-old career, where I got to sit down with none other than Kevin Harrington from Shark Tank when we were invited down there 2 years ago to meet with him and talk about smart money. And so it gives you a bit of an insight into how this all fits together. And then we're going to dive even deeper. Here you go.
Okay, so I'm going to pin you down now, okay? Because I've heard the word strategy a few times,
Yep.
and that ultimately, you know, what investors want is a strategy. But what is your smart money strategy?
A strategy is firstly more than one thing. It's not just one indicator or one scan. It's all of those things together, which is the difference between a strategy and a bright shiny object.
Okay.
And so the strategy that we teach and that we follow is firstly, how do we find the idea? Because I'm not a fundamentalist.
Okay.
I don't want to be. I'm not analyzing annual reports and things like that, which others like yourself are probably expert at.
I've done a few.
A few. What I'm more interested in is letting the experts, letting the smart money do that research for me and tapping into that. So the way we find ideas is we're looking for stocks where there is a substantial amount of insider buying going on behind the scenes.
I like that.
And
I like that.
And we love that.
That's one of my strategies too, by the way. So
Is it?
yeah, I love that. Yeah.
Well, I mean, you've got to assume that the CEO and the CFO have a fairly good understanding
Right.
when a company's undervalued.
Right.
And you'd hope that they know what's going on.
And likewise, if the insiders are dumping the stock, then that might indicate there's something that's not so rosy on the inside, possibly, right? I mean, a couple different ways to look at it, right?
If you look at the tops of the market in 2020 crash, very large insider selling compared to buying prior to that. The 2022 drop, we saw the same situation, in fact, 3 times as much insider selling before that drop there. So
There you go.
there's the insight.
Right. Okay, so
There's the insight indeed. and that's what we're looking for. There is far too much information out there, not enough insight. Who would agree? Put a 5 in the chat box if you'd agree with that. Too much information, not enough insight. Even just in the first 3 minutes of today's presentation, we've already dived into the inside of the pattern, which provided the absolute top of the market so far in the last week or so. That's been incredibly valuable, defined by simply understanding what the pattern structure was. And we've been able to identify 3 very potentially powerful sectors to focus on by simply looking at the smart money. But what that represents is massive amounts of sophistication. What others could achieve in hundreds of hours of research, we've been able to get with a quick a glimpse of the things that matter. And a great example of the importance and the value of this to your bottom line every single day, to your bank account, is going back to $0 oil. One of the most amazing rallies we've seen in our time. Because when we learn how to make money, I think we've all been taught the lesson: buy low, sell high. And many of you might remember when oil was free, right? It doesn't get much cheaper than free. But so many people missed that opportunity because they weren't prepared for it. They were busy. They allowed life to get in the way of being able to make life-changing money. Or they just didn't know what to do about it. And well, I can't help with the second thing. I can't help motivate you to do something when opportunity knocks. That's up to you as an individual and each of us as individuals to take the chalice and run with it. But knowing what to do about it is what we do best, right? And that's why when $0 oil hit, we went straight to the scans In fact, I was talking about this at Metastock back at when oil crashed, and here are some of the slides from years ago that I shared with the audience back then. Tetra Technologies. What we did is we went in and we said, okay, oil's crashed, oil's gone to zero, right? Let's find where the diamonds in the rough are. Let's find where are the stocks that insiders are loading up on, not a week before oil crashed, not a day before oil crashed, but every day after. That timing is important. So how recent doesn't matter. It's when it's looking at, did it happen after oil crashed? So a lot of these scans that we build are stories that have context. It doesn't take a rocket scientist to realize why looking at when insider buying after oil crash, because look at the actions that represents. That's where insiders are looking at their stock with oil, bargain basement levels, and they're saying we still have an incredibly high level of confidence that this is now that we can sustain this no problem. Better yet, we're selling at a major discount. Let's take advantage of it. And when you see that broad spread, not just insiders buying $100,000. In fact, it doesn't even matter if they were buying $1 billion worth. The dollar value means nothing without the context. If Zuckerberg buys $1 billion worth of stock, who cares? $10 million of work, pennies on the dollar, right? If Bezos goes and buys $2 million worth of stock today, it's nothing to him. But the conviction is what we're looking for, right? If we see directors putting in 216% more money than they had before in the stock, or 982% more, instead of looking at the dollar value, we're looking at how it actually fits into the picture, the conviction, right? Have you ever had a stock where you've gone out and doubled, tripled, quadrupled, or 10 times the amount of money you had in that overnight? That must have been something you were very excited about. And when insiders get very excited, and when 7 or 8 of them get very excited all at the same time, like we saw here, that is where we find potential diamonds in the rough. And of course, nothing guarantees a stock will perform. The only thing that's guaranteed, as I say, is death and taxes. But does this increase the probability? Certainly in my mind, absolutely yes. Does that help me weed out the bad players and find the ones that maybe have the best fundamental story to be told? Yes. And then in the case of that one, this is when we alerted to our members shortly thereafter that we detected that, and that had a great rally of 470%. You had Clement Petroleum, a better well-known company. 3 insiders were loading up there, $3 million. That one had an even bigger rally, around 1,100%. And look, not every move is going to be 1,100%. Sometimes it might just be 50, 60%, 100%. But I mean, even if you got half of that, the point is that the stocks that saw these types of amazing stories develop, a lot of them came from this way that we found these same setups. Like CDEV was another one. That's the one I bought. I bought Clement Petroleum later, but the one I bought first was CDEV because I like the more speculative setups. Speculative in that the price was cheaper. We first alerted this at 31 cents on April 7th, 2020. But even though it was speculative from a price perspective, to me, this actually seemed like the least risky because this had the most insider buying. And for someone who's been doing this for 20 years plus, I've got really, really comfortable with how I define risk. I define risk by the probability of the setup. And the probability of the setup comes from the pattern and the insiders. So I've got no problems buying a 30-cent stock if it trades, $30 million worth of volume a day, and you got the vice president, director, chief financial officer, all buying, $20 million from another 10% owners buying. And this one, in fact, ended up also being the best performer. So, look, everyone's different. Those of you that like to trade Netflix and things like that instead, that's fine. There is something for everybody. But the story of how we find them and how we trade them remains the same. And this is where we now get to come full circle. And this is where we get to come full circle in terms of looking at where this evolving story that we first broke to you here at Metastock, middle of last year, which is the energy theme. As I said earlier, it's not just about energy. Energy could be the next big theme, not just of the day, but of the decade, because energy goes, the story goes well beyond oil and gas. It goes, it's really diving into what is now starting to be reported on far more in mainstream media about the massive energy demand of AI. Now, again, remember, we were talking about this, screaming it from the top of the rooftops before it was all flooded across the news back in middle of last year, right here in Metastock. And I said, this is the big story you want to be ahead of. Because the amount of energy that AI consumes is enormous. And here's the chart that I showed you last year. For those of you that missed it, here it is again. This shows you the amount of terawatt hours, the amount of energy consumed by Google and Microsoft. That's what these two blue bars are. Google and Microsoft back in 2023, right, 2 years ago, consumed more power than 100 countries, right? But Google on its own consumed more power 2 years ago than the entire country of Iceland. It's enormous. And that was before AI was on every device and almost every single piece of software, before it was writing the news, right? That's where we were at. This has increased substantially. And so how that has evolved is evident in what we've seen in the political landscape. So another presentation I was doing back in September of last year, talking about what is the big theme to look for investment-wise, depending on who gets elected. And what I said in that event was it doesn't matter, because everyone's agenda is going to be the same. AI and energy will be top of the priority list, regardless of whether it's a Republican or Democratic House. So you saw that just a month ago. What was the news? January 14th, Wall Street Journal. Trump plans energy dominance, right? Executive orders after inauguration. Next up, 2 days later, Trump energy czar. Pick warns that lack of power could undermine the AI race with China. We are, make no mistake about it, we are in a race, and a race that both China and the US can't afford to lose with their respective interests. If you think about how important the race to be first to the moon was, right? Back in the Apollo missions to beat Russia to it. Well, we're not just talking about the moon now. We are talking about technological dominance in one of the most important breakthroughs of human technology since energy itself and the internet, right? This is a game changer, and will redefine how we work for the rest of our foreseeable lives, right? And the energy czar, Doug Bergman, said US will lose AI arms race without fossil fuels. So drill, drill, drill. You're seeing that what's going on in the tariffs and bringing things back into the States. trying to create control over the energy draw that all of this requires. So if you look at some of the stats on the electric grid, something like 67% or 70% of the most amount of power drawn on the grid across America is within a few kilometers of a AI data center. So this is huge. So last year when we talked about this, I talked about how we could take advantage of it in a very lazy way. A very lazy way was to start buying XLE, the energy sector, which is something I still have a long-term position in. This is from my Canadian RSP, or retirement savings plan. So this is set and forget. I'm not trading this. I bought it last year when we talked about this the first time, or roundabouts. I'm still holding this same position, whatever it is, 316.52 shares. Great, set and forget, and I'll hold that for years to come. And then there's also the trade, because we're not only buying it and investing in these themes, we're also trading these themes. So in my trading account in Interactive Brokers, this is the position I took there. So, excuse me. So with XLE, we also bought it as a trade. And as you can see, why? Well, just like we talked about the S&P's upward channel, which is bearish, we had a downward channel on XLE, which is bullish. And so there was where we were speaking about this at Metastock around that time, calling the long, and I had bought into it. And you can see my target was preset to sell at 94.91, and my stop loss was preset to get out if it dropped to 82.43. So now you're seeing the tie-in of the execution. So so why are we looking in that sector? How are we finding this sector? The role of smart money through to the execution of the idea. And so when we execute the idea that has all of these boxes ticked, we want to make sure we're doing so with a structure where the risk is worth the reward and the trade is planned in advance. I'll show you why that's so important in just a moment. And so obviously that rallied straight up to the target of 94.91, nailed the target right on the head of, as well as the double top, and it actually then dropped straight back down all the way to 85 from there, and then went again, which is where we bought back in. So this is where you're seeing the systems combine, having precise entries, targets, stop losses, risk management, to back an idea already in a very high probability scenario based on the way that we found it. And I said this was why, I mentioned this was so important. Here's why. Here is one of our other recent alerts, and also one that I traded with my own capital as well. In fact, I'll show you the brokerage statement in a moment. But let me just give you a bit more real estate here. This was Plantair Technologies. Who's been following Plantair? Put a one in the chat box if you've been trading Plantair, following Plantair. It's had some massive moves, and this is directly tied into the AI theme, right? With their AI technology base, and I mean they are right in the thick of this AI story. Plantair was one of the setups in late January, early February that we had alerted as one of our favorite AI surges. PLTR was found by our AI engine, which I'm going to tell you about in just a second, and you're invited to take part in that today. Our AI engine found this for us, and it alerted us to us as one of the best stocks. We spent about 8 minutes in our member alert video talking just about this and why we also loved it so much as well. And so fundamentals, smart money, the whole theme, all checked out. But from a pattern perspective, can anyone see what pattern this is? What pattern is on the chart with Plantair? I've highlighted it in yellow. This is a flag. There's your flagpole. There's your flag. A very powerful pattern, very powerful breakout. And so our alert on that was to go and buy, that we were going to buy some calls as we start to break through that line. The target on the flag is measured scientifically. It's not guesswork. There is a rule-driven way of how we measure the both the entry, the stop loss, and the target. And so we did this live on camera, in fact, before the rally happened, and I measured the target to exactly where we felt this pattern, the bullishness, would be over. The best case scenario where we thought this would rally to, right, which was $120. PLTR took off, and in just over a week, it hit that target absolutely right on the nose. And so, as you can see, there it was on January 29th. I bought 3 $80 calls. January 2016, $80 calls. So I'm going a whole year out, right? I'm not looking for the super speculative 3 weeks out. You could, it would have made a lot more money if you want to be doing higher risk stuff like that. But I bought leaps, you know, a year away at the money, $80 calls, bought 3 of them for $21.75. And about a week later, it hits starts hitting our targets, and we were able to pull out roughly just under a $7,000 profit for a 1 week hold. High probability, ticked every box, and with targets clearly defined. Great profits, right? Six, 7 grand in a week. I'm sure everyone would agree is not a bad reward. But what made it even more satisfying is watching the technicals work so well, because what happened after it hit that exact specific target, it dropped straight back down. 30% decline. It went from being the best stock in the S&P to the worst. Does that change the quality of the trade? No. Was this a great entry and a great exit? Absolutely. One of the best in the entire market that week. The fact that it's pulled back 30% has nothing to do with the quality of the stock or the quality of the trade. What you're seeing here is technicals at their best. It hit the specific level. The gas in the trade was gone. The algorithm sold, we sold, and down it goes, rinse and repeat. And now we'll look for a new entry point. So it's not just enough to have a good idea. You've also got to have the right timing. Timing is everything. There's a reason that's a popular saying. It's true, right? Just ask an Olympic athlete what the value of a second is. And timing is everything when it comes to this theme. This is the time to act on. This is now. You don't want to wait any longer if you're going to start to engage in this very exciting landscape. You've seen it in the news. You've heard it from me last year and hearing from me again now. Whoever controls the energy controls the data. And that's what Eric Schmidt, former CEO from Google, had to say last year. And this is so true. So how do we find the great ideas? Well, the solution that I started working on about 3+ years ago, I've always been very excited about AI. Now, whether I agree with it or not, whether I fear it or not, is a totally different thing. But it's here to stay, so I prefer to be on the winning team, whether it decides to take over the world or not, out of my control. But am I going to use it? Am I going to be ahead of the pack? Yes. And so what we started doing 3 years ago is building our own Acorn AI technology. And this is very special because especially now, the stories, the news, the themes, tying all the context together, like who the insiders are, how much they're buying, what's in the news. This is not something you can manually track very easily at all. So we built our own AI engine that is trained on 18 years of data of what we've done for 18 years, hundreds and millions of lines of code that are programmed into it through our own custom AI database that trains it on exactly what we're looking for in past tense and in real time. And so it goes through and analyzes all these opportunities, the news, the insiders, and scans all of this and finds 5 favorite ideas a month. And so that is what's called our Smart Surge AI Energy Report. And last year when we released this here at Metastock, we did a one-time offer that has not been repeated since. And today I'm going to give you the opportunity to be part of this once more. So for only $297, this will give you 12 months access to our Acorn AI Energy Report. So you'll get the next one's coming out this weekend. You'll also get instant access to our current alerts, some of which we've just published. So amazing value, $297 for an entire year. There is no rebilling. There is no subscription. It's $297, 12 months access. That's it, right? And inside that report, which you'll get sent once a month, you'll have our 5 favorite ideas. It'll break down the patterns, the insiders, the entry, the exit, the stop loss that we're considering. Again, it's not financial advice. We're not financial advisors. You have to make your own decision what's suitable for you. But all that research is broken down, and this is how I'm finding the trades I'm in right now, the same way. I love it. You'll also get access to 12 months of custom watch lists that will be published in this report as well. Video analysis of the report that I'll do to add my flavor to what's been generated for you. Talking about the patterns and the special qualities it has. All of this, and as one special extra for today's live event only. So if you're getting set up today and today only, we'll also be including 3 months access to our live Tuesday and Thursday trading rooms. So I mentioned at the beginning of today how we talked about where we expected the top of the market to be exactly in February, down to the day that we expected the top to happen. That was done on our February 6th trading room. It's a 1-hour event, and that was a very special one. You'll get instant access to that today, where we map out, and you'll see it before it happened, obviously watching that recording from February 6th, how we predicted the top and what we feel is about to happen next. And that's something you do not want to be missing out on. So you get access to that, but you'll also get access to the live sessions over the next 3 months as well. Daily reports that are sent out to your email on updates on all of those setups that we discuss in the trading room, and you get 3 months or 12 weeks access to that complimentary. And that's an additional $600 in value that is included. And to finish things off here, talking about value, I also decided not only, instead of talking about what I see the value of this as, because this is, I mean, the value of this to me on PLTR, $7,000. $7,000 in profit I would not have made had I not had my own scanner, had I not had this research. $7,000 of profit I would have missed out on if I hadn't have gotten out at the right time. There was a trade alert going off right now. Anyway, 1 second, guys. All right. So I asked our AI engine what it felt its own value was. So knowing everything you know about our offer that we're sharing with you now, forget how much we are offering it for. What do you think 12 months of access to these AI energy reports is worth? And it said, Comparable services offering detailed AI-driven stock recommendations typically range from 150 to 300 per month. Actionable watch lists, services that do that, 50 to 100 per month. Twice weekly live sessions, 100 to 250 per session. The lithium report's a bonus I didn't have time to cover today, but you've got a lot of extras we're including, $200 to $500. Proven results, invaluable. 12 months of access, what is it worth? Baseline, $2,000 to $3,500 annually, calculated by averaging comparable services and sessions. $3,500 to $5,000 annually, given our credibility and track record. So at $297, in AI's own words, it's an irresistible bargain. So I hope you agree. And if you do agree, then you can take action right now by going to acornwealthcorp.com/meta and jump on the bandwagon. It's an exciting one, and it's just getting started. So you'll see us dive into those 3 sectors I started talking about earlier today. That's going to be a very big focus of our favorite setups in those sectors coming out this weekend. So it would be an absolute pleasure and thrill to work with you. So with that, I'm at the end of my hour, and my voice did held out. That's great. So I will pass it back over to Jeffrey. And again, thank you all for an incredible session.
All right, thank you, John. I appreciate that. Much thanks, much thanks. Let me go ahead and kind of turn it back over to me. You made Melissa think that her fire alarm was going off there with your trailer. We'll go ahead and do this. John, thank you very much for your time. Ooh, I just need to make a little bit of a change here for some reason. My slides are all gone. So give me just a second. Let's go ahead and work on kind of getting those back. Let's see, day 2. All right, almost there. All right, let's start there. Okay, all right, right on. As you know, I had some technical issues I had to reset, but I was not aware that I actually should shut down my slideshow during that. So let me go ahead and share my screen real quick here. Okay, thank you again, John. All right.
Jeff, the screen you're sharing is the website. Is that what you wanted to share?
No. Thank you, Greg. There we go. It's good
that now the Traders Forum slide.
Yeah, okay. Want to invite you to join us at the Traders Forum. The Traders Forum's a partner of Metastock. They're sponsoring the event today. You can join Market Chat, lots of technical analysis lessons, some other cool stuff. Special guests, thetradersforum.com. Join us. It's free. www.thetradersforum.com. Of course, we're Metastock, and Greg, well, I've got your attention. Let's go ahead and do a special prize drawing.
Actually, you had my attention since John's fire alarm went off. Hey, we got to remember that's a slick trick to get people's attention back to the when you're closing.
Right. Yeah. I'm sure it was unintentional. Yeah, but ding ding. Okay. Let's see. We're going to give away another prize. This one's going to be from Fausto, the Cyber Trading University's How to Beat the Market Makers at Their Own Game book. And let's go ahead and give one away. Greg, what I need from you?
Yes, sir.
The number. And that number can be anywhere between 1 and 7545.
And that number will be from Google Random Number Generator, 1146.
Still the US. We're just getting US ones. This is an Ash. Ash wins this one with a very unique Gmail address, which we won't air on live. But Ash, congratulations. I'm going to send your information over to Fausto. He'll send you the free gift, the free bonus, that kind of stuff. Greg, I want everybody to know that they can actually win or claim a valuable prize. Actually, it's not really a prize, but we are offering everybody that wants one an extended trial to Metastock.
Well, that's a prize.
Yeah.
It's not a prize.
Yeah. It's been rated #1 in its price category. Thank you, Greg. Appreciate it. 32 years in a row. We've talked a lot about scanning and identifying those opportunities that kind of exist in the market. And Daniel was talking about how he loves our scanner. I just ran one. I found some stocks I wanted to buy. That's also included. You can test trading ideas. It's got a forecaster that's patented that kind of helps you predict probable price movements. Scott Brown is going to talk about that tomorrow. It's been rated #1 32 years in a row. You can get it on a buy 1, get 2 free months. So like a 3-for-1 trial. We're going to, as part of that trial, sit down with you. We're going to walk you through how to use it. We're going to give you unlimited access to our support desk. We keep more people in support than we keep in sales and marketing put together. And you can do all that if you want to give us a call, 800-882-3040. You go to metastock.com/conf promo. If you want to talk to us, we'd love to chat with you. I'd invite you to come in and talk to us. Metastock.com/sales chat. $74.95 will get you our delayed charts version of Metastock. We also have the real-time version of the program. Whichever works best for you, we can kind of help you understand the differences and all that kind of stuff. Get in touch with us. There's a reason it's been rated #1. I hope it's as helpful for you as it's been helpful for me. Metastock.com/conf promo, metastock.com/sales chat, 800-882-3040. Yogs, I'm rooting for you, and hopefully you'll be random. All right. We do need to get out of the US too. So in any case, our next guest is, I'm going to call her the Queen of Gaps, Melissa Armo. She's been, we actually had Melissa in at the Traders Forum last week. We did a little bit of a, what we call a ticker talk session with her, where we talked about kind of how she got started trading and kind of her backstory. It was really, really interesting. She basically is self-taught in terms of gaps. She's very results oriented, and she started trading as a result of the 2020 the 2018 financial crisis, the housing crisis. Kind of got into it. She's taught a number of traders her gap strategy. She's got a 26-point system around trading gaps. She's absolutely fantastic. We love her. You're going to love her. Melissa, let's bring you on.
Hello, can you hear me?
Yeah, I can hear you now. There's always was like, is it going to work? Is it going to work? Let me go ahead and make you the presenter.
Okay.
All right. I'll just make sure we can see everything and that you're coming through well and all that kind of stuff. We can see your screen, and I'll get out of the way.
Wonderful. Thanks so much for having me. That was funny. I heard that beep, and I seriously thought that my smoke alarm was going off, because I went downstairs before I came up here to get my mail, and there's a fire engine on the street in New York, and you never know. You never know. So you have to be very aware of those things. But luckily there was no fire, or I couldn't be with you here today because I would have had to.
I'm glad there's not a fire too.
So welcome everyone. And it is a very warm, even though it's cloudy day here in New York, feels like spring is coming. It's 55. Like Jeff said, I do gaps, and I'm going to talk about what a gap is today. And really, once you start trading and you really start doing it and you get into it and you start doing well, it absolutely can change your life. So I teach my method, which I only do one method. I only trade gaps. I've been doing it for 17 years, and I don't do anything else. So I really don't have to do anything else, because if I get to the point where I want to make more, then I just decide to bump up my risk or do more trades. But they're all gap trades, everything that I do. And I will tell you, today's trade of the day, play of the day, was Tesla. So we actually shorted Tesla this morning as a day trade right out of the gate. And I called puts in Tesla today. It's a completely insane trade today. I called the 300 Tesla puts today, and the stock went through that number. And I called that out for actually 2 weeks. So you could still be in the trade. It was completely insane. And for those that don't know what I do, I prefer to short. So most of the trades I do are shorts. Now I will go long. I have no problem going long. We went long actually Tesla last year, but today we shorted it. So I'm going to talk about what I do. If you have any questions, you can plop it in the room, and I'll see them as we go along. I also appear on television, talk about the economy, the stock market. Obviously, everyone's talking about interest rates, inflation. You could name a million reasons why we're falling or rallying or whatever's going on right now. There's so much happening every day, but I'm really just make decisions based on technical analysis. Even though I'm on the news and I talk about what's happening and I have to be aware of what's happening, I mostly am looking at my charts every single day. So if you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. You can follow me on Twitter, which is now X. I have to update that. Facebook, YouTube, or Skype. And again, I have a lot of videos, plays of the day, and I live in New York on Central Park, so I have a lot of nature videos even on my YouTube. And Jeff has watched some of my nature videos, which I try to put things on there. So I'm really looking forward to the spring, because in New York and Central Park, we have cherry blossom season, and it's really quick. It doesn't even last that long. It's quick and fast, kind of like a short in the market where you can get it, and you got to get it right at the perfect spot. So here we are, it's 2025. I can't even believe it's March. Saturday is March 1st. And then in a week from that, guess what? It's daylight savings time. And again, that'll be nice. I can really tell here in the Northeast, it's staying light out later. But it's time to get serious about your goals. It's 2 months into the year. If you're not set on pace, on target for the year already, 2 months into the year, you have time. But I wouldn't wait too long to get a plan of action together for what you're going to do and how you're going to become successful. If you start trading early in the year, you can change your future path. And again, the sooner the better, because again, it's a very active time. Part of it's because we're in a new administration. Part of it's because there's all kinds of things that are happening overseas, and all of those things affect the market too, okay? So again, volatility is actually your friend if you know how to trade it in the market. So whether you want to trade full-time, part-time, like I said, I day traded Tesla. We did it quick and early, out in the morning in a few minutes. So my day trades, I'm in and out, usually done by 10 a.m. Eastern time. And my options, I may be in trades for a week or a little bit longer than a week. But again, that's really what I consider a short time frame to do an overnight trade. But if you're thinking about trading and you want to do this seriously and something for a living, you have to figure out a way in your schedule right now to make it work. So I just had the February class, and one of the gentlemen that did my class is a doctor. He said, I can't trade every day. I said, fine. So he can trade 2 days a week. He's going to trade 2 days a week. That's what he's going to do. You have to find a way to make it work within your schedule, because I mean, until you get to the point where you understand what to do, you learn it, you're doing it, you're proving to yourself that you can take the trades and you can make money replicating the trades that I'm calling, then you have to ease into it slowly. So I actually have the stats here for last year for 2024, even though we're two months into this year. I have the stats for 2024. This is the trading room stats. Again, profit last year with an average risk of 3,500, 901,000, 138. Good solid year for 2024. We had 288 trades in the room, 194 winners and 89 losers and 5 break-evens. So my win ratio for last year was 69%. Then I have options in here, and I risk more of my options. So the stats for the options, again, 70% win ratio, but my profit was bigger for options because I'm risking an average of around $8,000 per trade. So profits for 2024 for options for me were over 3.8 million. And again, 509 trades, 352 winners, 152 losers, and 5 break even with a 70% win ratio. So it was a good, strong 2024. So over 4.7 million for 2024. So me, myself, I set goals for myself. I want to do better this year. I want to make more money this year in 2025. Again, I'm using the same system, but I want to increase, okay? And that's how everyone should look at every year. I think a lot of the problem with traders is they start to do something, it doesn't work, they lose, they stay on something, doing something, a strategy, whatever they're doing that doesn't work, they'll lose on it for a long time before they switch and flip and do something else. You know, if you recognize that something isn't working, don't waste your time on it. You know, I mean, even if you paid for a class, you didn't learn anything in it, or the system doesn't work, you pay for a subscription, it doesn't work, stop wasting your time and money on it. Get into something else so you can move forward. This I only have through actually the 13th, so I have to update this through the end of this month. Again, today we did Tesla. So anyways, 2025 year-to-date through 2/13, again, average risk around $3,500 a trade is $158,884. And so far, again, 69% win ratio for this year. We did 35 trades, 23 winners, 11 losers, and 1 break even. And then this is not updated through the last 2 weeks either. This is the options results for the year. 221,600. Again, I'm at a 72% win ratio for options, so we're doing a little bit better in options, actually. 39 trades, 28 winners, 11 users, and 0 break even. So I will try to update this and put this on somewhere on YouTube in the next week or so, but I'm busy. I'm busy. It's been a very busy time to trade. And again, when the opportunity's there, you have to make money. You have to go after it. So again, even if you risked half the risk I did, 1/4, you know, 1/3, okay? If you have a small account, you can open up a prop account. If you have a retail account, again, you could do options with a cash account. You could do 1 contract. The idea is to be green, consistent greens. Again, keep the win ratio around 77%. For every 10 trades I take, you should expect, if you're following me, 3 are going to lose and 7 are going to win. Sometimes, again, we're on a roll. Sometimes it's a little bit more than 70%. Sometimes we have huge trades like today. You never know. You have to be active. You got to be there. I don't know. You know, I got up in the morning. I said in the room, I said, I like Tesla. This is the one. We watched Zoom. I like that too. That worked. I didn't do it, but I said Tesla's the one. At 9:30, I didn't know it was going to go to 300, but at some point later in the morning, I saw where it was going to go. So it's kind of the thing where if you decide you want to do this, it can be very, very exciting to trade. For the people that just did the class I did in February this past weekend, they're besides themselves because of the money they've made just today, 2 days after the class. So this is real. You can do it. It's not something that is out of the realm of possibility. I think the problem is, like I said, people just tend to go negative once they start trading and losing, and then it's very hard for them to pull themselves back around. But you must do it if you want to be successful. Otherwise, you're just going to keep losing. And if you keep doing the same thing over and over again, you are going to keep losing. And if you don't think you could do it, then why are you wasting your time? What are you bothering with? Why are you wasting your time? Why go to free webinars? Why risk even $1? You either believe that you could do it or you don't think you could do it. You either believe that it's possible or you don't think it is. And again, I'm telling you it's possible, but you have to convince yourself it is and move forward if you're not in that space. Do you follow what I'm saying? And any questions here or comments or whatever, you can chat it in the room as we go along. So anyways, the class I teach is called the Golden Gap Course. So as Jeff said, I have a 26-point rating system that I go through and I rate the gap. If it totals 20 points or more, I take it in the direction of the gap. I'm never reversing the gap. Gap fills don't work. So that's a misnomer. People think that they do. They do not. It's momentum. Okay, we're trading momentum. Today, for example, I didn't short the market, but I actually could have shorted the market. The market fell. If you were long the market today, you lost. If you shorted the market today, you made money. Okay, so the momentum today, when I say the market, I mean the QQQs or the SPY, was to the downside. Okay, now I didn't see where we closed today because I was logging in here, but the reality is that things move up, things move down. Why do I prefer to short? Because moves to the downside happen faster than moves to the upside. Think about it. There's no emergency to go long something, but there's an emergency if you're in something and you're down and you want to exit that trade. Again, that's where we're making money shorting. Okay, now here was another one we did. This was PayPal. Oh gosh, this feels like a long time ago, but it was like about a month ago, PayPal. So PayPal closed here, gap down, we shorted it, and we did a put. Now, let's talk about what is a gap. Again, this is a daily chart. This is the PayPal. Stock closed up here around 89 and change, boom. Gap down here in the morning around 82-ish, fell, boom, fell off the planet. So again, first of all, this is momentum. Second of all, this is a gap. So again, a gap is the difference between the close and the open. It closed at 4 o'clock and opened down here at 9:30 at a different price. There are bullish gaps, there are bearish gaps. Here was a bullish gap in the PayPal. Stock closed here, gapped up, rallied, actually rallied all the way up here. Okay. So there are bullish gaps and bearish gaps. I prefer to short. Okay, I prefer to short. Now let's talk about the PayPal here. Here was the put we did, the $80 put. I did this on this day that expired the 7th. We did it on the 4th. This was so cheap. Like again, dirt cheap, $1.15 for one contract. I took 85, sold at 275. Profit was $13,600 with a 97.75 risk, which was 139% return investment. I got in and out the same day. Now, what if you did one? You could risk $115. You still would have turned your money over double. Again, that's doing it here and getting out. And again, very often I call the trades in the pre-market in the morning. So I sent this out here at 8:44 in the morning. You don't do the trade till the open, okay? And then you do it. Now, if you did a smaller risk here, I'm using an average of 1150, 10 contracts. This is a good trade for somebody that has like 5, 6, 7 grand in a cash options account. A couple of trades like this, your account's over 10 grand. Like, this is a good trade. You could have risked 1150 if you had 5,000 in a options account. Now, your minimum for options is 2,000 at any broker, but you certainly could have done this. You could have done half. A couple of these, you're building your account up, and you can get your account up to then where it's a margin account. Again, remember, for a margin account, you need 25,000 at a retail broker unless you go prop. Any questions here so far? How are we doing? So anyways, we're going to talk about becoming successful. You need to become a specialist. You need a specific strategy, a strategy that reads institutional money. So I'm looking for what? Institutional money. What's happening? It's power money in the market. This brings momentum and opportunity. Every trader in every level must learn this skill set, and it can be acquired through education. So when you learn what to do, then you can apply the method and you can use it for yourself. Now, if you decide you want to join and learn it, you can join the training room with me, and I call the trades live. You can do them while you're learning. That's the benefit of having the mentoring in the room, but you could do it for yourself. Again, I teach in the class everything I do myself. So think about it. I mean, it's just common sense that if you get good at one thing in life, you'll be successful. I'm using this here, Jerry Seinfeld, because there was the SNL tribute was a couple weeks ago. Every famous person was here in New York, which was funny. They had the big party afterwards at the Plaza Hotel, and Seinfeld was in the audience. I don't know if anybody watched it. But unfortunately, they didn't have enough old skits. I wish they had old skits, and Dana Carvey wasn't there. He was sick and didn't go. He's one of my favorites. But Seinfeld was in the audience, and I was thinking about it. Again, when he started out his show, obviously everyone's seen Seinfeld, you know, he didn't know how successful he was going to be. He didn't know he was going to become a billionaire. He didn't know any of these things. He really loved comedy. He wanted to be the best. He practiced what he did. He took time and care thinking through his jokes. He worked on his stand-up. The opportunities came his way. He did his show. In fact, when they did the first pilot, the beginning show, I don't even think it hit when the pilot first came out. I don't even think it was successful out of the gate. And then it built up over time, and they got better, and the show grew. And obviously, he's a comedian, and he's very funny, and he's very successful. He's not a tennis player, and a basketball player, and a golfer, and an accountant, and a doctor. He's a comedian. So you focus on one thing, whatever that is. If trading is it, if this is what you want to do, if you want to be a trader, like this is your thing, do it. You've got to get good, okay? So it's common sense when you think about it. But for some reason with trading, a lot of people think they can just 50-50 crapshoot it willy-nilly and then make money. That's just absolutely, absolutely not true. You have to understand what's going on. You have to learn how to do it, and you have to get good. I should have updated this here today. I didn't have time to do it. But anyways, this was Tesla. We've been shorting this. We did short this. Today, again, obviously this chart looks completely different. This fell all the way down, like I said, broke 300, but this was at the end of January. This was actually, it's kind of funny. This was only a couple days ago. Actually, this was the 20th, where this fell right before the sell-off this week. And this had some beautiful, beautiful, beautiful gaps in it. So we did the 345 puts. This is the week of Valentine's Day. Here I called it 8:52 in the morning, 2:11. Here, stock close here, gap down, boom, get the drop, take it over. So we did the 345s. It fell through 340 and dropped. Now, I was in this before this occurred. So how did I know this would happen? Because I got up in the morning, I saw the gap, and I rated the gap using my system, and I said, this is going to go. The momentum's going to fall to the downside. And I was right, and it did. Okay. And again, it was a nice trade. Good, solid trade. Cost was $7, sold at 21. Profit was 18,200. 200% return on investment. Again, another nice trade. Whatever your risk, one contract, 10. You could take more than I'm taking. 2 contracts was $1,400. You could have made $2,800. Again, this is a doable position size for someone with 7-8 grand in their account to risk $1,400. You see how I'm talking about here, like between this one and the other one, how you're bumping it up, you're bumping it up. I call it chunking it out. You take a trade, you chunk it. everybody wants to take one trade and make all the money back they ever took, anything that they ever lost trading. That's not reality. You have to be consistent. You get it today, get it tomorrow, do it the next day. You know what I'm saying? You take the trade, make the money, get out. Any questions? How are we doing? Anyways, right now, it's the end of earnings season. So we have a couple of earnings. Actually, NVIDIA's tomorrow night. I don't know what it's going to do, but that's tomorrow night. But really, I'm sort of in my mind getting ready for the next earnings season, which is April. So we're at the end of earnings season. Now we have earnings, but it's like retailers usually, except for NVIDIA, which is tomorrow night. That's a big one that will affect the market. But it's a good time to learn and prep and get ready for the next busy, busy time. Okay, but we do gaps for all kinds of reasons, like Tesla today was not an earnings gap. So how can you earn a living trading? Number one, you need a winning strategy. Learn first, then you do it. Number two, you need a supportive mentor, which I offer people. Do follow. I call the trades in the room. You can ask me questions. I teach the classes. It's all me. And number three, become an expert in one thing. Again, think of Seinfeld. I'm an expert in gaps. I'm an expert in shorting. You implement the strategy, get good, and then over time, you can add size to win. So again, how do you make money in the market? Think about it. It's common sense. If you went long Tesla today, you lost. You had to be short that stock. You have to get the direction right. You have to determine who is in control. That's how to do it. If you can determine who is in control, you can get in the position and make money. Sometimes it happens really quick. Sometimes it happens really fast. Sometimes it takes a day or two if you're in an option, okay? But again, it's just common sense when you think about it. If you're in the right direction, in the direction of the control, then you're going to make money. So you have to get the direction right to win. If you get the direction wrong, you lose. There was another one we did. We did this last week. Actually, this kept falling too. We did a day trade in this. We did a put in this, and it went. This was Walmart. Stock closed up here around 104. Gap down here in the morning around 99. Open, rally, dropped. Again, I don't have the last couple of days in here, but this went boom, boom, boom. Okay, fell. Beautiful, beautiful, beautiful trade. If you were long Walmart, you lost. You had to be short. And again, I like doing both options and day trades. You could do one, you could do another. Some people in the room are doing both. Some people are doing just a day trade. Some people are doing options. If they don't have a margin account, whatever, it's whatever works for you. It's the idea of getting the trade. Remember, a put is a short. Okay, when I say margin trades or day trades, I mean when I'm just shorting the stock outright with the shares, which I'll talk about in a little bit. Someone's asking a question. How would you exit an option position when it's not working out? I take trades to win or lose. And again, you can go back and look at the stats I have at the beginning of the lecture. If I lose in something, it all goes bust. It's completely bust. If I lose the whole thing. I carry it into the last day. So if I take a trade on Monday and it never works, it never goes in my favor, I'll bust out of it on the Friday expiration. I'll sell it at zero. So I play every trade to win or lose. In fact, I will tell you right now that I was in trades last week that were down, and then Friday they went. I was almost completely down in trades all week last week until Friday. We sold off Friday. I was in puts, and they went the very last day. I made money in trades that were completely down. If I killed them, I wouldn't have made money. I would have lost in trades that actually I made money in. So I never kill anything. I never kill anything. So if I rate the gap and it works in my favor to the rating, which is again what I use, the system. Okay, forget about, I'm not even in the trade yet. I go through the process, I'm rating it. If I get the point rating, I'm doing it. I believe in it. So it either wins or loses. So that's how I have trades that might be complete losses if they don't go. And you know what? Sometimes I'll do something. If I do it and I lose in it, guess what? I might do it out again. The following week, I might do it another week out. Like maybe I was right in the direction. I just give myself enough time. Do you know what I'm saying? So I tell people to risk less to allow the trades to work out. Because if you take a trade on a Monday and it goes against you and you freak out and want to kill it, that's crazy. You got, look at this market. It's very volatile. It's very crazy. I love it though. But if you have to know what you're doing, you have to know what you're doing. Because if you don't, again, you're not going to win. So if you understand what's happening, you will allow the time. Now, it's not ideal for a trade to take a week to work. I like everything to go the day that I do it. But again, that's not reality. Sometimes the market's choppy, sometimes things wiggle and jiggle, and you have to give it a chance. So you account for that in your risk. And that's why I'd rather see people, you know, do one contract then. Go slow. Because in the end, you're going to fare better. The way that I'm doing them is actually the highest profitability, best results, like, which is why this is how I do it. And to be honest with you, it's the easiest way to manage trades. Otherwise, you're second guessing yourself and you're constantly staring at the screen or your P&L, and it's a nightmare. If the gap rate's good, you go with it. It wins or loses. So anyways, number one, you need a winning strategy. Mine is golden gaps. What is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. So again, I don't know what's out tonight or tomorrow morning or economic data or whatever that could move the market. If we're going to gap, we'll probably gap. I don't know if we're going to gap up. I don't know if we're going to gap down. But market gaps most every day, to be honest with you. And now here is the NVIDIA. Here's a gap. Stock closed here, gap down, open, dropped. This is at the end of January. So the stock was up here around 144 and change, gap down here around 125, open, fell. So that was a gap, okay? So again, a golden gap, I keep talking about this term, is a term that I coined myself. It's when I named my system. It's a gap that rates 20 points or more per the golden gap 26-point rating system. Follow the system, follow the system. You take the trade in the direction of the gap. You can do the trade as a day trade or an option. If you follow the system, you're going to be okay. All you have to do is consistently size yourself right. And what do I mean by that? If you're risking 500, 500, 500, that's what you're risking. You're not risking 500 to one trade, 1,500 another trade, 2,000 another trade. That'd be all over the place, because then you could have 5 winners and like 1 loser, and the 1 loser could suck up all the 5 winners if you're all over the place, if you had too big of sizing in one. So you have to have a consistent sizing, which is your responsibility. I personally, don't think that's that hard. But again, many people aren't good with math. Buy a calculator. Just buy a calculator. If you got to figure out what things cost, and, or even in the margin trades, just figure out your sizing with the share quantity, you can do it. But anyways, getting back to what I was saying, you need to focus. And my focus is gaps, and particularly shorting. And again, we did this PayPal. This was a gorgeous trade. But I didn't look at this today. This probably is around 72, 71. Where's this at today? Somebody look up PayPal. My guess is it's close to 70. It might have even broke 70 today with the market. Where's PayPal? Somebody look it up. That's where it is around today. I'm not in a trade in it, but maybe I should have done that. Anyways, what do? I rate gaps to the 26-point checklist. This is what you learn in my classes, is a meat and potatoes. The rating system helps me determine who is in control.
Okay, Melissa.
What'd you say?
I have an exact quote for you.
Oh, tell me.
Closed at 74.07 today.
Did it fall?
Yeah, I had a pretty negative day.
Okay. Well, then that still could be lower, because I think that gets back. I think that gets. We have time. We'll look at that at the end. I think that gets to 70, 72, 70. I think that gets down. So that's something I might look at later this week if the market continues. So thank you, Jeff.
It did break the 200 as well. It broke down below 200 and closed below 200 today. So yeah. I
think there's very, very, very few things. If you'd want to scan everything tonight or tomorrow morning, whatever, there's probably very, very, very few things today that closed green. We had a very big sell-off today, and again, you could say what happened because of this thing, that thing, the other, from Friday to today. Today's Tuesday, tomorrow's Wednesday. Look at where we've gone. Look at where we've gone. It's almost insane. So again, I love to short, but another reason is because short moves to the downside happen so much faster than moves to the upside. I mean, if you rewind back last Monday and then you look at today, you're like, oh my God, what the hell happened? I mean, seriously. I mean, we hit over the highs. We were at new highs like 2 weeks ago or something. Now look at it. It's like, oh my God, did that even happen? Like, that's how fast things can move in the market. And you got to be on the right side of it. And if you didn't do it and you didn't do the shorts and you didn't do anything, you missed opportunity to short. If you were long, you lost. And again, while there might have been some things you could have gone long today, I highly doubt there was much at all that actually was green today, Anyways, getting back to what I was saying, the rating system helps me determine who's in control, which is extremely important. And again, sometimes I will do the market. Sometimes I will do things that have nothing to do with the market. There's lots and lots of reasons that stocks might gap. I mean, again, something may gap because of earnings. It could gap because of news. It could gap because of the market. You know, again, earnings season tends to be the busiest time, but there's just so many reasons usually why things want to have big moves. And for me, I'm always looking for the momentum. Again, while I prefer to short, I will go long. Again, we went long actually in November, Tessa, which is kind of ironic. We had some great, beautiful calls, huge trades in November and December of 2024, but that was a long time ago. That was a long time ago. So gaps happen in the market on a regular basis. However, some gaps are better than others, and some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change of direction or a bigger move in the same direction. Either one is fine with me. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And that is how you know when the power money will flow to pay you. So it is about reading the footprints of institutional money. You're not going to be buying research reports. You don't have the background data. You're not running a hedge fund like Bill Ackman. You don't have all kinds of information that they may have that we don't, and you never will. But you have the charts. You've got the charts. You can get the charts from Jeff if you don't. You have the live data. It's moving. And we can all see it. I mean, unless you have a crappy internet, we're pretty much seeing an electronic market exactly pretty much within seconds of the live time. So that is how we're all making the choices. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with the side of power, and you need to know how to find it. So knowing how to read what institutional money looks like is essential to becoming a successful trader, and you can win big trading on this side of power. So again, I tend to look at a different stock every day. This was another one we did though. This was a nice one. AMAT stock closed here, gap down, open, dropped. This was Valentine's Day. So again, high up in here was around 175, came all the way down, broke 170. That's momentum. And again, this was a short. It was a nice gap. So what made this fall? The only thing that's going to make this go up here from 185 to down here, boom, like that is institutional selling. Or you have people that are short. Remember, hedge funds can short too. And they do short, actually. But like I was saying, you need conviction to make money. And you get that from understanding why did this happen? How did it work? So I use a 26-point checklist, and that's how I go through the process. And this is what you learn in the class from me. There's no substitute for learning. I don't know what happens after a certain age, or people just shut down and they kind of don't want to learn new things, but you can't be like that. You're selling yourself short. You're cutting off your own opportunities to spite yourself if you don't want to open up your mind to start learning and doing something different. If you're not making this kind of money in the market, then open up your mind and learn something different and spend the time and the money to do it, because you're just selling yourself short and not giving yourself your own opportunity and your own chance to do something different and make money. I think 2025 is going to be an exceptional year to have a lot of opportunity. Everyone keeps talking about American exceptionalism and all these things that could happen for the future. While that's true and that's great, and the economy could shift and inflation could go down and interest rates too, it may not happen right away, or it may be a rough ride to get there. It may be a very rough ride to get there. We rallied after the election, and now things are kind of been, basing out sideways since the beginning of the year. But look at the last 3 days, like I said. So again, you want to think and you want to learn and you want to study. One of the ladies that did the class over the weekend, she's a grandma. It was funny because I said something about learning or something, and she's a grandma. She'd saved up. She took the class. She's into it. She's doing it. She already did a couple trades. She did the Tesla. She made money. And it took her a while to talk herself into doing it. She's been following me for a while. It doesn't matter how old you are, 35, 45, 55, 65, 75, you can learn something new, okay? As long as you're alive and your brain is working, you can think through these concepts. And again, while I'm teaching you, I'm calling the trades so you can mimic them and do them at the same time as me in the room. So gaps are the most powerful show price action in a chart. Gaps have large moves, gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm looking for and trading momentum. Then whether you have a small size or a large size, you will get a good risk to reward. And you got to stay within your size. I called a trade today and I put in the notes in an option. I said, stay within your risk. It was pricey, it was expensive. And everyone should always do that if it was a note. was a note I put on the letter, because sometimes people want to go hog wild. There's time to go hog wild. We're not going hog wild yet. I'm not shorting the world at this point. We could break off. I don't know. We're still in an uptrend in the market. That's the truth. But I'll know when it's time to go hog wild and put more risk on. For now, we're doing what we're doing and we're making money doing it. But again, you have to stay within your risk. That's another thing I've noticed with traders of teaching people for a long time too, that they are all over the place with their sizing. Buy a calculator. It's not that hard. You know, I have an old calculator. I think I've had it for like 30 years. It's right next to me. I mean, I'm good with numbers, but it's here if I need it. Now, remember we were talking about interest rates and inflation. There's a Fed meeting in March. That's going to be interesting. It's going to be very interesting because I don't think they're going to lower rates this year. Now, they may fake it and pretend like they're going to just to keep the market, you know, up, but I don't think they're going to end up lowering rates this year. And if they do, it's going to be very late in the year. So whether or not they say the truth or not in March will be interesting to see, because things aren't really warranting that because prices are still too high. So again, you can have all kinds of opinions, and I go on TV and I say, I think this, I think this, I think that. But at the end of the day, I make my trading decisions, my investment decisions, my decisions with my money. I make what I see in the chart, not on what I think this guy is going to do, because nobody really knows what he's going to do. And even if you listen to what he said, he may not even do what he said. He may change his mind. Look at 3 years ago. Look at the last 4 years, actually, of how things have gone. They've revised the numbers every single time. Said they were going to raise rates umpteen times in 2024. They didn't do it till the end of the year. So a big flow of money going in a certain direction is what moves the market stocks, creates momentum, and sets the trend in charts. And when you're looking for institutional money, you are really reading the side of power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. And even if you think it's not, it actually is. So number one, learn a good system. Number two, you need a supportive mentor. Do and follow. Again, consistency, which is in sizing and executing the strategy. Now, I put the 1 week, the first week here of November, and here are the trades that we did. These were all trades in the room. 2, 3, we did NVIDIA, which was here. This may not look like much, but it actually was a gap. Stock closed here, gap down, open, dropped, and we shorted it. We shorted it. So this was the trade. Entered at 114.05, exited at 113.55, boom, $1,500 in and out, done. Again, I'm usually done in the morning very quickly. Then 2-4, we did the PayPal. It's kind of funny where I got out of this. I got out of this at 80.35. I'm trying to look for $1 every day, but look where it went. It went all the way down. Again, it's easier to hold an option. I think this came all the way down, broke 78. Was a really nice trade. 27.50. This was 2-4 PayPal. And then we did AMD on the 5th. Lost to the AMD. This failed. Stock closed here, gap down, reversed. I had a loser in the AMD. This was the 5th. And then we did Uber. Uber was a nice trade. Uber was a big trade. This was here. Stock closed here, gap down, open, dropped. I did the Uber. It was the same day I took the loss on the other one, made 9,700. Again, these are all day trades where you have to have a margin account. And then we did Ford. Ford was a good solid trade then. On the 6th, stock closed here, gap down, rallied, dropped. That was earnings. And then we did QCOM, which was a little baby one on the 6th. Here was the QCOM. Stock closed here, gap down, open, dropped. That was a short. And then Amazon was the big one on the 7th here. So this was the Friday. Stock closed here, gapped up. I gapped down, fell, boom. Actually, I called to put in this in the last week. It was really, really good trade. This is one of the things that sold off here with the market in the last couple of days. So that was on the 7th. So again, you put a week together, chunk it out. Monday, Tuesday, Wednesday, Thursday, Friday. Again, you may have a trade that loses. You put in the stop. It's a limit order stop. Again, these are trades on margin, so I do use stops. I do limit order stops for my day trades. Again, my stop and my option is my full risk, whatever it is. So that's my stop. Again, if you want to kill something, I wouldn't advise to do that. Just take lower risk. So this 1 week of results was 23,343, a good solid week. And again, hard to believe that was almost a month ago now because we're almost into March. But like I was saying, focus on quality. It's very important. When people enter my trading room every day, they expect to win. They have no idea what I like till they sign in, they log in, we do it. They're expecting to win. Like tomorrow, people are probably like, oh my God, what's she going to call today after Tesla today? But you know, some days there's a million things. Some days there's one or two. Some days there's a big one. Some days there's a baby one. I don't know. I don't know till I get up myself. You know, I get up very early and I start scanning and I start looking for everything, but I like to win. I don't like to lose. Okay. Any questions here so far? And again, we mostly short. We chunk it out. We shorten the run. Occasionally we'll go long, but I'm looking for the best short. And I'm trying to get in and out very quickly, ideally 5, 10, 15 minutes. It's about working smarter, not harder. I don't want to sit at a computer all day. Unless I'm teaching a class or doing a webinar, you know, I want my day to be done in the morning. And getting back to the philosophy of shorting, like I said, it's about panic. We're shorting the panic. That's why things fall faster. Again, I have no idea where we go from here with the market until I get up tomorrow morning and see the market gap. But what if we do continue to sell off? Man, oh man, the panic that's going to come in. What if they do actually say in 2 weeks that they're not going to lower rates at all this year, or it's not looking good? The market probably will have a negative reaction to that. So if you don't know how to short, you're going to miss out on an opportunity this year. The market was very bullish the last 2 years. 2023 and 2024, you could have gone long a lot of things. You could have gone long every dip. In the market, it's not advisable right now to be doing that. Not even since the beginning of the year could you have made money doing that. You have to have a skill. You have to have a strategy, and preferably one that doesn't need the market. Now, again, we were talking about getting a strategy, following the mentor, and then becoming an expert in one thing. You focus on one thing, one strategy, one system, and I'm even very focused in one direction. Even though I will go long, I'm more focused on the shorts. This helps me be consistent, that I can see really where something's going to go, and I can see the weakness in the stock. And again, if I don't find a good short, I'll go long, but I really do prefer to short. So I'm excited about the last couple of days. I'm excited about where we could actually go. You know, I think that if you want to stick on top of something, you have to stay with it to get good. That's the only way you're going to see all the money that you want to make. And again, people tend to be very impatient. But if you're chunking it out every day, over time, you're going to be able to achieve your goals. Sometimes it doesn't all come in one big trade. Sometimes it's just a series of green, 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 and having less losses. When sometimes people are losing for a while, they just never really get to that point. But anyways, getting back to what I was saying, in order to be consistent, a person needs proper focus on what counts. For me, I focus on stocks that are being moved or controlled by institutional money. And how do I determine that? I rate the gap. So how are you going to know what stock to trade each day? If you decide to take my class, you will get up in the morning, you will learn the system, and you will rate the gaps yourself. Then you log in the room, I tell you what I like, what I rated, and then you would say, oh, Tesla, I saw that too. I liked it, it was good. And then that helps you learn it, and you go through it, then you get ready to trade. So again, it's all about finding the power of money. Are they going to buy the stock today? Or are they going to short it or sell it? So it's a process. It takes, you know, using your brain. Gaps have to be qualified. I don't short every bearish gap. I don't buy every bearish gap. I don't go long every bullish gap. I don't short every bullish gap. It's not that easy. And again, if you look at 1,000 things in a day, most things are nothing. Most things are crap. Most things aren't good. Unless you get the market power trending with you, most things will go with the market, and the market's very tricky and doesn't always go in a direction you can predict at all. So again, finding something that's specific where you don't need the market is the best case scenario for you to have consistent profitable trades. If I get the market's help, Friday was a good example of that. The market power trend on Friday, that's very, very rare, but it will, okay? And so it's great to be in a setup where you have everything on in the right direction of the market when that goes, but I tend to try to want to find things where I don't need the market. Like Tesla would have worked today without the market. I think Tesla got to the dream piggy target today with the help of the market, but it would have sold off anyways. Like again, we did it right out of the gate this morning from where it opened. But the checklist tells you what to look for in the price of the stock. And again, here's the Walmart we did. This was a nice one. I didn't see where this closed today. This had 3 days down. Friday, no, it was Thursday, Friday, Monday. Today was up a little bit. I don't know where this closed, but this was a nice one. Any questions here so far? Okay, we'll keep talking. The most valuable information for people to trade can be found in reading price action and gaps. Understanding chart reading of gaps and how important the patterns of price are in the market will assist you in being profitable. Reading Power Money when it sets up will help give you conviction to trade. I think when people start trading with me, they get more conviction too, because I make calls and then they go on to work and they say, how did she know how that would do that? Because I'm not a psychic. I know how to read the gap. That's how I'm doing it. It's in the chart. I just know what to look for. That's all. Seeing when and where the power money positions are getting in is like finding a gold mine. It truly, truly is. Because again, all you have to do is add a couple zeros on in size to your chart, to your trade, and you can make more money. You can't do that till you have it, but it gives you goals for the future, a way to see a way forward where you can take a small account and build it. Seeing gaps clearly in how they are creating trends, changing trends, and making momentum is a powerful way to trade. You can use this information to enter trades yourself so you can get paid along with the power money moves. So the system tells you how, what, and when. How do you make money in the market? Trade a strategy in a system that is profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stock should you trade? Stocks that gap and rate 20 points or more per the 26-point rating system. Trade the gap in the direction of the cap. So I'm never reversing it. So like if I rate it and I said, well, this isn't going to go down and it's gapping down, I don't flip it. Okay, I don't flip it then. When do you trade them? Early in the morning in the open when they set up a trigger, and you must have a structure in place to make any money at all consistently. It's about the consistency that many traders lack. So it's not about size. You make more money if you have more size, but if you're not consistent, then you can't risk a lot. So, I mean, again, I would rather see people take 100 shares, one contract, show the consistency, then they can risk more. And again, like if you even have a small account, you can risk more if you know what you're doing. It's just that a lot of times people have to go through that learning curve. Doesn't have to take a year. Could be a week, could be a month, could be a couple of days. It depends how fast it takes for you to grasp the concepts. Omar is asking is alert service. The live trading room where I call the day trades, you must be there. There's no alerts. The newsletter, the options newsletter, is a newsletter that gets emailed to you. So I don't know if you consider that an alert. It's not a text. You have to have an email account to get the options newsletter. How do I know ahead of time where stock will go? I rate the gap. I use a 26-point checklist. This checklist tells me what to trade and what to look for each day. It measures gaps by rating them on the daily chart to find stocks that have, number one, a high probability of directional bias for the entire day, preferably like Tesla. A big move of the day, again like Tesla. Early confirmation of the bias and the move between 9:30 and 10, again like Tesla. And precise entries with follow through. And a good risk to reward target potential, which was Tesla too. That's what I'm trying to look for every day. You know, that's part of trading. We don't trade the same stock every day. It'd be impossible. You don't have the same stock gapping every day. There's a good gap every day. So again, you got to put a plan of action in place. It's almost March. Get organized. Spring, change of seasons, good time to get organized. Say, I'm going to create a money management plan for myself. I'm going to make this much money a week. I have this much money to put in the trading account. I have this many days a week I'm going to trade. I'm going to do options. I'm going to do day trades, whatever you're going to do. Get yourself organized. It's up to you. Everybody's schedule's different. People live in different time zones. I had a guy this morning, he said, well, I got to get up early. I said, rate gaps at night then. Rate gaps at night then. You know, figure it out, okay? You are closer to realizing your dreams than you think. This is real and you can do it. It's real. People are doing it. I have people with me for a long time. I have people with me who are brand new that are making money. It's real. Follow your dreams. You got to get serious about it. There's no shortcuts. Everybody has a different journey. Everybody has a different plan. Everybody's doing different things. This is one of these things where you've got to get serious about what you're doing, okay? And be practical and professional. Think about your risk. Think about your trades, you know? You worked hard for your money. You don't want to take crappy trades. You don't want to take trades with no system or no strategy. So anyways, the system I use to find the gap each day is called the Golden Gap 26-point rating system. It's a checklist. This is what you learn in the class. So you can learn it all, make 2025 your best year yet, and empower yourself today to trade. So the class is called the Golden Gap course. It's a complete system to use to trade. And again, the February class was this past weekend. So the next class is not till March, okay? But you can get in and you can start trading if you want. It's a full course in how to strategically find, pick, and play stocks that are professional bearish gaps. So the class for March is March 15th, excuse me, and 16th. So it's right before St. Patty's Day. So you'd have about 2 weeks and you can get in and you can start trading with us beforehand. It's a class on how to find, pick, and play professional bearish gaps. Class tuition is $69.99. Everyone pays the same. Classes are online, and again, you get a login. I am doing a spring forward special, again, for daylight savings time. This is going on through March 9th. So this is available today. You can sign up today, start trading, but this ends on the 9th. It includes the trading room free through the end of the year and the options newsletter free through the end of the year if you sign up for the Golden Gap course by March 9th, which is daylight savings time. So again, very, very interesting times to trade. There's a lot going on. There's a lot to do. Today was an exciting day. We're going to have other exciting days. We'll see where we go. You know, I'm not short the QQQs or the SPY because I don't know what NVIDIA does. And again, NVIDIA reports Wednesday night. The market could completely flip with NVIDIA or it could continue to sell off. I don't know. So that is what I'm watching for this week. NVIDIA might not be playable. It might not even be a good gap, up or down. I don't know. But it would be a great setup if it actually does something decent. So I hope so, because that is a fun stock to trade, to go long or short. It's a big mover. It's a big mover. Any questions from anyone about anything at all? How are we doing?
Yeah, we have a question from Omar. He wants to know if you offer an alert service or a signal service.
I have a newsletter, which is an options newsletter, which the trades get emailed to you. So that is a service which is $49.99 for 6 months for the subscription or $69.99 for 12 months for the subscription. But again, that's free till the end of the year if you do the class from March, going on with that special through the 9th.
Cool. Those are all the questions that I see in both YouTube or GoToWebinar.
Wonderful. Thank you so much for having me.
Oh, of course. Always. So Melissa at thestockswoosh.com. Thank you very much, Melissa.
Thank you. Have a great night, Jeff.
Oh, will do. All right, let me go ahead and do this. Yes. All right. Very cool. We're going to move right on to our next guest, but before we do that, I'm going to see a big full screen image of myself instead of my presentation that I want to show. All right. Before we do that, I want to say thank you to one of our sponsors, Stocks and Commodities Magazine. They've been publishing articles since 1982. They've done 17,000 articles over those years. They're all available if you have a subscription in their searchable database. You can subscribe at www.traders.com. It's a great magazine. I appreciate the support that they've lent to us over the years. Our thanks. Mr. Lewis, do you want to give away a prize?
I can't think of anything I would rather do.
Okay.
Give away a prize.
Tomorrow we have Dave Landry. He's going to come and talk to us. He's going to talk. He's got like all the systems that are built into Metastock. They're great. He's going to offer in terms of the prize that we're giving away, he's going to give away a 3-month gold subscription with all of the benefits. That's the way he says it. It includes a price action members workshop, a market brief on where the market has been, and much, much more. So we're going to give away that prize. It's the only prize of its kind that we're going to give away.
All right.
I want you this time. I want you to take me outside of the U.S. Let's see if we can pick a non-US.
Google is the random number generator I'm using, and it is the global firm. It is centered in the United States, so maybe they're somehow built into their weird algorithm. So between 1 and 7545, according to Google, random generator is 2655, 2,655. By the way, while you're pulling that up, I have to say I really did enjoy, as much as I could listen to, I can't always listen to the presentations to Melissa's. I enjoy her down to earth style and the fact that she likes Seinfeld.
Oh yeah, well everybody. I like Seinfeld too.
Yeah, I think.
What is your favorite? Do you have a favorite Seinfeld episode that comes to mind?
Obviously, Soup Nazi. There's
oh yeah, that. I was thinking
it was funny in a hotel recently in Winslow, Arizona. No, in Winslow or somewhere out in the middle of nowhere. I was watching the very last episode of Seinfeld, which was horrible, but the rest of them I like.
Do you remember the Frogger episode?
Yes, of course.
All right, very cool. Greg, really quickly, why don't you tell people that might be watching on YouTube how they can be eligible for a prize? If you're watching on GoToWebinar, you already are eligible, so don't worry.
Yeah. If you're going to webinar, you're all good. If you're watching this on YouTube, all you need to do is go to metastock.com, click on that banner on the top, and register for the Traders Conference. That way you'll be eligible to be drawn from the prize list that Jeff now has.
All right. I'm looking at the time and I'm surprised that we're running ahead. Like usually that's not.
I was wondering why you. I thought I saw you doing this a little bit. I wasn't sure why that was going on. That's not usually the case, and I'm sure Silas is chomping at the bit. He's ready to go. All that.
We're going to bring him right on. But before that, I want to remind everybody. We've talked about some really good products. Our Metastock product's been rated #1 for 32 years in a row. You can get an extended trial where if you buy a month, we'll give you the second and third month for free. You can do that at metastock.com/conf promo, 800-882-3040, or metastock.com/sales chat. One thing a lot of people want, when we talk to them a little bit about what they're looking for in terms of the trading, a lot of people, either they want to find a better strategy, the one that they're working with is just not working. They want to be a little bit more educated about what they're doing, or they want to just be able to kind of go in and find stocks that have a good opportunity right now. And so it depends on where you're at in your journey. We can help you with all three of those things.
I honestly don't know how people trade without the Metastock power tools, scanning, testing. I don't. How do you do that?
I mean, I went and ran a scan just about actually right before Melissa started, towards the market close, and found some stocks. I bought a couple, and it was really, really easy. It was way easier than looking at 5,500 stocks.
Yeah, well, probably.
It took way less time too.
I'll let you and Silas add it. I'll be here if you need me.
All right, thank you, Greg. You can do that at 800-882-3040. We'd love to talk to you. You can do it at metastock.com/sales chat, metastock.com/conf promo. Our next guest is Silas Peters. Silas is awesome. We've had him on a number of times. I really like the methodologies that he's going to be talking to. He started a couple businesses, tradestrending.com and Seasonal Swing. He's been trading for over 15 years. He has a focus on equities, futures, currencies, options. He started on the Chicago Board of Trade. He's a friend of Metastock. That's why we let him come on, and we'd love to have him on. So Silas, let's go ahead and get you started.
Hey, Mr. Gibby, can you hear me okay?
We can hear you just great. Yeah.
Good. How's it going?
It's going really good. We've got a really, really well engaged and smart audience.
Awesome. I know it's been it's going to be a good week for you, a busy week, but a good one indeed, productive. And hopefully your crowd is learning lots of good nuggets of the market.
Cool. I think it's been great, and I think it's going to be even better now that you're talking.
Well, I appreciate that. I'll go ahead and get started if that's okay.
I'll get out of the way. It's fine. Go.
All right. Awesome. Thank you so much, Jeff. Always good to see you, and always good to be on the Metastock show. Let me grab the question box. If I sound like I'm moving slightly faster than normal for a guy down in South Alabama, it is. I do have to jet right near the top of the hour to get my daughter to soccer practice, but rest assured, I'm going to teach you something, a mechanical strategy. And though right when I tuned in, you guys were talking about finding good ideas. I think that's what a lot of folks are looking for, and not only finding good quality, high-eyed ideas or diamonds in the rough, but then what do you do when you find that idea? Do you actually have an entry strategy, a strategy that will give you a target, or a couple targets, give you risk? I think that is another hurdle. I don't know if there's one in any particular order. You may have ideas, coming out your ears, but have no plan of action on where to enter, how to enter, where to put your stops or your risk, and where to take profits. And so if you're looking for ideas, or you're looking for an entry and exit, a very mechanical entry and exit tool or strategy, or both, then I think you're in the right place. So let's go ahead and get started. Again, my name is Silas Peters. I'm the founder of Trades Trending and Seasonal Swing Trade. Very excited to be here. Got a large crowd, so appreciate. I know it's getting later in the day for some folks, so thanks for tuning in. Get your cup of coffee, get your favorite beverage of choice because it's 5 o'clock somewhere, and let's go ahead and get going. First, must cover the risk disclaimer. We all know that past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. So feel free to ask questions during the course of the presentation. I'm going to actually, since we have a limited amount of time together, it's very important for me to teach you this strategy so you understand it, so you can literally start using it tonight in the Asian session or in the European session, or at least tomorrow and the rest of the week. So let me go ahead and ask you guys, I want to be a little bit interactive here. Let me get my little pin tool out. What does everybody trade? What does everybody trade? I like to see the crowd here. So this strategy that I'm going to be sharing with you is what I call my 15-minute trading blueprint. I've been using this for nearly 20 years. So think about this. If I'm still using this 20 years from now, do you think it still works? So this is not some, flash in the pan, fly by night, new, holy, whiz bang widget. This is something that has been working for 20 years and it still continues to crush it. The best thing about this is its simplicity. This is a mechanical, stress-free, emotion-free trading method that can be literally applied on any market. So let's get right to it. Now, again, what I'm going to share with you today is highly accurate, works in all markets, all time frames. It's 99% mechanical, and most importantly, it is simple. And it is perfect for small accounts. I've used this strategy with $2,000 accounts, $20,000 accounts, even $100,000 plus accounts. Every market situation, from the 08 financial crisis to roaring bull markets, traded through debt crises, government shutdowns, elections, flash crashes, you name it, from scalping and intraday trading to swing trading for a few days and position trading for weeks and or months. And you can do this with small or large accounts, and it can take as little as 15 minutes a week if you wish. Now, before we dive in, let me introduce myself, who I am, maybe why you should listen to me. Other than that, I'm a simple dude, family man who thoroughly enjoys being a two-girl dad. I have a strong passion for the markets, golf, cooking, the outdoors, and Alabama football. But this is where it all got started, the great city of Chicago. It's here where I cut my teeth right out of school, working at the Chicago Board of Trade. Very quickly, I found myself working the Asia, European, early New York session trade desk, trading across the CBOT, Merck, NIBOT, NYMEX, various London and Asia exchanges, trading for our hedge fund, banks, CTAs, trading and handling some enormous size. 300 lot bond orders, 400 lot big S&P orders, 100 lot gold option orders, 250 lot Japanese government bonds. And it's such an eye-opening experience to see how the biggest traders, market makers, and funds were trading and making decisions. So I did this for a while, soaking up everything I could, everything market related. But then my college sweetheart and now my wife of nearly 20 years talked me into coming home to settle down and start a family. So we headed back down south. I immersed myself into the quieter side of finance, helping manage portfolios, equity and fixed income portfolios in this glass building here. Then went and did some investment consulting for a $2.5 billion private family office. But during this journey, I managed to stay in the market, specifically the commodity markets, running and owning some brokerage units, and then finally starting my publishing brand in 2016. And it is here where I found my real calling. And it's here where I teach students across the globe different ways they can generate the skills necessary to trade, manage portfolios, and turn their trading around in the right direction. Today, I want to help you do that too. But let's quickly go back to the journey. It wasn't always easy. There was a learning curve, several obstacles and hurdles on the path to where I am today. The first step, obviously learning. School cannot teach real life experience in the markets. Made money, substantial amount of money. Was I lucky? No, but ignorance and greed cost me my profits. I blew up an account and what I like to call revenge trading. Anybody here familiar with that? And those were extremely humbling experiences. I almost gave up, almost quit. Nothing seemed to work. I always seemed to be on the wrong side. But guess what got me back in the game? Remember, now I was in a dark place, but I went back to the very first trading setup I learned almost 20 years ago, and I got back on track, started banking wins again. I'd gone off the reservation looking for that elusive holy grail, but my journey ultimately led me back to where I had first started. So I went back to my roots, worked my repeatable process, and found overall consistency. Now, who here is a victim or has been a victim of paralysis analysis? I'm raising my hand, got the t-shirt. You know, we've all been there. We've all done all the research analysis we thought we could do, have the T's crossed, the I's dotted, finger on the mouse, ready to pull that trigger. And then what happens? Some line crosses this line, and some analyst on CNBC says you should be selling instead of buying. And then you freeze, and then you ultimately miss out on the opportunity. Well, today I want to help eliminate that, okay? We know trading is not easy, but we can simplify the process. So my agenda and promise to you today is that we're going to learn a simple and mechanical setup that is repeatable regardless of the market or time frame, okay? Now, what I'm going to show you are trade setups like this. Very clean, simple, mechanical setups, stress-free, no emotions, that allow you to follow the natural ebbs and flows of the market. You know, this is GE, okay, guys? So I'm going to show you exactly how to get long here, how to get short here. This trade in B, how to get short here, how to get long here. This trade in Bank of America, how to get short here, how to get long here. This trade on a 4-hour chart of gold, guys. This is $1,800 a contract. This is $900 a contract. A very simple, repeatable, mechanical process. That's how you need to get and treat your trading. 5-minute chart of the E-mini S&P. We've got 8 points, 2.5 points, 6 points, 4 points, all by following simple price action, okay? I think you'll probably start to see the potential here. This is a daily chart of the Aussie yen for the Forex traders. We have 150 pips. We have 440 pips, 160 pips, all by following a simple and repeatable process. Now, all these examples I've shared with you so far, can it be this simple? Well, again, we know trading is not easy. It's not easy at all, but it can be simple. You see, when I got started, I was probably a lot like you. I was sifting through, hundreds of different strategies, systems, setups, you name it. I tried all kinds of stuff. Most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and indicators, and started focusing on price action, following one simple pattern, it all started clicking. And so if you are sitting here as a new trader or a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. And I'm telling you right here, right now, that this is a simple mechanical setup that anybody can learn, and you will keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. How you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we will be discussing today is, drumroll please, the 1, 2, 3 pattern. Who here has heard of the 1, 2, 3 pattern, also referred to as the top or bottom? Let me see. Probably a lot of you. Seeing some yeses, seeing some nos. And this is one of the most fundamental technical patterns in the textbooks. I'm talking technical analysis 101, but highly, and I mean highly, overlooked by most traders. Let's talk about this setup. It's price action based. And guess what? Price action is king. Speaking of king, did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at map counts, traffic patterns, competitive analysis, on and on, until they find the perfect location for a new store. Burger King approaches it differently. They wait to see where McDonald's opens up a store. and they open one up across the street or down the block. They get the same result with a lot less time and effort. So when we relate this to trading, we can let all of the Wall Street traders and large institutions do all the research on which markets, to buy and sell. And all we have to do is look at price action, which takes into account all of their fancy processes. Basically, we're the Burger King to Wall Street's McDonald's. Now, again, price action based is comprised of a low, a higher high, a higher low, and a break at that higher high in the case that we're going long. Same rules apply, inverse if short. Anticipates a change in trend from up to down on a break below the 2 or B point, and anticipates a change in trend from down to up on a break above the 2 or B point. Now, the strategy usually occurs at the end of traded swings, can be an indication of a change in trend, can be found within a trading range. And I will stress it works extremely well when the pattern sets up as significant areas of support resistance, supply demand, other technical patterns like head, shoulder, tops, bottoms, double tops, and more. So let's take a look at the basic mechanics. Let's start with identifying 1, 2, 3 bottoms. We use 1, 2, 3 bottoms when we are bullish or looking to go long. It means we're looking to buy that stock or market, buy call options, expecting it to go higher. So with this pattern, we are waiting for price to come down and find its lowest low, retrace higher, and then pull back. That gives us our number 2. And as the market stops printing these higher lows and comes up, that's our number 3. So 1, 2, 3 bottom traders are looking to get long on breaks or closes above the number 2. 1, 2, 3 tops, same rules, just an inverse. This is when we are bearish or we're looking to go short, meaning we're expecting that market to trade lower, okay? Buying put options or selling bear calls. And rules here, we're looking for that last high here, giving us our number 1. Market retraces, pulls back up, gives us our number 2. And as we stop printing lower highs and trade down, that gives us our number 3. 1, 2, 3 top traders are looking to get short on breaks or closes below the number 2. So one of the great things about these setups here is you don't really have to worry about these first 2 legs, unless maybe we're hyper scalping on a tick chart or something. But all we really have to do to cash in on these setups is spot when it's about to go past the number 2 point. Now, let's look at some chart examples. Let's not waste any time because, as they say, seeing is believe. Now, I'm gonna let you guys and gals read all this to the right. I'm gonna look at the chart. Now, this is a daily chart of the Australian dollar futures. And if you don't trade futures, you could look at FXA, the ETF. Forex traders could look at Aussie, USD, and Forex. Okay, you can see the same pattern. So you'll notice that we have a number 1 top. That's our new high. That is our number 1 starting point. Okay, market retraces lower, pulls back up. We have a 1, 2, and 3. Now the market could have traded all the way back up here as long as we didn't take out the number 1, but we retraced by about 4 or 5 bars there and then pulled back. So our entry again is on breaks or closes below the number 2. I'm going to say this is great. Now I already know the rules of the system, but what about the other important ingredients that we need to know? Like, where's my risk and where am I putting my limit? Where am I taking profits? All great questions, very important. So our initial risk always needs to start above the high of the number 1. Our initial target is going to be the distance between the high of the 1 measured to the low of the 2 measured down. So you'll see that this is a 1-to-1 risk reward off the bat. That's okay, but we can usually do better. But it's very important to let the market materialize in its anticipated direction. So as we start breaking down here and taking out these swing lows, we can then adjust our stop where? Where's the next logical area? Yes, above the number 3 high. So now we've quickly cut our risk by maybe 70, 80%. And then the market comes and reaches our $2,200 per contract price objective. Let's look at another daily chart of Walmart. We have a new number one starting point. Why? Because that's a 52-week high. Now, let me clarify. We don't have to have a 52-week high, okay, or a 52-week low. This is just for example purposes. We'll talk about ways later you can dial that in to get more activity. And so we have a new high. We have a 1, 2, 3 pattern. We know what 99% of other traders out there are struggling with. Where am I going to get in? Well, if I get in, where am I putting my risk? Where am I taking profits? We know all that days in advance. We know we're looking to get short here on breaks or closes below the number 2. We know initial risk is going above the high of the 1, and we know our initial target is the distance between the high of the 1, measured to the low of the 2, measured down, which is about $5 in this example. Okay, let's look at 1, 2, 3 bottom examples. As you would expect, the exact same setup but inverse. Okay, 15-minute chart of the E-mini S&P. So wait, how does it make sense to look for 52-week highs or 52-week lows on an intraday chart? No. So on an intraday chart, whether it's a 2-minute, a 5-minute, a 15-minute, we're looking for what we call session highs or session lows. Okay, so wherever you start your trading day, maybe it's the 9:30 Eastern New York Cash Open, maybe it's the lunch session, maybe it's the last hour of the day, you're looking for new highs or new lows. And so here we have a new session low that gives us our number one baseline starting point. So here we have a 1, 2, 3 pattern. Let's talk about entries. A couple different entries. There is an aggressive entry where you work a buy stop, a tick or two above the number 2 high, and you get immediately triggered into the trade. An alternative method that I like is to wait for the market to come back and retest and or come back in what I call a second pass or hook. Okay. Now, sometimes the market will bust up and leave you at the train station. That's okay. Plenty of more opportunities. But sometimes the market will come up and then it will start rolling back lower and then it will roll down and stop you out. So this second confirmation here is some additional icing or confirmation if you wish to choose so. Weekly chart of Apple. Now, this is a help way to catch some longer term position type moves here. Here we have a multi-week low, excuse me, also a double bottom. Market breaks above the number 2 on this big green bullish candle, goes sideways for a few weeks, comes back down, retests, hooks back up. That's our confirmation to get long Apple. How do we play this? Well, we can buy Apple stock, we can buy call options, call debit spreads, sell bull put spreads, whatever your flavor or style may be. Now, failed trades. They don't all work. We're all big boys and girls. There's no holy grail in trading or life. This is a trade I probably took. Here, new session high, trend line break. We have a 1, 2, 3. Those aggressive traders are getting short here. If you waited for the second pass, you're getting short here. Now, how do you exercise money management? Well, as you start breaking swing lows, you may have chosen to move your stop from here to here, cutting your risk virtually in half. Or if you sat on your hands and didn't do anything, the market retraced higher and stopped you out. But guess what? We have a new setup. Why? This high is greater than this high, so that's a new 1, 2, 3 setup, and we're able to take a second trade that moves lower. Here's a good example of a no trigger or avoided trade. It's neither good, bad, nor ugly, and I'm going to tell you why I like this setup. So here we're looking to go long, but the market rolls over and says, nope, I'm going lower. We have another setup. We're looking to go long. Market decides to roll over, takes out that low. We start the count over. Finally get a lower low here, 1, 2, 3, and we get triggered long in the last setup. Now, does anybody want to take a guess of what may be going on right here in this situation? Anybody want to get a gold star on their crown today? What's going on here? When we have price making lower lows, and let's say we put an oscillator like a MACD, stochastics, RSI, and it's doing this with higher lows, what is that called? What is that called, guys? Bullish divergence. That is called bullish divergence, and some more icing that you may want to put or add on to an already high probability trade. So the 1, 2, 3 pattern trade management, Again, the confirmation of entry is on a break above the 2 or B point for a long, or a close below the 2 or B point for a short. Exit strategies want to go for the distance between the 1 and 2 if you're only trading a one lot. Why? Because with this pattern, let's say we have a 1, 2, 3 pattern. We have 1, 2, 3, and our target is sitting up here. Well, we know that more often than not, it's uncanny how often the market will come, tag that almost to a tick, and then reverse. So this is where I say, hey, take a third, half, 2/3 off here, jack your stop up to break even, and then let the rest of the trade ride, okay? As far as the balance and money management on the rest of the position, I mean, you have to figure out that for yourself. They come a dime a dozen, Parsar, moving averages, 2 to 3 bar candle stop backs. I like to just target good old fashioned supply demand levels, but you figure out what works best for you. Now, I've showed you this setup works on any market, whether you trade pips in Forex, Pepsi stock, potash, or pot stocks, pork bellies, and a Polish zloty. I've also showed you works on any time frame, whether it's a tick, 5-minute, 10, 15, hourly, daily, weekly, you name it, and on any trading style. So what is everybody's trading style here? Are you a position trader? Are you a swing trader? Are you a tick trader, scalper? What is everybody's trading style? I like to ask this question because you have to figure out what your bread and butter is, okay? There is, I'm not going to sit here and tell you that this only works on a 5-minute chart of NASDAQ or a daily chart of Alibaba. It's not true. We're trading price action, guys. So figure out what time frame or time frames work best for you and your situation, because we're all different. Some of you are working full-time jobs. Some of you don't have any interest at all to trade on an intraday chart. That's fine. So I like the 1 and 2 minute. I like the 5 and 10 on an intraday basis. I love the hourly 4 hour, and then of course I love the daily and weekly for swing and position trading. So you've seen the proof. Let's look at some real trade examples. Not to say that what you're looking at were fake examples. They were real by all means. But let's look at some examples utilized in some of our services, okay? So again, you guys and gals read all this to the right, and I'm gonna focus on the chart. So here we have a daily chart crude, and you could look at USO or energy stocks, see the exact same thing. And we have a number 1 point. Why? That's a new 52-week high. So we have a small 1, 2, 3 top, still valid, but we know what in advance. We know exactly where we are looking to enter. We know where our risk is, and we know where our target is, right? We get short here, risk here, and target here. We reach our $3 or $3,000 per contract price objective. I get asked all the time, does this work in ranging or trend-bound markets? Well, the answer is yes. We have a nice 1, 2, 3 here. Market trades up, nice move. But I'm looking for new highs and new lows, okay? And we get that. This is a new number 1 point. Why? This high is higher than that high. 1, 2, 3. We have a break down below the number 2. 4 or 5 days of retest there. Plenty of time. Nice trend line break. We're also at a point from a seasonal perspective where crude and energy stocks in general tend to trade to the downside. So this is what we call the perfect marriage in trading. Reaches our $4 or $4,000 per contract price objective. We move our stops to break even. We're at a risk-free trade, guys. Risk-free trade. The market moves down another $20,000 per contract, $20 a barrel. Okay, you're like, well, what am I doing? How am I managing this trade? Well, all you're doing is trailing your stop until you get stopped out, or you have a potential reversal. We almost have a new 1, 2, 3 there, almost have a 1, 2, 3 there. We never break above the number 2, so we stay in the trade. Market sells off another $10,000 per contract, guys. We finally get a flush low, 1, 2, 3, we break above, and we reach our $5,000 per contract price objective. Now, let's look at this particular setup using something like Metastock. Here we have a beautiful $5,800 per contract trade here, another $4,700 per contract move here. Let's look at gold. Now, this is GLD, the ETF that tracks gold futures. And here we go again. We have a new 1, 2, 3 pattern. We break down, we reach our $4 profit objective. Now we track gold lower, we get a new bottom. Anybody following some random Chinese stock news, penny stock newsletter, wondering where gold, telling you gold's going to go here or there? Who cares? We're following price action. 1, 2, 3 bottom. We trade above, reach our $2 price objective. Now, here we are again in a range-bound market. I'm looking for new highs or new lows, but here's a 1, 2, 3 here, trades up. Here's a 1, 2, 3 here. We trade lower. So those are opportunities inside of a larger pattern. Okay. Now, here we start making new lows. Here, this low is lower than this low. But what happens? Here's a 1, there's a 2, but this little guy is lower than this one, so we start to count over. No big deal. We just start to count over. We get in at better prices. 1, 2, 3, we gap up 2 days in a row. We come back, retest, hook back up. That's our cue or signal to get long. Buy gold futures. Mini, micros, calls, GLD, sell bull put spreads. That's how we do it. Okay. Here's a $10,000 per contract move in gold futures. Delta Airlines. I know this is becoming redundant right now, but I'm trying to continue to hit home the fact on how rents and repeatable this is. Is everybody following me up to this point? Because I will try and slow down if I need to. Here we have a new 1, 2, 3 bottom. 1, 2, 3 bottom. We reach our $4 per contract move higher plus some new high. 1, 2, 3. We gap down. I don't personally trade the gaps, but I've got students and members that will aggressively be buying put options here. Okay, we get a new high, new number 1 high, higher than this high. 1, 2, 3. We get a breakdown, small retest, $8 plus move, new low. 1, 2, 3. Break above, trades higher, comes back, retests, hooks back up, $8 plus to the upside. How about that plot there in Metastock? Entry, 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 target, 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 target. Okay? For Forex traders, 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. Here we have a multi-session low. Double bottom as well, 1, 2, 3 bottom. Remember the entry methods, aggressive traders could get long here above the number 2 high, or you wait for the hook, the retrace and hook back up. You hit your 70 pip profit objective. And you say, well, what's next? Well, nothing's next until we get a potential reversal. So maybe a 1, 2, nope, maybe a 1, 2, nope, maybe a 1, 2, nope. Maybe a 1, 2, nope, and then finally get a 1, 2, the smaller one. Still good. 1, 2, 3 pattern up here. Okay, that's all we're doing. Break down, come back up, and hook back down. Hit your 40 pip profit objective. CAD Swissy. Here we are. 80 pips, 70 pips, 35 pips, 70 pips, 55 pips. Day traders. Any day traders out there? Yes, yes there are. 5-8 chart at NASDAQ. Here we are on a 1, 2, 3 bottom, new session low. We hook up, we come down, we hook back up again, hit our 13-point profit objective. This is a new session high that starts the number 1 count. 1, 2, 3, break down here, go sideways. We got to pop some tums, and then finally breaking down and reaching our 20-point profit objective. This happens to be a session low. Starts at number 1 count. 1, 2, 3. We break above the number 2. If you're lucky enough to get long on that retest, you're filled on your 30-point profit objective in about 2 bars. Okay. Here we are, 137 ticks, 60 ticks, 91 ticks. Guys, the markets are moving more than they have in a while. Trending, volatile regimes, it doesn't matter, guys. It's just price action at the end of the day. So why are you here? Why are you here? To learn a mechanical, done-for-you strategy for all markets and all time frames. So this is the part where I ask you, have I fulfilled my promise? Have I fulfilled my promise? Type a Y, a yes, a hell yes if you're feeling frisky. Type a no if I haven't fulfilled my promise. But I'm not sure if it gets any more mechanical, simple, or easy. There's really no guessing where to get in, where to get out. If we had 100 traders looking at the same chart, we should all have at least 99 seeing the same thing. There's always one person out there that's going to try and turn this into rocket surgery, okay? That's not what we're trying to do. But wait, there's more. What if I told you that this strategy was automated? What if I told you the strategy was plotted onto your chart for you? What if I told you the trigger entry and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be pretty freaking amazing. And do you remember the charts that I shared with you earlier? The charts I shared with you earlier on crude, gold, Delta, NASDAQ, all that. Yeah. So you could do all of this by yourself, but why would you when you can use the power of technology? So remember that chart in crude oil, we have the 1, 2, 3 pattern plotted onto your chart. If and only if we break below or break above that number 2, you're going to get the beautiful lines plotted onto your chart. Blue line is your entry line. Red line is your risk. Lime green line is TP1 or target 1, and dark green line is TP2. Remember that TP1 is the distance between the high of the 1 to the low of the 2 measured down, and TP2 is simply 2 times the distance of TP1. Now you see these arrows. This is telling us that we have new number 1 points. We have new number 1s, and so we're starting to count. We never break above the number 2 here, never break above the number 2 here, and we finally get that reversal down there. So yes, this is a reversal pattern. Here we are in gold. Gold slinging off. You're not doing a damn thing until you get your pattern here. We get our signal, target 1, target 2. You're not getting anything in the middle because you're waiting for new highs or new lows. You can see the green arrows. That's giving you a clue. Hey, we are looking for new number 1 points here. We finally get that right here, this bad boy. There we are. Lines plot, target 1, target 2. You see we're starting to work a new 1, 2, 3 top over there on the right-hand side. Delta Airlines, there's your long, there's your short, there's your short, there's your long. 5-minute chart of the NASDAQ. 5-minute chart of the NASDAQ here. Here we get our setup. We hit target 1, hit target 2 to the tick, which has to be a session low. We get a new setup. 1, 2, 3. Here we are. We come down. We hook back up. We hit target 1. We don't quite hit target 2, but it's close enough for government work. Shouldn't lost any money. And then we go sideways. It's what? New session low. Right here. Lower low. It starts to count over. The market just nips its little head there above the number 2, comes down, hooks back up, and then we hit target 1. And as we're waiting for target 2, guess what? We're making new session highs. This clues us in that we may need to get ready to reverse our positions, okay? Now, we do hit target 2, and we get a new signal. 1, 2, 3. There's our entry. We come up, we hook back down, target 1, target 2, we start to get a new setup. So is this traded for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise we talked about, the indicator overload, paralysis analysis, if you just want to simplify your process and add another strategy to your toolbox, and maybe you're already successful, who doesn't want another successful strategy? Or if you need a specific step-by-step plan, avoid learning this on your own, then this could be for you. This is something that anybody could do, even part-time, if you wish to do so. Look at these setups, guys. Cardinal Health, could you run a scan across stocks, run a scan across futures, run a scan across currencies, cryptos, whatever it is you trade, and find these simple, easy, low-hanging fruit? Yeah, let's chart on Cardinal Health. That will find the trade for you, print your entry, target, and stop, your entry, targets, and stop on autopilot. Google. How can we trade Google? Well, we can short the stock. We can sell bear call spreads. We can buy puts. Same thing here. This high, higher than this high. We can sell bear call spreads, sell the stock, buy puts. Here we are on a 4-hour chart of the Canadian dollar. There's your long, there's your short. Here we are on the even S&P. Tick charts. Those that like to scalp and love action, man, there are setups all day long, guys, all day long on the 233 and 610 tick chart. But why do all the work? Why do all the work when you can let technology do the work for you? Here I'm scanning for 1, 2, 3 tops in the Russell 1000, only stocks that are optional, $20 a share or greater. I hit the easy button and I get a myriad of results that would have normally taken me probably several hours or days to find on my own. Okay, we've got this bad boy built for Metastock. Beautiful, so clean, so sexy, beautiful entry points, beautiful targets, beautiful risk, rinse and repeat. We've had it built for TradeStation. We've had it built for NinjaTrader 8. We've had it built for wealth charts, indicator, scanner components, trading view here. This is a 4-hour chart of Apple. No scanner, full disclaimer, no scanner on trading view. It's a limitation of their platform. And then also on MetaTrader 4, 4-hour chart of the Euro Kiwi. There's your long, there's your short, there's your short, and there's your long. No repainting, guys. No repainting. What you see is what you get. What you see on my screen, what you're going to see on yours when you load it onto your platform of choice. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me with a process, a rinse and repeat process where I go into my platform, I let Metastock, I let the technology, I let the platform scan it for me. Locating that setup, I go into the platform for entry and I manage to trade through exit. And you can start today profiting from these predictable patterns with what we call the 3S code. Now, here is the offer you simply cannot refuse. Now, we've limited this to 25 spots because we like to ensure the user experience is top notch. Here's what you're going to get. With the 3S code, you're going to get access to the indicator and scanner, the 3S code optimizer, access to our weekly strategy and scan sessions, and our private Telegram room, all for a one-time lifetime payment of $397. You can go to metastock.com, metastock.com, and put that into the chat, metastock.com/code, and you can call 800-882-3040 for those that like to speak to a human being, okay? Now, let's make sure it's crystal clear, guys. With this package, these are the platforms that you get access to: Metastock, Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MT4, and Wealth Charts. You're going to get access to indicator and scanner for all of these platforms right here, Indy only there on TradingView. So it's a no-brainer there for those using Metastock. You've got a scanner built in, doing all of the heavy lifting for you, so you have an idea generator. Remember, we talked about that early there on in the presentation. Now, you're going to get access to our weekly strategy and scan sessions. Our next session is this Thursday at 11 a.m. Eastern. We cover my top setups. We cover day and swing trading using the 3S code, using options, minis, micros, so much more. Every session you are invited to for life. Every Thursday, they're all recorded, archived, put into the member session for your viewing convenience. And then the indicator and scanner. I want to make sure you guys understand. You're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas that include the entry, exit, stop, target levels, all color coded. If you don't like red, you want hot magenta. You don't like lime green, you want dark green, have at it, folks. You can customize the settings, choose multiple look back periods. You can scan for setups only, trigger only, or both. You can scan for tops, bottoms, or both. You can scan for intraday setups, swing setups, position setups, or both, any or all of the above. It's extremely flexible. You're also going to get the 3S Code Optimizer, guys. This is where you can choose to come in and run different back tests across different variables based on your personal optimization parameters that fit your trading style need. Here we're running the optimizer there and across crude oil. You can see the results down there. Here we're running the optimizer on British pound. You can see the results. Here we're running the optimizer in TradeStation. You can see all of your results and stats. Here we are at Ninja, different variables, and then all of your results and stats. Now, I also want to throw in some additional bonuses for you. You're going to get the Chart Pattern Principle Trading Manual and Guide. This will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way, and how we also use the power of seasonality to trade the 1, 2, 3 pattern. You're also going to get my 25 top options strategy guide. This is great regardless of your knowledge of options. I include this because I believe options are a very powerful trading instrument if you know how to use them properly. So it's important for me to include this so everybody can take advantage of options if they wish to do so and do it the right way using the 3S code. You're also going to get access to our private Telegram channel. Again, every single day I'm sharing an idea. Could be across stocks, ETFs, indices, commodities, currencies, FX, different setups. I'm sharing an idea, an actionable idea every single day, guys. You're going to get access to this by being one of the top 25, going to metastock.com/code. Now, these are client success stories. I don't ask for these. They come in all the time. It's very humbling, very pleasing. And again, it's what makes it all worth it, right? It's because people are taking action. You can buy whatever widget or indicator or system or bot or methodology or whatever it is that is out there in the trading universe. But the only way you're going to see results is by taking action. These people are taking action using the 3S code, and they're finding results. So who is ready? Let's go ahead and get started, guys. You go to metastock.com/code. Here is your complete offer. Once again, guys, this is a lifetime, one-time fee. You own it for life, okay? We also do not limit this to just, well, you can only get it for this platform or that platform. For those of you that use Metastock and maybe something else, maybe those that want to add this on your laptop and your PC, you have the flexibility to do that, okay? So what I'm going to do is answer some questions if you don't mind. I've got about 5 minutes here, 3 or 4 or 5 minutes here, and I'll turn it back to Mr. Gibby and the Metastock team. So question I have, can you use it with options? So yes, we covered that. So the way that we do this is, let's say that you've got XYZ market, okay, and you've got your highs and you've got your lows. The best places to enter, obviously, in whether regardless of the strategy you're using, are to look for these patterns when we are at these swing highs or swing lows. And so when we get a pattern, say up here, the way that I like to use options is sell bear call spreads, credit spreads. Now, I realize not everybody can do that, or maybe you don't have an interest, and that's perfectly fine. So you can buy puts or put debit spreads if that is your flavor or style, okay? On the downside, if we have a market coming down and we have a 1, 2, 3 setup here, we know that we're in a high probability area of a reversal. I like to sell bull put spreads. Those that don't like to sell bull put spreads or do credit spreads, buy a call, buy a simple call, buy a call debit spread, trade minis, micros. It's very, very flexible. Yes, it does work on currencies and futures. We showed you several setups there. Yes, you can choose, you can change the settings to see more setups. So if you want to change the settings to see more, that's going to be more of an aggressive style. If you expand that out to see less, it's going to be more conservative. Okay. How many setups a day? How many setups a day? That's impossible to answer. It depends on the time frame, right? If you're looking at a 233 or 610 tick chart or a 1 minute or 2 minute, you're going to see a lot more setups than if you're just looking at a daily or weekly. Let's see, Scott, we showed examples there. Toss and Tracy. Bots, we do not have an automated bot where it's actually going to execute on your behalf. We do not have that available at this time. Do we have an alert service? So we do have different alert services. This is an indicator and strategy package, Jeff, but if you want to reach out to our team, support@tradetrade.com with those questions, that's fine. Nope, no, Simon, this is a one-time lifetime fee. The only monthly fee that you might incur is maybe for a particular platform or data, but this indicator is suite is a one-time payment for all the platforms we mentioned. Yes, so it will print. So if you have a 1, 2, 3 pattern like this, this is called setup mode. It's in setup because it hasn't triggered. If you have it scanning for trigger, that means that prices would have already traded through the number 2. So as soon as, if you have a 1, 2, 3 like this, the plots are going to print once price takes out the number 2 high. So once they take out the number 2 high, you're going to get target 1, target 2, and your risk. Mr. Gibby, I'm going to turn it back over to you if that's okay. I want to say thank you for having me on. Great crowd as always. I appreciate it very much. And I want to welcome our students. I think your guys shot me a message. We're like 16, 17 units. So I appreciate it. I welcome our new students and look forward to seeing you in our Thursday class. So take care, everybody. Stay safe out there, and we'll see you on the flip side. Thanks again to Metastock.
Thank you, Silas. I really appreciate that. I'm gonna go ahead and grab the control again. Thanks for sharing some time with us. Okay.
Absolutely, thank you.
All right, have fun too. All right, good. Let me go ahead and do this. Okay. All right, we'll turn this on. I love the way that this is actually drawn on the chart. I love the way that it kind of is illuminated, the way that it's automatically identified. And you know, I've heard this, seen this as a W pattern or a top. I just love the way that it's kind of automatically drawn. I like the way it was integrated in Metastock. It's got the automatic pattern identification. You can see right here, 1, 2, 3. Those are labeled. Those are labeled by the algorithm. They're not actually drawn. They're not handwritten on there. As soon as you get that, you'll get a setup. You'll get your target. You'll get your second target. You'll get a stop loss. All of that stuff gets drawn on the chart. It's all automatic, and you don't have to worry about it. So it's also completely customizable. You can go in there and you can change the values. You can say, hey, I want at least this much room between my first point and my second point. I want this many bars between my second and third point. You can go in and adjust the profit targets and the stop losses, all that kind of stuff. You can kind of go in the code. Expert commentary, you're going to be able to get in Metastock. That's going to kind of keep you apprised of what you're doing. It's going to tell you exactly what your stop loss is, your profit target. Everything is kind of spelled out It's drawn out for you. It does a very, very good job. And of course, it's got scanning. And I may be biased, but I'm not the only one that has said this today. One of the best scanners that's available in there. With the way that the scan's written, you can go and scan any market you want. So if you're in India, it's pretty late in the morning. It's late at night for you, but you can go and scan your Indian stocks, your US stocks, your Australian stocks, whatever it is you're interested in. All of that's going to kind of come in. And again, scanning, is something that we do very, very well. Any market that you want, you can scan. Any list that you want, it's going to go out, chunk through the numbers and give you the result right now. Not something that was run yesterday on yesterday's numbers, on the data as it exists. Even in the DC version of Metastock, if you run a scan right now, you're going to get today's data. If you run it during the day, you're going to get data about 15 minutes ago. All of that's available, and it's just something that's so unique to Metastock. It does support a lot of different platforms, as kind of Silas had talked about. We'll also give you a trial to Metastock as part of your purchase. If you want to get it and use it for Thinkorswim or something like that, I'd encourage you to try it with Metastock, because I think one of the things that you'll find is, man, it's so much easier to kind of go in and just scan and find those opportunities and get that written out for you. So for the $497 one-time cost, you're going to get his Telegram room, the patterns, his chart pattern principle course, the pattern cheat sheet, the 25 option strategy guide. You'll get a VIP support to help you get set up. It's actually pretty easy. If you've already got Metastock, you run an executable and it's in there for you. And that monthly strategy scan session forever. Remember, this is a one-time cost. You pay for it one time. So, ooh, this formatting got a little bit messed up. Let's go ahead and make that legible. All right, that's better already. All right, cool. Go ahead and hit this. So the conference special is $397. We're going to give you that on a money-back guarantee. Metastock.com/code. You can also get it at metastock.com/conf promo. You can also call 800-882-3040, or you go to metastock.com/sales chat. Any of those will be ways that we can kind of help you get everything set up and running. So there you go. Do it. Give it a go. It's, again, 30-day money-back guarantee. You can try it. Make sure you like it. There you go. All right. And again, I accidentally hit on the sales chat. I do want to invite you to come and be part of the forum. If you haven't yet, you can join our community of traders. It's growing. There's live chat. You can share ideas with other traders. You can learn about the markets. You can learn about patterns. It's a community of traders helping traders. You can join for free. www.thetradersforum.com. Thank you to the Traders Forum for sponsoring today's event. And of course, we are Metastock. Metastock's been the top rated program in its price category for 32 years in a row. We've talked about how it can help you scan the market to find the best opportunities that exist out there. You can test trading ideas. Kelly did a great demo on testing ideas. Tomorrow, Scott's going to come in and talk about our patented forecaster and how it can use some statistics to help you identify probabilities and price action. Does a really good job with that. Of course, you get real-time commentary, alerts, signals. All that starts at about $75 a month, $74.95 to be precise. You can buy a month. We'll give you the second and third month for free. We'll also sit down with you. We'll have somebody go through the software with you. They'll show you around. We call it a one-on-one. You'll have unlimited access to our support. You'll have training materials. For about $25 a month, you'll be able to use this until May 25th. Give us a call. Get set up for it. There is a reason it's been rated #1 for 32 years straight. 800-882-3040. Metastock.com/conf promo or metastock.com/sales chat. Greg, let's go ahead and give away a prize real quick, if you don't mind.
I don't mind. Sorry, my mute button was hidden under another.
Oh, it's the last prize of the day. Do you know what that means?
I don't know what that means. I hope it doesn't involve me having to do anything too flexible.
Oh, no, I don't think we really need that.
Okay. Oh, look, Rob came. I was glad. I was just starting to worry about Mr. Booker, whether he would arrive or not, and he just logged in.
I had no doubts.
Okay. That is so sweet of you to worry about me.
Well,
you're the only man to ever say those words to me. Thank you.
Rob, I knew you'd be here. I had no doubts, unlike Greg.
It's great. Nice to see you.
All right. Actually, Rob, since you're talking, Greg, I'm gonna let Rob help me with the prize.
That sounds delightful. I will gladly bow out and Rob, break a leg.
All right, Rob, we're gonna give away a Metastock prize. So we're gonna give away 3 months of our real-time Metastock service, our software, if you would. We've talked about scanning and testing and forecasting. We're gonna give away 3 months of that. We're going to give away our Metastock Zenith. Metastock Zenith is the news platform that was originally designed at the cost of over $1 billion by a company called Reuters. It's now owned by the London Stock Exchange Group, but it's still powered by the Reuters news infrastructure. They've got several thousand reporters and several hundred offices. And they have a very, let's say, professional news service, one of the biggest in the world. And it's going to give you like just thousands of company research items, all kinds of macroeconomic data, anything you could want, you're going to be able to find in the Zenith service. Normally a value of about $165. We're also going to give 3 months of the Learn Metastock service, which is normally $99 a month. So great package. We're going to give it away for free to one lucky winner. And Rob, what I need from you to help me identify this one lucky winner is I just need you to give me a number. And that number, well, let me tell you the range first. And then if you still want to go at 25, that's cool. I don't care. But it could be anywhere between 1 and 7,545.
Wow, that's a great 25. Let's go double 25s.
Okay, you got it. Okay, Donald S. in the USA. And with a SBC Global email. So not a Gmail this time, but we're still in the US. Rob, thank you very much. Let me go ahead and kind of, okay. I have your picture here somewhere.
Wow, look at that. Look at that. Look at that scruffy looking guy with all that short hair.
Rob and I have been friends for a while.
Yeah.
He's an accomplished author, trader, and podcast host. He travels all over the world teaching his unique strategies for trading, and that's all you get from his bio. But I can tell you this, Rob's always fun. He's got such, I love having him on here. He always brings a crowd and he always does a really good job. So that's the introduction you're going to get from me, Rob. I hope you like it.
That is just beautiful. I'm going to log into a couple things. I thought I would show my accounts and I just have to, I have all this two-factor authentication stuff that goes on now. It's like the whole world has gone two-factor authentication. Here we go. There we go.
They got us this, or these little keys.
Yeah.
And I have to say, they're kind of a pain if you can't find them, but they make things very, very easy because you don't have to remember all of that. You just have to have your key.
I kept losing my fob for my apartment building, so I hacked the system and I transferred my apartment key fob onto a ring. And now I just have to, I just push the ring up against all the sensors, and the management's like, what are you doing? The management is like, what are you doing? I'm like, don't worry about it. It's none of your business. It's like, so.
And I'm in here legitimately. Don't worry about me.
I live here. Don't worry about it. Yeah, when I move out, I'll tell you everything. So, oh, that's great.
Rob, I can see your screen.
Jeffrey, how are you? How's work? How's business? Before I get into it, how's everything going?
Great. We're doing this big conference this week. We've had a lot of really good guests on. It's been fun. I enjoy them. But yeah, everything's going very well.
That's great. Thank you so much for having me. It's always a pleasure to be here. And hi, everybody. If you don't know me, it's nice to be here with you. And if you've met me before, it's nice to see you again. I'd like to start things off with just a little bit of an introduction. Sometimes I show this second, sometimes I show this first. This is one of my live trading accounts. We can look at as much as you want today. I want to start things off, and I'll say this again in a moment. I don't sell anything, not that that's bad, nobody cares, but I don't sell anything. I'm not here to sell you anything. I've got a free course for you. I actually don't sell anything anymore. I just do my trading, and my son is cooking some pasta behind me, and I just live here in Austin, Texas, and sometimes in Houston. Today's an important day for me, and I hope you don't mind. And I'm not bragging. I've reached a milestone.
Today will be my first $25,000 day as a short seller. I'm going to close this trade probably tomorrow morning, but I may close this in the after-hour session before the after-hours is over. I fought my way through this position. This was. We may go into this a little bit if you want to talk a little bit about what to do when things go really wrong with a trade. This trade was very much upside down the other day, a couple of days ago, and I kept my cool. I learned a lot from the situation. It's funny how like a really bad trade became a really positive experience, which was not the way things went for most of the time for me. And this was a real bright spot in a very difficult last few days of trading, which I'm sure you've probably experienced as well. And so this will be like I said, this is a single trade on MLGO. I shorted this on Friday, and today it's up $25,282.40. So yeah, I really trade. This is what I do. I don't have anything for sale. I got a free course. I'll tell you a little bit in that course. You learn how I take this trade and others. And I just want to be a part of your journey in a positive way. I don't speak very much anymore. I kind of disappeared off the face of the earth and just traded and had a good life. And so it's nice to be here with you. So I'm going to pop back over to the slides if I can find them where I had them. And then we can go there. All right. A while back, million years ago, actually, last time I spoke about this was 7 years ago, actually, Knoxville divergence. And I think there's an add-on in Metastock for this. And if not, the concepts that I share with you today will be pretty clear, and you'll be able to do this kind of on your own. And I hope that I'm able to help you out. I'd love for there to be some time for Q&A. There's no way in the world I'm going to take up the entire amount of time that I have, because most of what I do is incredibly simple and straightforward. Jeffrey can pop in and let me know. I think I have 45 minutes plus some Q&A, or 25 minutes.
Okay. For sure. Yeah, we've got you scheduled till 5 o'clock Mountain, which is 7 Eastern.
Okay, perfect. All right, so hi everybody, I'm Rob. My name is Rob Booker. I live in Austin, Texas and Houston, Texas. I've been trading for 25 years now. I am primarily a short seller.
I'm gonna get your attention though, Rob.
Yeah.
I know Greg is gonna want you to go to the slideshow view of your presentation if you can.
Oh yeah, hey Greg, no.
Okay.
Totally joking. Totally joking.
I just suggested that for his sake. I don't care.
No, it's great. I do this at the beginning just to make sure I know what I'm doing and I know what's coming next, but I will switch over and you're wonderful. And I'm just joking around. Okay. So nice to meet you, everybody. I've been trading for 25 years. Used to be a currency trader. I managed some money for a little while. And for the last 2.5 years, I've been primarily, almost exclusively a short seller. It's what I learned to do best. And it is dangerous, it is risky, it does come with some caveats, but it's actually the only way I've ever been able to ever share with my friends. I teach my friends for free. I've never found another way to teach anyone to trade that made them money. So, and I've never met a long biased day trader ever, who shares their P&L or their account statements and is trading for a living, ever. I'm sure they exist. Long biased only, day trader. I've met long biased only long-term traders and put sellers and things like that. But something occurred to me about 2.5 years ago, and I realized all of the day traders that I'd known, Jack Kellogg, Kyle Williams, and all the day traders I've never met that were trading for a living were short sellers primarily. And they do buy stocks every now and then. But anyway, so I switched, I changed how I traded to fit what worked rather than what I thought I liked. And it turned out I really like this. I don't have anything to sell you today. I don't sell anything anymore. I used to. I sold stuff for 20 plus years. I loved doing it. I was very good at it. I probably sold $70 million worth of financial education products and services for other companies. So I didn't get the 70 million, but it's probably even more than that. And I was paid well to do it. But now all I really do is trade. I don't enjoy selling stuff. I like talking about it though. I have a free course for you. We'll put this link in the chat box a little bit later also. It's robbooker.com/free course. There's no credit card form, there's no upsell, there's no follow-up emails that say, do you want to buy my trading room? There's nothing wrong with any of that. I get asked all the time, would I please start a trading room? And the answer is, I'm not interested. So today what I'd like to do is I'd like to talk a little bit about divergence and the concept of divergence and how it might fit into the analysis that you do on stocks. I'm going to draw from a presentation that I gave here in 2018, and I'll draw from that. And then maybe, if you're interested, I will share the story of this this trade that has turned out very nicely, and I will tell you a horribly embarrassing, somewhat shameful experience where I got into this trade and it went the wrong way, and I didn't make the correct decisions. And I'll talk a little bit about how I worked through that trade. I don't think anybody here's ever had. That's never happened, right? No one's ever had a trade go wrong. Certainly not a guru. Certainly not an educator has ever had a trade go wrong. On Friday, that trade that's up $25,000 right now was down $100,000. It's the largest drawdown I've ever had in my life on a $1.3 million of capital. So it's a 10% drawdown, but horrifying. And I made the right decisions under some difficult circumstances. And if you want to hear a little bit about that, we can talk about it later. All right, to start off, this is divergence. In a nutshell, here is Knoxville divergence. Knoxville divergence was created in 2013. I was doing a radio show at the time. I was on for an hour before Dave Ramsey on AM Talk Radio, and I talked about stocks. And I was driving across the country and literally staying overnight at listeners' homes because I'm an idiot. And that was, it was a bizarre idea, but it was also wonderful. And I was sitting in a coffee shop, the Old City Java House in Knoxville, Tennessee, and I was having a cappuccino, and I sat down and I programmed Knoxville divergence. And it had been on my mind for a while, but I just had this sort of epiphany, or this moment where I realized that the market or a stock will give you a warning sign that it's about to turn. There's no way to predict exactly where a stock will turn, whether up or down, but there are warning signs that are given when that happens. So here's Knoxville divergence. It's called Knoxville because I wrote the code in Knoxville, Tennessee. Number 1 above, you will see an arrow pointing to a stock that is declining. Now, I'm guessing that most of you are long bias traders, and I'm probably guessing that there's a fair number of you that are options traders. Now, I do like occasionally to trade options, but I generally actually sell puts. So if I were looking at this and this, let's say this were Tesla, which is falling today. If this were Tesla and I were looking to buy some Tesla stock, I wouldn't buy Tesla stock. The easiest way to buy a stock is to simply buy more stock. But what I do is something that my friend Marcus Heitkotter of Rockwell Trading taught me to do. He taught me to sell puts, and if the stock fell far enough, I would have sold the put. I would have made a promise to buy the stock if it fell far enough, but I already wanted to buy the stock, so I didn't mind doing it. And so if I like to buy a stock, what I will do is I will sell a put. Sometimes it will drop, sometimes it won't. If it doesn't drop, I keep the premium and don't buy the stock. If it does fall below the strike price, I have to buy the stock, but I also get to keep the premium and put that towards the buying of the stock. So let's assume for a minute, this is the Australian dollar, Canadian dollar on the chart here, but let's assume it's Apple or Tesla or Nvidia, which is reporting earnings tomorrow after the bell. So Knoxville divergence is when a stock is falling, and you can see there where the red arrows are pointing and the green arrows pointing in these circled areas. You can see a green line underneath the candles. So the stock is falling. In area number 2, you'll notice that the momentum is turning upward while the stock is falling downward. And in number 3, you can see that the relative strength index, or the RSI, set to 14 or 21, frankly, I don't care, is in oversold territory. So 3 things are happening at the same time. A financial instrument that we know and love, Apple, Nvidia, Altria that pays a wonderful 10% annual dividend, something like that. The stock is falling. A high quality financial instrument is falling. It's going on sale. In area number 2, while the stock is dropping, the momentum is rising. I was in Mexico the last 4 days in Puerto Vallarta, and my room looked out over the Pacific Ocean, and there were these birds that would swoop down and dive into the ocean and come back up with a bird or with a fish or something. So they would dive in and they would come back up. Now, the bird will go lower into the water, but as it goes deeper into the water, it naturally slows down because the bird is full of air and the water is displaced, but not enough. And so the bird will come back up naturally. And that's what Knoxville divergence essentially is. Although it is falling lower, it struggles to go any lower and lower. And eventually, physics, math, science alone will bring that back up. Market physics is divergence. Divergence is the disagreement between the direction of a stock and the direction of an oscillator or a measure of momentum. So as the stock is falling, the momentum indicator is rising, suggesting that this stock is like a bird in the water being buoyed up. So although the stock is falling further, momentum is rising. It's an early warning sign that the stock is actually going to turn upward, not a lot necessarily, but enough for a nice plush win on a call option if you like to buy options or on something else. Multiple divergences in a row are wonderful, but even better are multiple divergences that occur at a natural area of support and resistance, or in this case, support. Number 3 is important because what we also want to see is Knoxville divergence accompanied by some kind of deep oversold level, something that takes the relative strength index into oversold territory. Why do I say that? Well, a bird that swoops down, a big bird, the biggest bird you can find, it swoops down, it might go a little deeper into the ocean. It might be able to get underneath the surface of the water a little bit deeper. But there's a point at which, statistically speaking, that's the deepest a bird has ever gone. Well, the same is true of the relative strength index. This is simply measuring how far down has this gone relative to what it has recently been able to do without rising. So it gives us yet another level of confirmation. Now, I used to say that confirmation is for Catholics. Like I used to say that. And I always thought that was kind of funny. Multiple, if you need lots of confirmation, get out of the business of trading. Well, I don't think that's true anymore. I think multiple levels of confirmation are good. It's good if you meet someone and you're dating them and you get multiple levels of confirmation that they're not a complete nut, right? It's good. That's good. So you want some confirmation. And the confirmation that I prefer in this situation is that it was also oversold. And when you have these things lining up, and when these things are together on the same chart, instead of having to look at all of these things, conveniently, there's simply a line that appears underneath the price, underneath the candles, that tells you all of those things just happened. And then you could buy the stock, buy a call option, sell a put, especially on some kind of candle pattern. So if you're a fan of Stephen Bigelow or someone that teaches candles, love Stephen. Like if you're a fan of someone like that, you could use a candle pattern, you could use a bounce pattern, you could do a trend line break or something like that, and then you could simply execute your trade and go from there. We'll talk a little bit about profit targets and whatnot. This is an example of bearish divergence. I'm a bear. That's what I do. I'm a card carrying, short selling fanatic. I find it disturbing when someone says that short sellers are risky and short sellers lose all their money. It disturbs me when people say that short sellers are risking their entire accounts. I don't risk my entire account. I have losses just like everybody else. And I've met plenty of people who bought options or bought stocks and lost everything. It's about risk management. It's not really about anything else. So this is the kind of Knoxville divergence that you would, if you caught me looking at some charts late at night, I would be looking for stocks to short. And I would be using Knoxville divergence to help me out on the longer term charts. In this example, this financial instrument, in this case, an Australian dollar, Canadian dollar, it could be Apple, it could be NVIDIA, it could be anything. It could be on a 15-minute chart, it could be on a daily chart. You can do Knoxville divergence on any time frame chart. The shorter the time frame chart, the shorter you'll be in the trade. The longer the time frame chart, the longer you'll be in the trade. In this example, a red line appears above the candles on the chart. This tells us that the stock has been rising, but momentum is falling. If you throw a ball in the air, in the first millisecond that the ball leaves your hand, it's rising. Another millisecond later, it's higher than it was before, and then it's higher than it was before, and then it's higher than it was before. But eventually, although it is higher than it's ever been in the last moment, it's actually moving slower. Knoxville bearish divergence is when a financial instrument is rising and rising and rising, but the momentum is dropping, suggesting that gravity is at work. Market physics. This is math. This isn't speculation, and this isn't conjecture. This is market physics. It's just science. This stock has gone up too far, too fast, and the Knoxville divergence is an early warning sign that it will fall. It doesn't mean that I will immediately short. It means, hey, pay attention to this. Now, I'm especially going to pay attention if also I'm looking at a worthless garbage stock. For instance, recently I shorted MLGO. I can't for the life of you or me remember right now what MLGO does. We'll look it up, and maybe I'm just scarred from the experience, but I actually forgot what the company does. I don't usually forget what the company does. That's pretty funny. But MLGO is a money-losing company that had a stock that popped. And every single time over the last 24 months that MLGO jumped, it came crashing back down because they don't really have any products or services that make any money. And the only money they've ever made is from selling more shares to an unsuspecting public. And they will commonly and frequently pay a stock service, and dare I say even a guru, to promote the stock and pump the stock. They will pay $25,000 to $100,000 for 1, 2, or 3 emails and some text messages. And if you're wondering if we're all in the wrong business, you're absolutely right. And if you are devoid of ethics, and Roy Cohn if you're a super Roy Cohn fan, go ahead, start your business, get an email list and a text messaging list, and start pumping stocks, because it's the highest quality revenue ever. But it seems kind of shady and unethical. So anyway, a money-losing company pops up and then drops. Recently, I bought puts on Carvana. It showed Knoxville divergence on the long-term charts. I bought some puts 2 weeks ago, and Carvana recently, in the last few days, as the market went through a correction phase, it dropped. But also, side note, Carvana is largely controlled by one shareholder who there are some suspicions and rumors that there is a little bit of self-dealing, and there's some money flowing out of the company as loans. There is some concern that the only money that Carvana has ever made is from the financing arm, because they will finance it and then sell off the loans, and they're running out of loans to sell, and they don't make money on the actual sales of the cars. They actually lose money on every car they sell, and occasionally they don't even have the titles of the car. Listen, Carvana seems to have problems, and so I bought some puts on Carvana when it showed Knoxville divergence. So I look for low quality companies that are caught up in the rising tide that's lifting all boats. And a stock will commonly fall faster than it will rise. We all know that to be true, right? It takes 4 months for a stock to jump up, and it takes 5 minutes, it seems, for that stock to crash so far down that it just ruins everybody. This is bullish Knoxville divergence. You can see here that on the bullish Knoxville divergence, it printed the divergence and then printed 1, 2, 3, 4, 5 times a lady. It printed 5 bearish candles, and then it printed a bull candle. So maybe that would be the buy trade, when the bulls have finally taken and wrested control back from the bears. The bears And that's a really wonderful signal. Sometimes Knoxville divergence, listen, I built it, but I'm not like I don't go to the church of Knoxville divergence. Knoxville divergence will often print before a stock is truly ready to reverse. Well, that's okay. Like, that's all right, that's fine. But it's an early warning sign, as I said before. And then we use the types of things that we like, candle patterns, Dionne Warwick's The Psychic Friend Network, or whatever method we like to use for actually timing the trade. But I have found a bullish candle pattern is a wonderful way to do it. Finding a bounce off of a monthly pivot or some kind of long-term support and resistance is a wonderful way to do it. But then we execute a buy trade. And then what I'd like to suggest that we do is we find the highest point in time where the divergence, we find the highest level that the stock went as it was printing the divergence. And we might, I'm going to use this word in quotation marks. We might guarantee in quotation marks that the stock is going to at least rise back up to that level. So if this were a daily chart, this trade would be open for 20 days. If this were a 15-minute chart, it would be open for 20 15-minute periods of time. If this were a 1-minute chart, it would be open for 20 minutes because this is 20 candles. So you can get an idea for how long would this trade be. You can do this if you're a short-term trader. You can do if this is you're a long-term trader. I'm agnostic about that. I don't really care. Here's an example of bearish divergence leading to bullish divergence. So when do you believe one versus the other? You tend to believe bearish divergence if you're looking at a garbage financial instrument. And a garbage financial instrument would be, for example, a company that doesn't have any cash flows, has multiple quarters in a row of negative earnings per share, or is demonstrably losing money. Cash flow is king. All companies, all good companies, okay, all bad companies fail for the same reason. All good companies succeed for many different reasons, but all bad companies fail because they run out of cash. That's it. You have enough cash, you can weather the storm and you can make it through. You run out of cash as a startup, we're about to see 10% of all venture-backed companies. We're about to see 10% of all venture-backed companies fail. We're in a 2-year cycle here where you are going to see companies you never even heard about them that have raised $300 million from Andreessen Horowitz. They're 10% of all the companies that have raised money are going to fail. The money's dried up, the interest rates have gone up, and it's just a cycle. So money-losing companies are the ones you look for bearish divergence on, and high-quality businesses that Warren Buffett would buy, Kraft Heinz, Altria Group, Coca-Cola, and so forth. High-quality companies or high-quality businesses that do produce cash flow, whether they're small businesses or large businesses, you trust, believe, and look for bullish divergence. So we short money-losing companies, or we buy puts on money-losing companies, and we buy or buy calls on or sell puts on money-making companies. And so that's the difference between the two. I never trust or look at bearish divergence on NVIDIA. I don't care to short NVIDIA. That seems to be a stupid idea. That would be stupid. I'm not in the business of shorting money-making companies or knowing better than them. I short companies that lose abhorrent amounts of money, and I buy companies that make money. As a side note, there are 20 times the number of companies that are losing money than there are companies that are high-quality companies. There are a very small universe of high-quality companies. Costco, Coca-Cola, Altria Group, Kraft Heinz, for some. NU, letter N as in Nancy, U is one of the fastest growing financial services companies in the world, with its primary base of operations in Latin America. They have millions of customers in Colombia and Brazil, and they are expanding. They are a non-traditional banking firm. Berkshire Hathaway for a long time had a stake in it. It's an $11 stock. It recently dropped. I bet whatever. You know, I bet it's showing some Knoxville divergence right now because it fell after earnings. So money-making company with positive earnings per share. Berkshire Hathaway even had a stake in it, although they've reduced their stakes in everything to get their $300 billion cash pile, blah, blah, blah. So we always look for buying puts on money-losing companies and buying calls on money-making companies, or whatever version of that you want. So once again, how do we get into the trade? So this is Knoxville, this is bearish Knoxville divergence. It says European dollar, Japanese yen, so the euro yen. I don't care what it is. This doesn't matter. It doesn't matter what this financial instrument is. A chart's a chart is a chart. The bearish divergence shows up, and you get a bearish candle that follows that. And you can see that there. Right after the red lines appear, a bearish candle appears. Now, there's a couple of different things that we could do here. Number one, we could draw a trend line underneath the Knoxville divergence. Number two, we could wait for a bearish pattern, a bearish engulfing homoji, right? A homoji, a hammer and a doji mixed together is a homoji sandwich. I don't know. I don't really know. Whatever. You know, whatever you want to do. I like trend line breaks a lot. I like trend line breaks with Knoxville divergence very much. I think it's a highly accurate way of trading a stock that comes out of divergence. I forgot to put the profit target on here, so please forgive me. So all in one here, you have the divergence, a nice bearish candle, and a trend line break. And this financial instrument then falls to the lowest level included inside of the divergence, which was the very beginning of the divergence itself. It's a high probability kind of a situation here. So in this instance, I would buy a put at the moment where it broke the trend line, or on the bearish candle, on the closing of the bearish candle. I would buy a put. I would use as a strike price, by the way, I would use the bottom. I would go an out of the money strike price. I would pay less. I like to pay as little as possible for so it's going to have a low delta. A lot of times I'll see I don't really know the way that you're supposed to talk about deltas, but I would pick like a 20 delta. So for every dollar the stock moves, we would expect a 20-cent move. All of your deltas will change rapidly when a stock falls quickly. So as a bear, you could buy out of the money options more easily as a bear, because the rate of change will rapidly happen and rapidly increase. What is the measure of delta? The rate at which the delta changes is the gamma, I think, right? And so the gamma will pump up, and then lots of good stuff happens. So as a short seller or as a buyer of puts, I will buy an out of the money option because it can increase in value faster than Black-Scholes thought it could. And those options are mispriced. Puts are often incredibly mispriced because no one, read the Black Swan, for example, or read Anti-Fragile. Catastrophes are often grossly underpriced. The possibility of catastrophe is rarely priced correctly. For example, insurance companies in California are not accurately pricing the cost of an earthquake. It's just not happening. I don't care how many actuaries they have. We don't accurately price the true cost of market catastrophes. That is why The Big Short as a movie even exists. It's because no one was correctly pricing the catastrophe. It just wasn't priced correctly. Oftentimes, because there are so many bulls and people are generally long biased and optimistic, call options are generally accurately priced, in my opinion. But because stocks will fall faster than they will rise, it's just not built into the formula. So there you go. I don't know. Sometimes Knoxville divergence happens across a very small number of candles. And I used to have a name for this, but for the life of me, I can't remember what I used to call it. But right here, I'm going to put a box here, and then I'm going to change the there, and then I'm going to draw another one over here. Knoxville divergence that stretches across a small number of candles. A 3 or 4 candle Knoxville divergence is shockingly, surprisingly more powerful than a long one. I don't really know why that is. I used to say things like, yeah, I don't know what I used to say. I don't remember anything I say. I don't remember. So I don't remember why. But I've made a quadrillion trades, and small divergences lead to more powerful reversals than long divergences. I can't remember why that is, but just something to note. This divergence here on a small one, in this instance, so I'm gonna draw some lines here. I would take the distance between the top of the divergence and the lowest point in the divergence, and I would double or triple the profit target. Meaning, instead of going to the lowest point in the divergence, I would go 2 or 3 times the size of the divergence. It's kind of a wonderful little trick. Doesn't work every single time. None of it's perfect, but you can see here, I drew some very crude boxes. I would suspect that if I had drawn this a little bit more intelligently, the bottom of this box right here, this third box, would actually touch the bottom of that candle. That wouldn't surprise me in the least. Now over here, I'm going to try to do a more accurate job. I'm going to try to be less stupid in the way that I draw this. So we're going to go from the top of that move to the bottom of the divergence. And we're going to see if we can get double the move. We can almost get that. We almost got it. That's pretty common. So a divergence that appears across 10 or fewer candles leads to a more substantial move in the opposite direction. John Bollinger once told me that sounds like vain name dropping, and it is. I saw John Bollinger one time at a conference, like one of the money shows or whatever, and the thing that he said that really appealed to me almost the most was low volatility leads to high volatility, and high volatility leads to low volatility. That seems pretty obvious if you've ever been in a relationship. And yeah, that seems true. So a shorter divergence packs a big punch. Pretty fun. Small divergence, big move. Let's see if this works again. Let's see here. Now hear this. So I'll grab one of these and I'll put it on here, and we're going to see if we can. So we go from the highest point of the divergence to the lowest point of the divergence, and we'll see if this is somewhat accurate or not. Okay, we got halfway into it. So it dropped, went about halfway in. Now, if you use a strike price of the lowest level, so let's say this is, I'm going to put some numbers on here. Thank you for bearing with me as I do this. Let's say that this is a $100 strike price, right here. This level right there. Let's say that level, that low is $100 a share. Let's say that up here at the top of the divergence is $125 a share. So when I pick a strike, I'm going to pick $100 a share. And then as it falls through this level, as a put, the put's going to gain in value as it goes through the strike. This is what happened on Carvana the other day. I bought the $220 Carvana middle of March puts, and it fell to $213. So it was $7 in the money. It went from being $40 out of the money to $7 in the money, and that was a nice win. And whatever. So even though it doesn't get to the bottom of the box here, you're going to find your option being worth more than you paid for it. This is a beautiful example of see if I can get one of these boxes. We're going to do this one more time, and then I'm going to stop drawing these stupid boxes in here. So we go to the top of this thing. There we go. We'll double up here. And we're getting to the middle. So in these two examples, we got to the middle of the second one. Choose a strike price down here at the bottom, goes into the money, and there you go. Here's an example of a Knoxville divergence that kind of works, kind of doesn't. Why does it kind of not work? It kind of doesn't work because it never really goes that far up. It never really doubles anything. It goes up to it reaches the level, the highest level at which the divergence, in the middle of the divergence, but it never goes any higher than that. I would suspect that you would see something like this on a terrible company that prints bullish Knoxville divergence, doesn't have any hope of ever really rising, but at least you could get out where you got in. Here's a great example. Here's a wonderful example of a Knoxville divergence that I would say in the past didn't work, quote unquote, didn't work. Why would I say that in the past? I would say that in the past because it didn't fall very far, or didn't fall in any significant way. Well, it did something. It fell to the lowest point that the stock had gone in the middle of the divergence. So Knoxville divergence isn't necessarily about extraordinary deep reversals in every case. Once again, as I discussed, this would be a great example of someone shorting NVIDIA. Not a great idea. It would fall to the lowest point in the middle of the divergence, but it's not going to fall much further than that. Quality companies don't tend to fall very far at all, especially during bull markets. Here's a good example of a short divergence. The shorter the divergence, the more powerful the reversal. That is a beautiful looking Knoxville divergence. I once got assigned Restoration Hardware after earnings. It fell from $275 a share to something like $220 in a heartbeat, in an instant. I was down, I don't know, $20,000 overnight. And then in rapid fashion, it not only jumped back up to $275, but it blew through those levels. I think to this day, it probably got into the 300s at some point. But at the bottom, it printed a wonderful 4 or 5 candle bullish Knoxville divergence. If there's a high quality company after earnings that gets hammered, Walmart, great example, Walmart's a great example. Walmart reported earnings. Walmart had a big decline, reported more revenue than ever. Walmart is one of the highest quality companies in the world. Walmart had a sudden reversal and a drop after earnings. Printed Knoxville divergence on a very short-term chart over a very small number of candles. It looked very much like this. It fell down to and at a level of support called a monthly pivot, and then it's been in reversal ever since. Actually, I got assigned Walmart at $97.50 after earnings. Today, that trade went back into profit. Actually sold the $99 calls against my position. I'm going to make $1.50 per share on that. I probably should have sold the 100s. Here's an example of a Knoxville divergence that doesn't work until it goes against you quite a bit. One of the things I like about using options is that I'm buying time. I don't need to worry about a stop loss because I'm buying time. My stop loss when I buy an option. So if you're out there buying options, you do it your own way, I'll do it my own way. But the way that I do it is, if I know that my max loss is $1,000, I will buy $1,000 worth of call options or put options. And then if they become worthless at expiration, I've lost $1,000. That's my stop. I might also just buy $500 worth. And then if it moves against me, I'll buy another 500. But the most I can lose is the amount of money that I put in. So I don't use margin, actually. I don't use margin. And if I buy an option, my stop loss is worthlessness, meaning I buy an option, And if it moves against me and expires worthless, it is the maximum amount of money that I would have had as a stop. Now, the reason I do that is because I want to buy time. When you have a stop loss, you are investing in accuracy, right? Your main concern is how accurate you were in the place at which you bought or sold the financial instrument to enter the trade. Well, that seems kind of effed up to me because I'm terrible at that. And I've never met a trader on the planet that didn't watch almost every single trade they took move against them at least a little bit. So when I do options trading, what I will do is I will simply buy an option and risk losing the entire value of the option, and that entire value will be the same number that I would stop out at anyway. And that way, if it becomes worthless, that's fine. Along the way, if I buy an option for $1 and it goes down to 1 penny of value, and then it corrects and moves in my favor, I didn't have to stop out. I got 2 extra weeks sitting on this thing because the most I could lose was the money that I put into the trade. Here's another example. Some companies are better suited for buying calls than buying puts. Some companies are the kinds of companies you want to invest in buying, and some companies are the ones you want to short. This is Apple. Apple tends to go up after dropping. Not all the time, but it tends to. I mean, especially in a bull market. So you would, in this case, you would do the buy trade on the left, the green, bullish Knoxville divergence, and you would skip the bearish trade on the right. This is Tesla from 2018. This is Tesla in 2018 at $245 a share. I bet that in today's dollar adjusted for splits, this was like $20 a share. Can you imagine that? Yeah, that'd be amazing. That would be amazing. So back in these days, 2018, I'm not sure anybody thought Tesla was that great of a, I don't remember really, actually. But remember, there was a time when everybody thought Tesla was probably going to go out of business, including Michael Burry of The Big Short. He lost a lot of money shorting Tesla, including Bill Gates. He lost a lot of money shorting Tesla. And then Elon made that emoji of Bill Gates with the big belly. Yeah, that was pretty funny. This is Groupon. What a weird looking Knoxville divergence. So what happens if your Knoxville divergence looks weird? Usually your Knoxville divergence will look odd on a stock you shouldn't be trading anyway. Groupon is one of those companies. Does Groupon go up or down? Nobody knows. Nobody knows. Nobody has any idea. Is GameStop supposed to go up or down? Nobody really knows. GameStop should go down because it's not really a super high quality business, but GameStop usually goes up because it's got an army of people who love it. If you see price dipping into and doing weird SHXXXXT, if you see it doing weird stuff, just skip it. This is a skip. This is a what? Who? None of that makes any sense to me. This is Google. Google's Knoxville divergence. Listen, Google's the only company I ever heard Warren Buffett say. It's the only company I ever heard him say, I wish I had bought Google. I never heard that man express any kind of regret about anything. God, I love Warren Buffett. I just finished reading some of his 1965, 66, and 67 partnership annual letters. I read the 2024 annual letter recently, and then I went back and read the ones from the 60s and compared the two. Fascinating. Then I read Jeff Bezos's 1997 day one annual letter to shareholders, and then I read his just randomly 2016, and remarkably consistent. I honor that. So this is Google. Now, you buying puts or shorting Google, you're a maniac. So people who call me a maniac for short selling stocks, I'm like, I'm crazy, but it's not because I'm a short seller. That's not the reason I'm crazy. So Google, you don't short Google. It's Comcast. You don't short a utility. You don't short utilities. You don't do it. You don't short a, especially now in an inflationary environment, buy utility stocks. Berkshire Hathaway has an entire division of the company. It's called Berkshire Utilities or whatever. The one thing that's not going to change even in a recession or a depression or in a cyclical downturn, people are going to turn on their power. People are going to buy electricity from the electric company. So, hey, you guys, this is Amgen. Amgen's a middle ground right now. So Amgen or Pfizer or Merck or Gilead Sciences, these are all pharmaceutical companies in a very uncertain environment. So we have RFK Jr. in charge of Health and Human Services. So he's sort of skeptical of the claims made by pharmaceutical companies. Correct? Are we good on that? Right? For better or for worse? He wants a healthier America, make America healthy again. Great. So we're in an environment where, maybe there's some selling pressure on these companies. That's fair enough. And then maybe these companies that make a lot of money anyway, maybe there's some buying pressure. I have mixed feelings about pharmaceuticals right now. So I wouldn't trade any divergences on pharmaceuticals with one primary exception. I think you and I, and let me take you aside and speak to you directly, whoever you are, I would consider asking ChatGPT or Google's deep research. I would consider spending some time tonight and asking ChatGPT or Google deep research or your favorite whatever. Ask them what are the publicly traded companies on U.S. stock exchanges that have or have developed or are in the process of developing bird flu vaccines. All right, so I'm not a conspiracy theorist. I'm a human being that knows if it can happen, it probably will happen. And you can be ready for it or not. There's two ways you need to be ready for bird flu. One, don't raise chickens. Just kidding. One way you can be ready for bird flu is get some Tamiflu. Get some Tamiflu. Get it for your family. It's hard to get. You can go down to Mexico or whatever, but get some Tamiflu. Like, be prepared. Be a Boy Scout about it. Be prepared. Don't be caught off guard. Number two, maybe on a Knoxville divergence on a daily chart or a 4-hour chart. Buy a bird flu vaccine publicly traded company. Buy some shares. Don't go all in. It's not a lottery ticket. Buy some of that stuff. Get some of that. There's two ways to be prepared. And I think both of them make a lot of sense. But the one thing you don't want to do is ignore it. Don't swing all the way to the right and think that the pharmaceutical companies are going out of business and they're going to outlaw pharmaceutical advertising. Don't be an extremist. You're welcome to your opinions and I love you no matter what. And then don't go swinging all the way over to the left and believe that everybody ought to wear a mask all the time and we all ought to take every shot they tell us to take. Just be in the middle. Be in the middle. Just be in the middle and then vote for whoever has your opinions, but don't, because when you go on the extremes in financial stuff, you end up losing money because it's never as bad or as good as you thought it was going to be. But get some insurance. Buy some insurance. It's Qualcomm. The other day when Bill Ackman wants to buy Howard Hughes Company, I thought Bill Ackman was going to buy Intel. And I think someone's going to buy Intel. I think the US government's going to back it. And I think so. In his 2016 annual letter, Jeff Bezos said, look for emerging trends. One of the emerging trends is everything's using microchips. And one of the other emerging trends is people who make microchips in the United States of America are going to get favorable treatment, and we can't get out of that. Intel is the shell of Intel as a shell, problems and all. There are incredibly valuable assets there. There's incredible value in those assets. And someone's going to buy Intel. Someone's going to come along and rescue Intel. I don't think they're going to sell the manufacturing facilities to Taiwan Semiconductor. I think that was a rumor spread to drum up interest. I think that they do what everybody else does. Hey, when they show you a house, they say, well, we got another buyer that looked at it. I'm like, oh my, if anybody ever tells you that again, you go to the car dealer and they go, oh, well, somebody looked at this car earlier today. Here's what you do. You put your hands up in the air like this and you go, oh gosh, I wouldn't want to take it away from them. You know what? Just give me a call and then walk off the lot. There never was another person. And if there was, good, let them have it. There's always something of equal or equivalent value. The smallest divergences lead to the biggest reversals, even on something like Bank of America. I wouldn't have traded this a year ago, but would I short banking stock now? Yes. Here's why. And this is my final thought before we do some Q&A. My final thought before we do some Q&A is banking is about to change dramatically. In the old world, meaning last year or the year before, if a company needed to raise a substantial amount of money, they would go to JP Morgan and they would say, we need to raise $1 billion. And JP Morgan would say, great, as your banker, I will assemble the necessary parties, assemble the loan, and we will take a cut. We will assemble the financing for you and we'll take a cut. All of a sudden, last year, Citadel and BlackRock and everybody said, oh, you need $1 billion? We will write you the check this afternoon. Private equity financing. Banks are going to get crowded out. The traditional banks, the big ones even, they're going to have some major pressure. So some very lucrative lines of business that banks used to have are now moving over to private equity and other companies that have giant amounts of capital on their books and they can write the checks more quickly. Jamie Dimon announced that they were going to just start a private equity lending division itself, so JP Morgan doesn't get left out. Okay, I could blabber about all that stuff all day long. I would love, listen, as we get into questions, I do have a free course. This is the link. We can plug that into the chat box, take it or leave it. It's free. There's no upsell. There's no credit card form, nothing. You just take the course. It's a course about short selling. It works. It works so well, I'd love to teach it to you for free. Nothing would make me happier than to hear that you're making some money from short selling stocks. Don't share it with too many friends because I don't want the competition. And it is a type of business where at the most I can make between $50,000 and $100,000 a month at the most. Kind of caps out there. Let's see where it caps out. As a matter of fact, before we move on, let's see where it caps out. In the last month, made 39,000. Last 3 months, 139,000. Last year, about 258. On no margin, in between an average of $400,000 in capital. Well, that's not entirely accurate. A lot of that money was made with a $70,000 account, so I don't know what the numbers are. I don't know. But I don't know. Okay. Do we have some questions, comments, jokes?
Lots of questions. Not very many jokes though.
What's that?
We do have lots of questions. I don't see any jokes though.
Okay, well, we'll leave out the jokes then. All right.
I've got one for you if you want.
Sure.
Are you a fan of Star Wars?
Yes.
Why did Han Solo not like his steak?
Why?
It was chewy.
That's terrible. It's a pun and a joke and terrible. I love it.
Kay wants to know how can you find shorts on the cheap stocks?
Oh, how do you find shorts on the cheap stocks?
I was going to say scanning, but
yes.
You might have a different answer.
Yeah, I paid. So check this out. I'm gonna do this as quickly as I can, and anytime you want me to come back, I'm happy to. I built together with a programmer. I built John Norris, military programmer turned private contractor, built me a scanner that looks at every stock in the universe and watches for them to jump and then tells me how much money they have left. So I built a private scanning tool. If you want to build one of these for yourself, everybody who has any modicum of interest in programming, go to replit.com. And then you say this, you just go here. It's crazy. And this is worth me delaying another question just for a moment. It's worth it because this blew my mind. What do you want to make today? I have a Polygon IO stock data subscription, which I do, and I would like to build a scanner that looks for companies that are jumping more than 50% and are money losing companies. Now, you can be even more descriptive. You press create, and this will program the whole thing and deploy it. It will also deploy it. You're not uploading code or getting an Amazon AWS server or anything. Absolutely. Let me propose what we'll build for you. And then I approve the plan and start, and watch this. Just watch this. It's crazy. So as we're doing this, Jeffrey, if there's any other questions, let me know.
Yeah. Victor says he's gone through your free course. Is it still the way, and he, thank you, is what he said. Is it still the way you actually trade today?
For the most part, yes. The only difference is, Victor, what I'm looking for when I execute a short now is I execute a short as a stock is coming out of overbought on RSI, or the MACD line is crossing the signal line downward, and then I get into the trade, Victor, before it falls through the volume weighted average price. It's an earlier entry now. I'm taking earlier entries and grabbing more profit, to answer your question.
Ron wants to know, how do you measure the momentum? What indicators are you using?
Actually, the momentum indicator.
That's what I thought. That seems like it's a logical approach. It says, thank you for your presentation. You have a very easy and confident delivery. I was a bit scared about short selling, but you gave a good perspective. I will look at your course and would like to buy, look forward to buy one of your books, since I typically comfortable swing equities.
Cool. I'm writing a new book, The Tao of Short Selling. So I'm writing a new book. It's in the process now. So wait for that to come out. Don't buy any other book I ever wrote.
Okay, there you go. Let's see. That was a very worded question. Do you currently run the trade copier, or would you plan to bring it back in the future?
No, I'm gonna disappear from public life again, except for Metastock webinars. I'm not joking. Like, I really enjoy my private life. I don't need any of your money. I don't need anybody's money. I enjoy doing this. I really appreciate you, Jeffrey. You've been the most honest person in this industry for a long, long time, and I don't speak anywhere else. So I really mean that, and I really appreciate you.
Awesome. I appreciate you too. And I'm going to write that down.
Write that down.
Let's see. Rob, for your lifetime members, would you ever consider sending out a trade alert? I think we just answered that.
Yeah, I would consider doing it for free at some point in time. Yeah, I would consider it for those people that spent money in the past. Yeah, I would consider that.
Would you move from Trade Zero to Cobra in your short selling?
I do both. I have the Trade Zero account that you saw here, and then I have a Cobra as well. I like both. I'm very close to Dan from Trade Zero, who's one of the founders, and Chad, one of the founders of Cobra. They've both been really wonderful to our short sellers in our family. Cobra is only for people who have trading accounts of over $27,000, so it's not a fit for someone with a day trading account.
Tracy says, thank you for your time and your free course. I got it. My chat box doesn't work. Where do I type? You found it, Tracy. We can see it. William wants to know, would you short BAC right now?
I can't answer that. I don't know.
Okay. From YouTube, thank you for the free course, Rob, Ray says. Jeff says, thank you, Rob. I always love listening and learning from you. I'm in the process of scaling up sizing after finding consistency in short selling. Thank you for all of your teachings.
You're welcome.
Satesh says, sir, I find accumulation distribution a bit lagging in the options game of time. Is there a way that, do you have any suggestions around that?
No, but the next time I come, I will be prepared to offer some suggestions.
All right. And then let's see. Kate says, I'm a lifetime member and I would love a free trade in the future. Thanks for all you have taught me.
You bet. I'll work on that. 2 people is enough. Yeah, for those of you that have invested in the past, I've got some special stuff coming. So
right on. That's it. I've come to the end of the questions. Rob, always a great job. I appreciate you more than you appreciate me. It's a game I play with my kids too. But thanks for coming in.
All right, man. Thank you. Thanks, everybody. Have a wonderful evening.
All right. Thank you, Rob.
Okay. Bye for now.
Yeah, goodbye. All right. We'll just kind of wrap up from there. Let me go ahead and show my screen. Let me go ahead and do this as well. We did, Rob did show kind of a product that we did develop with him and we still market, and it's very inexpensive, as you might imagine. And he was showing it throughout the whole thing. It marks up the divergences. It shows you where they're at. It has a scanner that's easily deployed into Metastock. And I believe, although I could be wrong, that it's exclusive to Metastock. And so it does include the exploration, the ability to go in and scan and find those opportunities to go short, the expert advisor to kind of give you the advice and all those really good things that we have in Metastock. Normally it's just 99 bucks. As part of the conference, you can get it for 50 bucks. It does have a 30-day money back guarantee. We'll also throw in a free trial to Metastock, which is worth 50 bucks right there. So you can go to metastock.com/conf promo to do that. You can call us at 800-882-3040, or you can go to metastock.com/saleschat. And if I'd recommend it. If you haven't, I hope you've had some good chance to look at some of the things we offer. We've had some really great guests so far, some really cool stuff between the Victory, the Jake Bernstein's add-on, the 3S code that we just looked at. There's some really phenomenal products that are available for Metastock, and all of them are backed with a money-back guarantee. So if you have any questions, if you want to get one of those, give us a call, 800-882-3040, metastock.com/saleschat, or metastock.com/conf promo. Before we go, I want to say thank you to all the speakers that spoke today. And I want to thank all of our sponsors, although they're not in the right order. We're going to go back here a little bit. I want to say thank you to AAII.com, sponsor of the event, great nonprofit. Stocks and Commodities Magazine. I've been getting this magazine for, I guess it's 28 years now. Great magazine, great company to work for. We really are with. Really appreciate them. www.traders.com. If you haven't yet, go join the Traders Forum. It's completely free. There's a lot of really good lessons. We go through indicators. We talk about trading strategies, candlestick patterns. This last week, I did a little session on Dow theory. We talked about Charles Dow and how he kind of invented the Dow and the 6 major principles behind the Dow theory. TheTradersForum.com. I'd love to see you in there. And of course, we're Metastock. Metastock, been rated #1 32 years in a row. Sign up for a trial. Find out why. Metastock.com/conf promo, 800-882-3040, metastock.com/saleschat. I want to say thank you for coming in today. Thank you for spending some time with us. These events are awesome, and really, they're awesome because you come. If nobody was here, we'd just be kind of talking to the air, right? So I appreciate your being here. I hope you learned something. My biggest goal is to get you to learn something and learn a little bit about the markets and bring in some ideas. My second biggest goal is to get you to try Metastock because I think it's going to be extremely helpful for you. So I hope it was enjoyable. I hope it was worthwhile for you. I'll see you again tomorrow. We're going to kick off with a good buddy of mine, Rahul Mohindar. Anyway, thanks for coming here. Thanks for being here. See you again tomorrow for day 3. Yogs asks, do you get access to the conference? Yes, youtube.com/Metastock. They're all up there. You can go watch another 8 hours right now if you want to, Yogs. Same thing, Benjamin. Is this recorded? youtube.com/Metastock. If you're, all 6 days are going to be up there. Only thing, the recordings are free, unlike some of the other events where they want to charge you for the recordings. The only thing I ask is if you enjoy them, if you like the events, if you're watching on YouTube, give us a like. give us a subscribe. We do all kinds of events like this, and those likes and subscribes help a great deal, and I appreciate them. So there you go. Tracy says, thank you guys. This has been great information. Got meetings in the morning, but I'll tune in the afternoon. We'll see you tomorrow, Tracy. Thank you guys. Have a good afternoon, and I will see you bright and early tomorrow.